Good morning, good afternoon, good evening. Welcome back. How was your weekend? Well, we'd like to welcome you to TopstepTV for opening call. Congratulations. Yes, you're at the right place at the right time. We've got an exciting, informative, and educational programming for you today. And throughout the week, we will be bringing you lots of trading information. We'll also be your trading buddy, your trading mentor, your newscaster, your fellow trader, and even sometimes that good neighbor that cuts your grass. So get ready for some top-notch, up-to-date market and trading knowledge with our opening call and our good friend, John Hoagland. Good morning, John.
Good morning, and good morning, everybody. Yeah, today is Monday, September the 11th. Very solemn ceremony going on in New York right now. We just have to make sure and never forget what happened that day 22 years ago. And as far as the Topstep, for the opening call here, as always, our focus is on context, risk management, and patience. Hope everybody had a good weekend. If you're already in the markets, hopefully you've got things already going your way. What you got in the news for us, Eddie?
Well, yes, I was going to bring up that, yes, today is September 11th, 9/11, a day we'll never forget. And a little later on Squawk Radio in the afternoon, we're going to be talking about the experience we had on that. But some of the news that's coming out today, one of the bigger ones, at least for me, Smucker's buys Hostess for $5.6 billion. So we'll see if that can, Smucker's and Hostess, boy, that's a good combination. Apple recovering up slightly, up 2.33%. I believe it's around 180.51 right now. Global shares today also rose in part of the burst of risk appetite. The yen jumping the most against the dollar, the biggest in about 2 months, ahead of the Bank of Japan saying that they're going to shift away from negative interest rates. Inflation, U.S. inflation is due Wednesday. Economics polled by Reuters said that we're looking at about a 3.6% raise from last year, July's 3.2 readings. Also, investors are pricing in the 93% probability that the Feds will leave rates unchanged at this next week's convene. But the outcome for November is still, at least my bookie tells me, we're back to about a 50-50. So, John, what do you got here for our economic numbers today?
Well, as far as economic numbers today, there's really nothing impactful out there. There's a couple of small month auctions, 3, 6, 3-year note auction. That's about it as far as economic numbers today. But throughout the week, it gets a little bit more impactful. A lot of folks are anticipating the CPI numbers on Wednesday. Of course, they see EIA petroleum status report also on Wednesday. Thursday, jobless claims and the PPI numbers, some inflationary numbers coming out on Wednesday and Thursday. Retail sales also on Thursday. Business inventories, EIA natural gas report as usual on Thursdays. We've got our EIA numbers on the right days this week because of no holiday here on Monday. And then Friday, the industrial production comes out. We also have Empire and State Manufacturing Index, import-export prices, and consumer sentiment, the Michigan consumer sentiment on Friday. And of course, we all know we are anticipating a week from this coming Wednesday, the FOMC meeting. So a lot of folks focusing on that. We are going to be trading the December contract in the equities today. The S&Ps, NASDAQ, Dow, Russell, all of them, more volume in the December contract. So make sure you move over to the December contract this morning. And as far as the VIX is up a little bit this morning, 14.17, about 2.3% last I checked here. The dollar index a little bit lower, 104.66, back down below that 105 level we reached last week. And the yield on the 10-year note, 4.28% as we speak, up just slightly on the day so far. So again, not a lot of impactful economic information. Equities in the throes of rollover. Keep that in mind in your activities today.
All right. And don't forget, the code for December is Z. So you're going to have that Z code representing the December markets. Also, John, U.S. future stocks are up between 0.4%, 0.5%. Copper, we got any copper traders out there? Because the signs of stabilization in China the economy pushed up the price of copper, and copper rose 1.3% to 8,353 a ton. Now, what's a ton? It's about 1,000 kilograms or 2,204 pounds. And while the Brent crude futures dipped 0.4% on the day, but held below the 90 barrel. Another thing, too, here, we talk about 9/11. Let's keep our thoughts and prayers to our friends in Morocco with that earthquake that have taken over 2,000 lives. So it's 6.8 magnitude that hit Morocco. So lots going on. Be happy where you are. Be thankful for what you have, because I know I am. So, John, let's get ready for business. Let's take it over to the ES and our daily.
Yeah, well, it being Monday, I usually like to start a little bit even further out than that, Eddie. Looking at the monthly chart here, the December monthly so far, September, and inside month so far, we maybe a third of the way through, smaller range, inside day. Markets are seeking new data. Take a look at the weekly chart now. To the weekly, again, inside of the previous week, last week, so far this week, only here on Monday, we're inside last week's. We are showing signs of range-bound activity, which makes sense to me for rollover. We're just going to be managing risk today. Now on to the daily chart. Here we go. Oh, hang on. All right. So last week's low, last week's high in purple. Where are we? We're right in the middle of it. We've got weekly kickoff high 45.60, low 44.40. We got some space around us to kind of jimmy around here before changing any major market state type situation. Take a look at the 30-minute chart now. Oh, hang on. Let's scale this. So we've got some overnight inventory to the long side. What does that mean? It means that last night when we opened up down here. We're currently trading at higher levels. The volume was actually pretty decent in the London session last night. So we're probably maybe seeing a little bit more than just shorter time frame buyers coming into this market. Look at what we've done for the last two sessions. Here was last week's low. Since that low, which wasn't a very strong low, I mean, it was a lot of attempts to continue the market to move down through that level, was unable to do so. We've been putting up higher highs and higher lows. The opening, we're going to be opening with some overnight inventory to the long side, and we will be using gap rules. Gap rules means if we do not close the gap to the regular trading hour session range from Friday, we're going to be looking for opportunities to buy weakness in this market. If we can't close the gap relatively early, I know that's a subjective term, we're going to be looking for, again, those opportunities for the market to continue this move to the upside from the overnight activity. So we are, at least we've got a couple of nuances that are saying, at least in the short time frame, and I believe we are more in short time frame control than anything longer time frame. I mean, we added 68,000 in open interest on Friday, but that was a function of rollover. So we can't find directional activity during rollover in open interest and in volume. Volume is so split between the front month and the December month. Again, we should be trading the December month today. The volume is higher, but we're still in rollover. We've got quadruple witching on Friday, expiration on Friday. So we're just going to be trading what we see, and what I'm seeing. I think my favorite nuance this morning is the fact that we have a gap. If we can't close the gap relatively early, I'll look for continuation to the upside. We've got a naked volume point of control up here around 45.57-ish. That area up near our weekly kickoff high, that is easily a really good visual target for traders to try and bring price to.
So, Johnny, I tell you, the market's here. We're just last week of expiration. The closest thing we've got that is very important is the CPI on Wednesday. Coming into today's trade, do we see anything that can sort of give us a little boost on which way we're going?
Well, like we mentioned, we are opening with a gap above Friday's range with high probability. We've got some of our tech companies already really looking pretty rosy to the upside in pre-opening. We also I noticed that Hostess had a nice boost today. Apparently Smucker's bought Hostess, so we've got a nice boost in that as well. But as far as what I'm seeing on the charts here, like I said, my favorite nuance is the fact we're opening with a gap. If we can't close that gap relatively early, I'll be looking for opportunities to buy weakness for a move potentially up to this naked point of control and our weekly kickoff high, 45.60.
Okay.
All right.
Coming off the YouTube charts, yes, we are in rollover. December is our trading contract for those just logging in.
December. We should be trading December.
Yes.
Right. So this is the December NASDAQ. Starting with the monthly on Mondays, we'd like to get the big look, the big overhead look here. Here we are. So we are.
If you're seeing different prices, you're in September.
Yeah, if you're looking at this September, you're going to be looking at different prices. Remember, the volume is in the December. It has already moved into the December month, so we're going to be trading December today, and moving forward for the next through 2 2/3 months till the next rollover. It'll be
real quick
before that.
Trade the volume. Watch your volume. Put your quote board up. It's going to tell you when we're going to basically switch over. So when you see the volume switch to the front month, the back month, the more volume, trade the volume.
Right. You want that liquidity. You want to trade where more traders are trading, right?
Right.
All right. So this is the monthly. We've had a pretty deep pullback in the NASDAQ, deeper so than the S&Ps. But in September, we're still in an inside month. We've got our weekly kickoff high here, relatively close to where we are. Let's go to the weekly chart. We always want to go way out there and then hone our way in on Mondays. So similar to the S&Ps, it was an inside week last week. So far this week, still an inside week. So the market is in rollover. It is seeking new information, and range bound trade in the longer time frame would probably be the strategy that I would be looking for on the daily. Last week's high in purple, weekly kickoff high 15,720. That's these weekly kickoff levels are areas that I believe longer time frame traders will be closer to being forced into adjusting inventory. We saw some pretty decent trades off that in the in crude oil yesterday, and we'll look at that shortly. So the daily, I mean, in medium time frame, we're putting in higher highs, higher lows. The 30-minute chart here, we added 3,500 in open interest on Friday. Again, probably more a function of rollover than anything else. Overnight inventory, we've got a lot of longs. Again, opening with a gap above Friday's regular trading hour session indicates potential acceptance of higher pricing and possible continuation. So we've got gap rules again. I'm going to be thinking, all right, if we can't close this gap relatively early, that again is a subjective term, then we're going to be looking for opportunities to continue this move to the upside, maybe get close to weekly kickoff high for possibly a bigger opportunity. Volume, it's going to be really low because this is the December contract, but it is going to be certainly increasing. You can see how the volume has already jumped last Friday. It's going to jump even more today as more and more traders get their activities pushed into the December contract. Now let's take a look at crude oil, Eddie, and see where we're at as far as that weekly kickoff level. This is the daily chart. We see that we've come up to this level, going a little bit further out, starting with...
What is that level, John? Can you briefly share that with us?
Pardon?
Can you tell us what that level is? 80
weekly kickoff, $88, same as last week.
Okay. All right.
All right. So here's the monthly. So far, we've got our fourth straight up month. We are up against an important inflection level that has not provided the inclusion of longer time frame traders here just yet. Take a look at the weekly chart. Here's the weekly, just to kind of get a look at the bigger picture. We've got a potential move up to about $99 if we can take out that weekly kickoff high. We've got this low to this high. You measure from this low to the next high, it's up around $99. So if we do bring in buyers above this important weekly kickoff level, that is the measured move that I would be looking for. I don't always get what I'm looking for. As a matter of fact, the market loves to make a liar out of me, but that is the eventual target that I would look for if we bring in new buyers, if we get the next leg to the upside off that weekly chart. Now we're on the daily chart. 1, 2, 3, fourth day in balance. Now crude oil is coming into its monthly rollover. So we're going to be, a little bit blurry as far as volume and open interest is concerned. On Friday, we only added 600 in open interest. That tells me that we're not seeing the longer time frame participants that we would look for at these important levels. They have not made any decision yet, and the fact that it's coming into rollover, I think, is going to make it even more difficult for them to make that decision. They're working on moving their contract months from the current front month to the next contract month. It would be, we're in October now, it'll be November, which is X, but we're not there just yet. All right, here's the 30-minute chart. Here we go. You got to get it to scale here. Hang on just a second. And there we go. So there's last Friday's range. Last week, $88, 88.08. 88, what was the high here? 87.95. It's been a real pickle to try and get price to move up against that area. So that offers us opportunity. Market just opened. We're already seeing buyers coming into this market. We're already seeing the it looks like probably the opening range is the low of the session, which has me looking for longs until we get up to this previous area of rejection. What I'll be looking for is, do we get new business above, or do we get up above here and fail again and start to rotate back to the low of the current balance area, which the current area of short time frame balance that I'm seeing is $88 to $86, 88 to 86. Those would be my focus for some of my bigger trades if I was going to be trading crude oil today. And we're going to have to see if we get that opportunity. Looking forward to seeing what Dan So Crude has to say about this market later on today.
Right. All right. And what do we've got here? Lastly, gold. Gold bugs. Gold.
Starting with the monthly, we got to get the bigger picture. Okay. Well, we've been in this area here for quite a long time. When we take a look at $2,000, every time this market has gone above it, it has been rejected. Now, again, remember, this is a monthly chart. This is some pretty long-term rejection up there. What are we looking at on the weekly chart? Okay, this is all those areas of rejection on the monthly chart. This market is continuing to coil. It is continuing to just kind of show lower highs, higher lows. It's coming to a point where there has to be some sort of change that's coming. We actually lost 6,000 in open interest on Friday. Here's the daily. So here we go. Now we're getting a really closer picture of how this market is coiling. Higher lows, lower highs. This market gets closer to the apex of these lines converging. something is likely to happen. A change is likely to happen. We've been seeing kind of a moving average of volume just going slower and slower, getting lower and lower. This market is not taking advantage of its ability to facilitate trade. So that's what makes me think that some sort of change is coming. Direction unknown, date unknown, time unknown. But I'm monitoring these trend lines for a potential big move once the market accepts outside of them, unless it only accepts outside of them through attrition. So we've got weekly kickoff high, 1965. 1938 is the weekly kickoff low. We've got last week's high here, actually above weekly kickoff high. So this whole zone up here is going to be somewhat resistant. We've got the trend line here. This zone down here where we're currently at has shown some support, and it has shown support last night. Take a look at this on the 30-minute chart. All right, so there's our support zone, last week's low, weekly kickoff low, overnight inventory. We've got some longs. Those longs are continuing for now to get paid. Overnight high looks like a very interesting spot. If I were going to be looking for an opportunity, if we accept above it, the move would be to weekly kickoff high. If we break out above it and fail, we may just come back into rotation. Look at the moving averages. They're very close together. The market hasn't moved very much. So until the market gets out of its current funk that it's in, I'm going to be looking for range-bound opportunities. And those range-bound opportunities are going to be provided until we get some longer time frame participation by short time frame levels. Look for short time frame levels. In the day time frames, look for some sort of structure to form at those levels so you can limit your risk on your opportunities. What do you think of that, Eddie?
Well, you know what? I'm watching. I'm liking Crude here. I like your level at $88. I know that some of it has to do with what China's doing, trying to stabilize it. We might see that 88. We might see that 90. As far as the ES and the NASDAQ goes, I'm sitting back right now. It's Monday. There's really nothing to at least give me an incentive to put a trade on right now. But I like the way the NASDAQ, haven't traded NASDAQ in a while, but I like the way NASDAQ's moving here right now. A little different. We do see that. So maybe there's some opportunity a little later, at least for me.
Yeah. Well, being rollover, I always got to remember it's rollover. And I've been kind of beaten up by rollovers like the Bears were by the Packers.
So they lost? No, wait a minute. Wait, what? They didn't
I'm going to be cautious about that.
They didn't lose. Oh, Fred reminded us that they did, didn't they?
Yeah.
He's pouring lemon juice and salt in our open cuts. And he's trying he's looking in the cabinet to see if there's anything else he can pour in there.
Well, it was a kind of an embarrassing game, but it's the first one of the season. We'll have to see how things play out, right?
Yes, indeed. But, well, my friends, we've got a couple minutes here. Let's get ready for some fast market coming up. We've got a lot going on today. And just want to let you know that you are invited to stick around. We will be having fast market with Michael Patak. Danny's going to come in for So Crude. Shoulder tap with Brett today. We're going to have talk shop with Andre. Don't forget the quiz. And I wonder if we got some new prizes this week. Something a little different, but Jack's going to do the quiz. Stick around this afternoon for Squawk Radio. And we've got Coach's Corners. And, of course, to end the day, turn those machines back on. But the Triple H Hour, Horn and Hoag, that's going to be this afternoon. I think we're going to sort of touch base on how the market happened on 9/11. What happened? I mean, I was on the trading floor. John was off the trading floor. We're going to get two aspects of what happened on that day. So stick around for that. All right. So we'll be back here in a couple of minutes for a coffee break. And John, breathe. All right. We'll be right back.
Does everybody know what time it is?
Yes, I hope you do. It's time for Fast Market. And of course, we've got Michael Patak and John Hoagland. They're going to be sharing their screens here, their trading platforms, and yes, hopefully putting on trades if there is an opportunity. So whether it be right or wrong, we're going to be moving forward. Guys, lock and load. Here we go.
Lock and load here. Roll week. Follow the volume, everybody. What does that mean? Whichever month has more volume. Right now, December has more volume than September. By about 1,000. Right?
Yeah, and it's going to accelerate throughout the day today, and then of course throughout the week as we get closer to expiration.
Yes, sir. So, John, I tuned in for your opening call. You and Eddie, great stuff. Took notes again. Love taking notes when you guys talk. Possible buy weakness. That's what I heard on the S&P.
Yeah. If we open with a gap and can't close the gap relatively early, it is a subjective term. We look for opportunities for this market to continue.
All right, we'll talk about that here in a second, but we got the open. All
right, let's get our horses lined up in the gate. We've got inside a minute here. That was a good one, John.
Thank you. Yeah, I have lots of useful talents.
I can't do a horse.
It's cold here, guys. It's cold in Colorado.
You're hoping it's. I mean, you probably go skiing tomorrow if you could.
Well, I mean, I was wearing this prior, so I might keep that on right out of the gate. But
really cold. What's the temperature out there?
Like 48.
Really?
But then it'll turn into like, oh, here we go.
All right,
we're on.
And there's the bell, and we are off and spinning out of the turn.
You know, John, out of the gate, I did some trades out of the gate last week and put myself into a little bit of a hole. So I am taking a Monday, and I'm taking a roll. I'm taking all that information, and I'm going to be a little patient here, a little more patient, I should say. You carved up the markets fairly well last week, which was inspirational, and you weren't trading out of the gate either. So I think I'm going to pump brakes a little.
Yeah.
Hey, Mike.
Especially during rollover, man. Rollover stuff.
Yes, sir. Eddie?
Michael, can you turn your mic up just a little bit?
Hot city. How am I not right now? Am I hot city?
No, turn it up a little bit. Yeah, thank you.
There we go. Maybe I just need to speak up.
Thank you, sir.
So, it's not a very aggressive open. The opening range so far is pretty small. I may just take it for giggles.
Yeah, right. Hey, the tilt. The tilt, as I talked about before, is a bias indicator that we have here at Topstep that we're looking to see how we're going to share it with all of you. But I'll be updating all of you on all the folks that have open positions here at Topstep, thousands of folks that are trading. Right now, we're seeing 70%, literally 70% of NASDAQ and 70% of S&P are on the long side, starting off the day a little on the long side. So a little heavy on longs, 63%, Eddie, on you and Danny. So Crude's Crude on the long side.
Okay.
So nothing spectacular. And we talked about it last week. This is usually where I take my vacation week when I was very actively trading. Now we're very actively funding and backing traders. So I'm more conscious about all the things that's happening here at Topstep. But it was just me, myself, and I in the markets as a local in the trading pit. This is vacation week. This is John's busy week, wouldn't it be?
One of them, yeah. If I was working in the back months, for sure.
Yeah, this was a good week when you were filling traders' pockets with money.
Yeah.
It was like, you remember if we do the spread, and my guys at Deutsche Bank would say, you know what, give them the better price. You know, they want everything at one price.
Oh,
so
yeah,
I'd go around and tell everybody, hey, you got a better price on the 200 you just did. You got a better price on, which was pretty cool. You know, they wanted one price. Sometimes the fills were split, different prices, and they would always say that. So that was good. But
I benefit.
I am long, guys.
Okay, you're long. I like this, John. Only 65,
45, 40, 75. because it took out the high of the opening range. The opening range is it's less than 3 points. So there's very low risk on this. It's almost a cheap trade. So I took it. We're sitting a little bit in profit right now.
What are you at, 40.75?
Yes.
47.
Well, Johnny, we hit your $88, and we're pulling back a little bit now in the crude.
In crude now? Let's take a look.
We punched a hole through it, and I think we're right now we're looking at 87.91. So
man, we're pushing on these highs right now.
It just keeps. It keeps failing up at that level. Amazing.
Which level?
$88 a week.
88 even.
Oh yeah. I was gonna say failing at what? ES because you're long. I don't know, Johnny.
No. We had crude up there right then.
For those that are wondering why my prices are different, make sure we're in the December right now. December Z. If you are trading September, switch it up to December. December's a new month.
Remember this? That was unable. Filled.
Unable. Yeah.
Unable.
Working.
Filled.
The old ARB. Arbing.
Filled. We used to do this when we were filled. You're filled?
Yeah.
Or you do that, filled. Either one works.
Yeah.
Well, it was the board of trade that was filled. You're filled. Merc filled.
Oh yeah, you guys did the thumb.
Yep.
I'll tell you a story about that Merck versus the board of trade one day. $64,000 check that had to be written.
Let me guess, the ARBs were different.
The ARBs were different, yes. Hundreds versus thousands.
I remember when they merged the Merc and the Dow. They really didn't. The Merc and the CBOT. They didn't really tell anybody that the ARB. Well, I don't think anybody got a crash course that the ARB was different. We'll talk about that one in a bit.
Yeah, no, that was an issue sometimes.
Mm-hmm. Tens were hundreds, remember, or something like that, Eddie, on your forehead.
The thing was the crossed arm. The crossed arm was the problem.
Yeah,
crossed arm on the CME was 1,000. On a board of trade, it was 100.
Like those.
The crossed arm, yeah.
Sell me 1,000 in the board of trade.
Maybe like sell
100.
Sell 200 or 2,000. Which one do you want?
Which one do you want? Well, I'm from the CME, so I guess I'll take 2,000.
Right.
Quiet.
Yeah.
John's in the money.
CPI this Wednesday. I think a lot of focus is going to be, sit back and wait for a good opportunity.
Yeah. Wow, show me something, markets. And my guess is, remember, folks, this week, in the roll, window of opportunities they get a little choppy. Chop. It can be chop this week. Chop is slop. Chop is the market's not choosing a direction. Does a lot of head fakes. Looks like it's busting out, but it doesn't. Just write that down and put it on a Post-it note on your desktop or on your monitor, on your forehead. We switched up the schedule a little bit this week, everybody. We're going to have Danny Crude on here in the 9 o'clock, about 30, 40 minutes after the open.
Yes. Yeah, we've got Crude coming at 9:10 today.
Ish.
We'll have Danny on for about 20 minutes. Now, remember, we use Central Time here, Chicago time, because we are here at the Board of Trade. So we are using that CST. Alrighty. John. Well,
John, it's running out of steam on this.
It is Monday.
But here's another thing. It's a roll, so it's going to act
watch
like
your NASDAQ.
Yeah.
We just had a pullback. We got within one tick of the stop, and there it is.
Uh-huh.
I probably should have put that stop a little bit further away, but that's all right. We're on the board here. Down a little bit.
Down a little bit. It's fine.
Mm-hmm.
Jab, jab, jab. Jack, if you want to go over to my screen real quick, I can kind of show folks what I look at. Better get some of these websites off.
My. There we go.
Still selling off here. So
you got the dome. See, I like the dome. I like using that dome.
I use the dome, folks. Very simple. NASDAQ on your right, S&P on your left. Here is up here, this corner up here. You can see my mouse, top right corner. If you're looking at that, 15 handles by 15 handles. And typically I did 15 handles because I wanted to show you folks that 1-to-1, and I want to be right 50% of the time to make money. But technically, I always like to be like 17 handles to 10 handles, like 1.7 to 1. So we're selling off. 5-minute is right next to these two. Those are just to get in. I'm not watching those for any type of setup. 30-minute. John always shares 30-minute. Moving average, 3 of them. 50, 100, 200. Michael, why didn't you have a ton more indicators? Because I used to when I first started trading, and then I found out that you need to get in tune with the markets. So therefore, I watch the ladder. I feel this. I always like to kind of watch the ladder to get a feel for how the market's moving in these little kind of bursts and everything. So right now, as you're going to see, the NASDAQ will disappear because we know how that NASDAQ moves. But
yeah, it does. It jumps off the dome, doesn't it?
Jumps off the dome. Yeah, it does.
It's getting really heavy here.
Okay, John.
Hey, John, go ahead,
Eddie.
No, I was going to say, John, if you can you share a disclaimer for us here with our traders?
Oh yeah, put that in there. The old CFTC disclaimer.
Michael's got the screen.
That's fine. Just toss it in the chat.
Back at the 88 with the crude.
Okay, so I am it's pulling back off the highs. But John was talking about buying weakness earlier today. I'm thinking about buying weakness, but I'm kind of just waiting here.
Yeah, we got some pretty good rejection on this first bar here. So if I'm buying weakness, I'm looking for weakness at lower levels than this.
Lower levels than this. And we have this, look it down here. My 30-minute, we have what we like to talk about here at Topstep is returning to settlement. The yellow line right here is settlement. And the returning to settlement is a strategy that is fairly common that you'll see. I'm going to get long right here at 77 quarter, 577 quarter. I like it because it's buying weakness, and I like it because it just did its first little like big pullback. So I'm going to keep an eye on this one. 15, I got a 15 handle stop and 15. See, it's already in there, guys. I trade auto OCOs. These are bracket orders. If you guys want to call them bracket orders, this is auto OCOs, which is 15 handles is up here. 77s, quarters, 15 handles is my stop down here. Each one lot is $300. So it's $900 I'm risking on this trade. I'm trading a little bit bigger for you guys. I do like to trade smaller out of the gate until I build a cushion. But it's coming up here. I'm going to take it a little bit quicker because if it stays around here. Only because John and I have this little, if it gets close, get out. So we're going to just got out of that one. First trade of the day, I always like to get, so I'm up $630, as you can see up here on the right. First trade of the day, they're vacuuming out here at 7 in the morning. Somebody wants to get done with their job pretty quickly. Out of the gate, I like to build a cushion. And having a cushion gets you very confident, not very confident, but it gets you a little bit more confident in your trading day. I also like to take some profits out of the gate fairly early. I don't look for big trades, big moves. out of the gate?
Well, while we've been on your screen, I took a short and made the loss back already. So back to bedrock.
Wow, Johnny and I are on the winning side of it. So even if you're a scratch trader, that's a winning trade. So I do like the fact that I got out of that trade. I got out at around 87. See down here my orders, and just so everybody knows, this is real. E-mini NASDAQ. There's not sim in front of it. These are real trades.
Yeah, these are real trades we are taking. If not, we'll let you know.
We'll let you know. Transparency is good in this business. Real orders that go to real exchanges, real professional traders.
Yes, and in futures,
yeah,
there's only one liquidity pool.
Exactly.
Kind of like Forex, where there's a million liquidity pools.
Yeah, ABCDEFG book.
We back to Hoag's screen right now?
Yeah, let's jump back to Hoag's screen. I'll let you know if I see something set up. I like this one because it was a quick little buy or a quick little long on buying some pullback. But like John said, he likes these lower levels. I do like the lower levels, but I'm going to wait a bit for them to come down to the lower levels. And now if I still had the position on right now, I'd be at the money. I'd be out of the money right now.
Right.
Looking for another big move or whatever. And it came close enough to my 15 handle target.
Yes, you 10%ed it.
Yeah, exactly.
You got to take the 10%.
Yeah.
If it gets within 10% of your profit target, it's a target.
It's a target.
John, Amanda's asking, can you explain your short? What did you do there?
Okay, here's one of the things that I look for. So initially we were long right here. We didn't get much on that. We took a stop here. Then we started to move lower, and we started to build volume here. So this little volume shoulder here, this little low volume node, I viewed as potential resistance. So I took the short and I got out, just kind of made my money back and, get back to even. But it's the low volume node here that provided a very short time frame resistance level for me to come and get that dough back.
Low volume node. That's just what that's called, the node.
Yes.
Okay.
Man, Kramer.
So really, you can kind of see it here. These volume profiles aren't as detailed as the ones on the other chart there. But there's that low volume node.
Each one is a node, correct?
Each one. Here's your sell-off continuing. Now, what was my stop? 77 minus 15 is 52.
We have not yet closed the gap here in the S&Ps. The gap close in the S&Ps is to 45.2675. That would mark a gap close.
Ooh, there we go. There we go. NASDAQ just took a fall.
Yeah, I would have been stopped out. Just so everybody knows, I would have been stopped out if I held that one. So you can't get married to a position. You get married to a significant other, and you can get married to a product. What does that mean? It means stick with something and get to know it very well. But you get to know getting married to a position is what you don't want to do. That's like you could date around on a position. For the most part, you want to look for the risk parameters, the reward over risk, time spent with that individual versus payoff of that. I'm trying to put this in dating terms, but I've always been taught to stick with dance with the one that brung you.
That's right.
Yeah. So stick with S&P and NASDAQ is what I watch. Why don't you watch about 30 others? Because I don't want to watch 30 others. I'm watching these, and I get to know these the best I can. I'll know these better than a lot of folks. How about this? I'll know these better than the folks that trade 16 different products. It's just something that I'm that I've always, again, to each their own. We say this all the time here at Topstep. This is what I'm doing. And by no way means am I saying, well, don't copy me. What you should do is trade and get comfortable on learning how to fish. Because there's going to be days where I'm going to take positions you're like, well, I don't really want to take that one. So don't take that one.
Right. Well, the question is, why is the volume so low when it's expiration week?
Yes,
And really, there aren't any important eco numbers until this Wednesday when we're looking at CPI. It's early, so give it some time. It should open up. Trade Golf is asking, why are we seeing your entry flags as we can see the ones on the first trade?
Well, I think this platform just says that there have been 2 trades on this bar. Those aren't the actual entries.
Okay.
Hey, John, what levels do you like down here? I mean, if you want to be trading NASDAQ, and guys, I go back to
back to the NASDAQ.
Yeah, get married to a product. I'm married to the NASDAQ only because all you guys trade the NASDAQ. If it was totally like me trading at my desk with Johnny, I trade the S&P with him the whole time, but I figured you guys trade the NASDAQ. John doesn't like to trade in the NASDAQ, which I totally understand why.
Gives me heart palpitations.
Exactly. I was just going to say.
So, all right. So what we've got here is we've got an overnight inventory adjustment. We did not find buyers to help the long overnight weaker hands traders continue to get paid. They're bailing. Now, we've closed the gap in the NASDAQ. We haven't quite done that in the S&Ps as of the last time we checked that chart. But now we're kind of at risk of getting a value area special situation play, which takes us right down to value low and settlement. So I'm going to be looking for this market. I don't see any kind of good levels, at least the way I look at markets, until we get down to that settlement level, that value area low from yesterday. We have to be able to show acceptance below the value area high from yesterday, which is 15,566. If we don't find acceptance, then we start looking for longs against structure based in here for a move to the upside. What establishes acceptance? Usually it's time, volume, momentum, participation. There's a lot of different things. Now, this is a particular strategy that I learned 30 years ago. We called it the 80% play. I think it's more like the 65% play. But what it means is, see, we opened outside of the regular trading hour session range from Friday. Opening outside of that range, we may have been able to mark acceptance of higher pricing. Right now, we're showing potential rejection. If we show acceptance inside value from Friday, there's a good probability that at some point during the trading day today, price may reach all the way to the lower end of the value area from Friday. So that's why they called it the 80% play. The tricky part of it, Michael, Eddie, everybody, is how do you know that the market has reaccepted the previous session's value? We used to say we needed 2 30-minute bars to close inside the previous day's value to mark acceptance. But the market is going to tease, it is going to chop, it's either going to go into value and then right to the value area low, or it's going to tease in this area, chop everybody up. Just about the time you give up on it, that's when it's going to make the move. So it's a tough trade to take. It's a tough trade to manage. But even if you're not going to participate in it, if we start spending time below this 15,566 area and we get a couple of 30-minute bars that close in there, that's going to increase the probability of a move back to lower value, which takes us back to settlement play, value area special situation play. There's a lot of nuances that suggest that this is a possibility. But again, it's not a possibility until we can mark acceptance below 15,566. We also, Michael, have your 200 session simple moving average here as well. So if we start showing signs of accepting below that as well, that can also be something we can use to look for the opportunity here.
Yep.
Do you understand that? A lot going on there. Hope you're taking notes. So,
Do you understand the words that are coming out of my mouth?
if you've got any questions, we are open in the YouTube channel. So A lot's going on there, John, with your wizardry.
It is a lot. It is a lot. But as we spend more and more time together, we're going to have a lot more opportunities to see these opportunities and to be able to watch them actually occur in real time.
I got 60-40 short right now. Actually, no. I got 60% long on the NASDAQ, 60% short on the S&P. How much you want to bet? I'm just going to flutter around. The old Duke Brothers dollar. We gotta pull it up. I got it in here, but it's like the oldest dollar in the world. I gotta get a nice crisp one. The Duke Brother dollar bet. Watch Trading Places. John, I kind of like these levels up here to get short, but there's nothing happening. Everybody here, like all the traders here at Topstep, are pretty 50-50 right now. I do want to get short up here. But what's that?
So, Michael, you're looking to get short.
The evens.
So this is the profile for the NASDAQ DEES. We've got a volume distribution. We have a volume distribution. This is all kind of a low volume node. If I'm looking for shorts, I want to try and get as close to this low volume node here as I can. So I'm going to be looking to be more than halfway through the range to try and get up here.
I'm glad you said that because I was looking at the 90. I was looking at that range right there.
Right here, yeah. It's not a bad spot because you got a low volume node, you got a high volume node. These are full point TPOs here. These are full point.
Here's my problem. If I got short these 92s and you like the 19s up there, the 019s, and I got short around this 592s, what is my stop? My stop is 592s. It's 10 handles is is 02s.
See, that's the problem.
Yeah, that's the problem. So I'm now getting busted out at 07 on my 15
because this is all kind of low volume here.
Yeah. So now I'm going to be a little bit more patient. Let me be patient because I would have got my 92s right. I may have got them right now. But I'm going to be patient. Yes, I might miss the trade. But if I got short around my 07s to kind of play that, little game where extends itself a little, it's chop and slop, then my stop's going to be a little bit higher than the 019 range where you just liked it and said the volumes. What did you say up there?
Low volume node.
Low volume node.
And then there's a distribution of volume above that.
Yeah. So there's
the low volume node is like from 617 down to 610.
617 down to 610. All right. Cool.
So
60-40 going on right now, still in the tilt. I would have been filled on my 90 there. I would have been filled on my 92. So how about this? I'm gonna do a joke. Not a joke.
Just you're trading size now. Throw a one lot on. See what happens.
Yeah, no. Let's just do that. Hey, flip it over to mine real quick. Let's put a one lot on. Just a one lot because I don't really even like. I'm short right now. I don't even fully like this right now because my stop is in Jack Attack. If you want to switch it over, I'm short from 592.75.
And just so you know, 98. 598 is half. It's halfway. It's the midpoint of the range.
So up here. Okay. You know what's funny is I'm in the money a little bit right now, but I didn't really want to be. Because I'm like, I only put one on. I'm like, okay, but it's chop. It's chop. Don't get excited about anything until it actually hits. Until you realize shit.
The easiest way to make money is try and lose.
I've tried that before. I'm sure everybody here try opposite day one time. Just try it. It's not as easy as you think to make money when you're on a super cold streak. I throwing my hands up in the air and be like, F it. I'm on the super cold streak. Tomorrow I'm just doing everything opposite.
Yeah, we call it Costanza trading.
Yeah, yeah, right.
Do everything the opposite.
It does mess with your mind because you're gonna. Okay, I'm in the money still. Because you're like, okay, I want to buy it, and you're like, no. It's time to get short because you want to buy it. So you do that 3, 4, 5 trades in a row. Just do opposite day. Journal it, and just like I call it like it kind of throws you. So John, those 92s would have been good because we just got 15 hands.
Yeah. Well, it was kind of a secondary level, so you put one on.
Yeah. Hold on. What did it go?
If it's the solid level, you put more on.
Remember always too. I mean, if you're in the program, you got that practice account.
Yeah.
Like I say, you give it a shot with the practice, little sacrificial lamb, and see what happens.
Yeah. Yes, exactly. You should always be like getting a feel of things. Be in the markets. Anybody that like, I don't know if I want to get. I don't know. You can't be timid in this game. You don't make money with timid money, scared money. Is that what they call it? Yeah, scared money don't make any money. And overconfident money. Thank you. I'll take it. So it's confident money. Just straight. Being in that sweet spot, like a baseball bat, Eddie. You know what I'm talking about. Right in that sweet spot, hitting on the baseball bat. Pop, pop.
You got it. Yeah.
So that short would have been a good short. I was going to put 3 on, but then I didn't like it because John and I talked about, well, okay, if it wants to do this like little run up your ass type thing that the markets do on this chop and slop type of roll week. So I laid off that. John, thank you for telling me to put a 1 lot on. I would have missed that trade. 1 lot was going to give me a toe in the water. And I was going to put a 3 lot on at 92s, but then John talked about the nodes up there. I did like the 607 to 17 range right there, which if I would have put a short on up there, I would have been just fine. Mm-hmm. Why? Because I have a 15 handle stop.
Mm-hmm.
So we put the 1 lot on light. John's like, put it on. You just go lighter. Put it on. I went lighter. I would have been stopped out if it would have kept going at 07. So that's also where I just said right now I would like to be short on with heavier size. So this is the game of trading, which is like you're always kind of like feeling out the market. And this is like the setups that I talked with right now were John's. I didn't look at technical analysis, which is fine. You can do it.
Yeah, that was purely volume.
Purely volume.
So look where they just drove the market to close this first 30-minute bar.
Show me your screen real quick, guys. This is mine.
Sorry.
I'm going to sit on my hands for a second.
1 week later.
What was that? Is that God? Sounded like God.
So this market drove to close this 30-minute bar below Friday's value. That is step 1 to potential reacceptance of value and initiating the value area special situation play. It had to come down there and close that bar down there.
So it closed the gap.
It did close the gap, but it also now has 1 30-minute bar closing inside value from Friday.
Now
one step closer to reacceptance.
Reacceptance back higher?
Back lower.
Hold on. Okay. You're losing me. It gapped open and
we closed the gap early.
Yes.
We closed the first 30-minute bar back inside value from Friday.
Yep.
So that closing of that 30-minute bar is a potential 1 step towards acceptance of lower pricing.
Ooh,
it could completely reject it, of course.
What about selling 92s up here again? Do you like it?
It worked the first time. Try another 1 lot.
Yeah.
Hey, John, can you explain what the tilt actually does? I know we're going to get a lot of questions there. What is the tilt?
Speaking of, the tilt right now is 56% of NASDAQ folks that have open positions here at Topstep are long. Everybody has their open position right now. The data is aggregated and it's put in are they long or are they short? That's simple. You'll look up, there's companies that do it end of day, they do a product, things like that. We do it in real time.
Also coming from our YouTube chat channel, Elevate Their Frequency is saying smash that like button, folks. There it is right there. We got 146 right now. You got some time. You like what you're hearing, you like what you see. Do you like us? well, hit that like button. Smash that like button. Let's get some numbers up there. If you want to subscribe, by all means, please do that. I know last week we had, if we hit 600, Danny would come on with a cut sleeve and tie. And we did. So if you logged off a little early, we did hit that number, and Danny will be wearing a shirt with the sleeves ripped off.
I don't want to tempt the people in advance. He is going to do it. I don't know if he has it today. We might have to remind him because it's a Monday, but maybe we'll be surprised.
Jack, okay. He's got a button down in his closet. Just rip it off.
He's got one in his closet. Okay.
Okay, so nothing really showing 50-40 or 60-40, not even 40-60, 40% long on the ES, 60% long on the NASDAQ. That's nothing, guys. That's nothing. And last week, the herd, that means everybody with open positions were getting paid. John, I still like the short up here. So just help me keep an eye on it.
It's at half-back level.
And now it's in this little, I'm not. So not doing anything now.
Low volume node.
Where?
Well, I mean, here's the other platform here. So this is the low volume node. It's a big zone. 92 is where you shorted it last time.
Yeah, it is a big zone. Yeah,
and it came up there, but that's the you mentioned. The risk is the problem, so you put one on.
Mm-hmm. I put that. Yeah, exactly. Why do you size up? You say you're going to size up because I've moved my size around to build the cushion in the morning. If I start seeing things really well, then I'll keep increasing my size to a certain point, probably 5 lots. You guys just saw, I put 3 trades on. I'm up almost 1,000, and one of the trades, actually put 2 trades on. One of them was a 3 lot, 3 in, 3 out. That was a $600. $700, whatever.
Just noticing here, we've got Inner Circle Trader in the chat. Welcome, Inner Circle Trader. Thank you for joining us.
I like that. I like that whole group.
Yep. He's asking respect for being a funding company and trading in the trenches for others to watch. Keeping this up or short-term venture? We're planning on keeping this up, ICT.
TopstepTV is here to stay. I got CNBC right here, but it's muted. So TopstepTV should be played because we want to, and ICT, you know this, good trading is like watching paint dry. And we know traders get in here and they get over trading. And if you join TopstepTV, it's free, and you jump on here, there will be, it's still so, I want to get short. There will be times where we just share stats on the community. We bring on guests. We bring on some of the partners that we have, educational partners. They'll talk. And hopefully folks are filling up the think tank. If you're not growing the account, at least you should be growing your mindset on trading, or at least filling up your journal each day on getting smarter. And again, trying to help people not overtrade. And some people are like, hey, this is distracting. Yeah, distracting for me is listening to my desktop fan in a completely quiet room. So I start to perceive setups that are even happening. So needless to say, thank you for joining. Would love to have you on here too. Fun. Would definitely love to have you on. So we will have Danny Crude coming up here. I guess he's not going to be sleeveless, even though he lost the challenge.
Looks like he may be a little bit tardy, but that's okay. I'm sure he probably doesn't feel tardy.
So right now, again, on the tilt, nothing. Everybody with open positions right now is 50-50.
So we talked about no tilt.
No tilt. Now, tilt's an indicator that we're going to share that we're seeing. We aggregate everybody's open positions, and we go, oh, John's long, Michael's short. So the long bias is nothing, or 1 and then 1. That's offsets. There's nothing there. So tilt also sees when the community of traders tilts one way or the other. Last week when they all tilted long, John, what happened? It ripped higher. Now
they got paid.
But as it ripped higher, that number was like 80-85%. They all got paid, and then it went down to like 70 or 60%, and then the market sold off really hard. So those last folks that are staying around at the party, they got busted by the cops.
Drop the red cup and run.
I have done that in high school before.
Many a times.
It used to actually be kind of fun, you know. It was like cops are here, everybody scatters, like through windows, through doors. There's like one cop, like in my small town of 3,500 people. Yeah, I was in a very small farm town, 3,500. It's like one cop shows up. Like, hey, you don't even pick it up anybody. You picked up the slowest guy, and
just scaring everyone.
Yeah.
What if your red cup is duct taped to your hands?
That's Edward 40 hands. We talked about that last week.
You're in trouble.
We've seen Michael race before.
Yes, we have.
He would have got
pretty
caught
quick.
by the cops.
No.
No, I would probably be the one caught by the cops. Not in high school, Jack. Not in high school. I had some speed in high school. Right now, it's
I guarantee you, I would have got caught.
Oh yeah. I mean, John. It'd be like, why bother? All right, you got us. Yeah. It's sipping off the cup.
so if you're a 5-minute trader, it's in 5. 1, 2, 3, 4, 5, 6, 7. 7 bars on your 5-minute trader, folks. Of just in your right in the middle of your 5-minute bar. Your 30-minute guys, and that's what John and I will like to watch. Your 30 minutes is just sold off, got underneath the 200 period moving average, sitting right here. Again, I like the SMAs, simple moving averages. Keep it super simple. And I'm watching. I'm up $930. Real, trading real markets. Topstep funds real traders. When you start kicking ass and put you on live accounts, we don't sim trade you forever. I wouldn't stick with a company that sim trades you forever, because when you start playing pro ball and start trading really well, get your ass in a live account. And that's where Topstep funded our prop firm. Goes, hey, John, come on over. And the water is warm. We want you on the account trading real orders that route to real exchanges.
So look at the NASDAQ. I mean, look at this. You just mentioned the 5, so I put the 5 up. It's just bouncing back and forth between the 200 and the 50 session moving average.
So right now, it looks like
short right there.
Yeah, right now, if I'm a 5-minute trader, I'm like, oh, okay, this is like, it's going to start continuing, because it looks like it's going to continue low, and there it goes. Because you get these little head fakes. Just watch out this week, because it's roll.
Yeah.
Watch out, because it's roll. This is the week I would take off.
Yeah, 100%. Rollover just throws a horseshoe into everything, it seems.
Yeah. So it's just sitting right here. So if you're 5 minutes, oh shit, it's going to break to the upside now. Oh, it's just chop and slop. So you got to be patient. Pick your spots. Be smart. Size down this week. That's what I would do, is size down this week. Well, did you tell us to size? No, I'm never telling you to do anything except what you have in your trading plan. Follow your trading plan. Stay disciplined.
Oh, I have always wanted to do that, but I don't think I could pull it off. How did it feel?
You know, I had some comments last week. People were like, oh, this sound effects are distracting. Well, turn off the TopstepTV. You don't have to watch it, because it's supposed to be tradertainment. Addie, I love your Kramer push of the button there.
Push the button.
Man, this is watching paint dry.
Yeah.
Well, the situation that we're in right now, you know, I mean, don't force the trade, doesn't matter who you are. I mean, this is something where, you know, we want to be doing the right thing.
Okay.
And I mean, you can tell about market movement. We're sort of in a funk right now.
Yeah.
It's not really giving us too much to go off of.
55, 45. 55% of folks are short.
Basically flat.
I mean, now I'm in one of these, and so volume nodes. Go to your 30-minute real quick, or maybe you already have it. No, 5-minute, 30-minute. Give me some areas down here. Look at the 5-10 area. We're just bouncing off our 50-period moving average. Sorry, I shouldn't say bouncing off. We're coming up to our 50-period moving average. Guys,
Well, I don't think this. I don't think this is going to stop until we get to value low from Friday.
Which is where 488.
Yeah, 15,489.
Yeah.
If you're to poke its head through settlement, these are all.
Overnight inventory is I think the bigger part of why this is happening. But now we've got potential acceptance of value from Friday, which there's a good probability once it's accepted to move to the lower end of the value area from Friday.
How low can you go?
Right, there we go. Eddie,
we're just tagging right now in the NASDAQ, tagging that 50 SMA.
It's right on it right now. Yeah, that's what I was just going to say. Guys, why aren't you watching more indicators? Why aren't you watching more things? Because paralysis by overanalysis, there's one reason why. And I got a good friend called John Hoagland who looks at some other things for me, which is he's sharing with you guys right now. It's not a secret. I am talking to you guys about the tilt. That's always a good indicator to know what the consensus is or the bias is. And then keep it simple. Keep it super simple is another just big piece of the game. I like to watch the flow of the movement on the on the dome. We used to call it I call it the ladder. We used to call it always the ladder.
Yeah, ladder, dome, dom. Hey, I'd like to give a warm welcome to Patrick and his crew jumping in here right now.
Patrick,
thanks for joining us, guys and girls. And if you're liking what you're seeing, we got a lot of new people I do see that are coming in here. Smash that like button for us, please.
Smash the like button, and I want to. Hey, Patrick, did you catch anything over the weekend?
Fishing. That's right. Yeah.
Don't forget that lucky like button is lucky. It is a lucky like button.
Yeah. So, Patrick, if you caught anything, I want to know, because my weekend was not fishing, but it was. I don't know. I had to go to my kids. They put on a little cocktail party for all the parents.
Wait,
kitty cocktails, hopefully,
your
right?
kids put on a cocktail party for the parents? what the hell's going on over there?
I know. I mean, if they were 16 or 18, I'd get it, but my kid's 4. So, no, he didn't put it on, but his school did. And then they asked for donations, too, but hey.
Of course. So somebody was looking to take a look at the crude, and again, I mean, weekly kickoff high just still very resistant for price above that level. Our current high, 88.15. Last week, we had one high here, one high the next day, one tick higher. It keeps looking a little bit deeper, but continues to be rejected up at that level.
I like Patrick Whelan's community. There's some heavy hitters over there. They trade big.
Well, we got the NASDAQ just sitting right there.
Yeah. It's rollover, man.
Yeah.
It's rollover. I mean, there's opportunity, but always seems a little blurry.
Hey, John, Jack, jump over to my charts. It's not any different than Hoax, but I want to. It's extending showing that it wants to continue. John and I talked about that. I feel there's a position to be put on somewhere coming up to here. I have a volume profile, John, just like you right here.
Mm.
Yeah.
Yes, you do. That includes the overnight. Don't forget that.
It does? Okay,
Yeah.
did not know that. And this is your little low volume gapper sitting on your 50-minute 30
Right. And
period.
that's kind of between the overnight distribution that occurred. Below that, that's overnight.
Yeah, I got my P&L down here at 930. I got the two trades, 3x3, bought 3, 77 quarter, sold 3, 87.75. That was a quick little banger out of the day. That was 246, $630. And this other one was a one lot only because I was actually looking higher than 92. This is 592s down here. And covered 77s. So now I'm taking my time looking remember, again, we're going to keep repeating this because people always need roll. Windows of opportunity either get choppy where they're open and close, or they stay really tight. And I call it window of opportunity because as a trader, you have a really good window of opportunity that comes out of the gate. In the open first hour of the day, there's a good window of opportunity. That's where you can set yourself up for the day or just establish your day. Don't want to get in the hole. That's why I like to take it light out of the day. And then if that window of opportunity still stays open, which means the window of opportunity means what you see. And John could be totally different. He may see no window of opportunity.
Right.
But it's also then if the VIX is really low volatility for that particular, then both John and I would be like, oh, like right now, there's not a huge window of opportunity wide open, wind blowing in, totally like this is, paradise of trading. No, it's kind of quiet.
There's a good question coming up here in the YouTube about approximately how many traders are in this so-called tilt.
Well, we have thousands of traders, so it's whatever's trading at that time. There's thousands of open positions right now, so I don't know how many. I don't know how many traders that would be, because one trader could have an open position in the NASDAQ and the S&P. And the tilt is all simulated trading. We don't share any live open positions. That's for our prop firm. We keep that. That's proprietary prop firm. That's our prop firm over there backing Topstep traders that are kicking ass in the Express Funded account. Remember the Express Funded account, you can still get paid in the Express Funded account, but if you build up enough profits in that account, we go, hey, Eddie, great trading. We got an account open up. You have 20 grand in your account. The account is our prop account, and you're playing pro ball now. These real orders going to real exchanges. But the tilt and the simulated is all simulated data. Your trades inform all of our trades. So right now it's still 55-45 to the short side. I've been repeating this all day, and it's been right around there. I'll let you guys know if it gets really heavy one direction. You can kind of watch. Does the market go their way, or does it go the opposite way?
Mm-hmm. All right. Inner Circle Trader, what time do you fellas start your stream? 8 o'clock Central Time every morning, Monday through Friday. And very nice to have you here with us here today. Everybody here. It's great to see people coming in and out of here, giving us some feedback, telling us they're having a good time, they're learning, it's fun, and there is you put that up there. There you go. Okay. But good to have you here with us, 8 o'clock every morning, and we go all the way until 3:30, if I'm not mistaken.
Yeah, just about 3:30, 3:20, 3:30. Whenever the turn those machines back on, reflection is done.
Yeah, we should throw the schedule up so folks know the schedule. Get to know the schedule. Find out where 72% of people are long right now. Crude oil. So the crude's a little heavier to the long side. NASDAQ just doing its thing. The schedule, Eddie talked about. You're in fast markets right now. We did opening call from 8 to 8:25.
Yeah.
A little 5-minute coffee break. Yeah.
Real quick here, we got Danny coming in here for Crude. We're going to take a couple second break here. We're going to bring Danny back on, and for you Crude traders, it is your time. Coming right back. Be right back.
Yeah.
Hello, Danny.
Dude, so Crude.
For, Danny?
There it is.
Yes.
I hate you guys.
You did it. You did it, Danny. I appreciate Danny.
I'm a man of my word.
Yeah.
Yes, I cut up one of my shirts last night.
You're a Marine. If you say you're going to do it, you do it.
I tend to do that. And I figured I'm not cutting up a nice, high-end tailored shirt, so cheap flannel.
Cheap flannel's fine. We said button up or button down or button up.
It is a button.
whatever direction.
You got a tie.
You look
Yeah,
like
my
Larry
tie.
the Cable Guy.
You look like-
I was going to put a camo hat on too and really just run with the character, but that was a lot of work.
No, I think you look great, Danny. You look great. Hey, Danny, 75% of traders here at Topstep that are trading crude oil are long right now. So as you're talking about crude oil, and we got crude oil traders, you're seeing a little bit of heaviness to the long side on your crude oil traders. Everybody with open positions that is trading either in the trading combine or the express funded account.
Yeah. Well, first off, being long right now is not a bad thing. Last night it came out, a lot of information started coming out with the diesel inventory. Concerns about diesel shortages coming this winter. Well, we can all sit here and we know come winter, diesel fuel gets used a little bit more in winter than it does in summer. People use it for generators, use it for their heat. So that's something. If those those numbers are starting to get to hit, we're seeing that carry over into the gasoline, and we're seeing it carry over into the crude oil. So that goes for why we saw that big pop this morning after the open. That market rallied up, but we're kind of liked where it rallied to. We like Hoag's weekly kickoff high up at 88 even. We saw it rally up there, and I looked at that, and that to me is a pure sign of rejection on a short time frame chart. We saw it reject there this morning, and what I really liked about the trade, and I'll be honest with you, I missed it. I was looking for it. I was looking for that pullback to come down to settlement price at 87.51. That to me was the area I wanted to take a buy. I wanted to buy it off that on that first initial break as it came down to settlement price. I did not get in the market at that point, and I'm not big on Monday mornings. So missed that move. But to me, seeing that a lot of people are taking the long side of the market, I think you're in a good spot. We know that inventories continue to be cut. They continue to pull supply. We continue to see this market rally. And hell, I was in Chicago this weekend and I saw those gas prices of $5 some odd a gallon. And Michael, that Rivian looked a little bit better last night when I looked at it on the internet.
You hated on it before because it couldn't tow your boat or your Polaris.
No,
you
can't
do those
tow it.
trips. You do those trips once, twice, 3 times a year, and borrow. You go in your buddy's truck and sit shotgun.
So we got to keep an eye on this market here this week. I think Hoag, your weekly kickoff high up at 88 even is going to really be a pivotal level. I really do look at the oil market, and I think it is a market that trades levels really well. I'm a levels trader by trade, pun intended. I like trading crude oil based off of levels. I like this 88 level quite a bit. And I think it's really important to be clear and be direct to anyone out there. When we talk about a level like 88, when I say I see that as a pivotal level, I see it as it could be one of many things. Number one, it could be a rejector, like we see this market hit that level and reject it and send that market back down. It can be an accelerant. We can get through that level. We see acceptance above, and then that market accelerates higher. Or it could be such a fair valued level that we watch the market trade around that price for an extended period of time. So no matter what you think about levels, no matter what anyone says, we can say 88's been resistant. Well, resistance is all hindsight because you never know the next time it's going to approach that level. So you got to be cautious and be prepared to get in and get out at key levels. Or if you're new to a product, you're paying attention to that level. How's this market start to react around that? Let's get used to this. Let's understand, as my dad used to always say, every market's got a heartbeat. Understand the rhythm of that heartbeat.
We just said that. Wow, your dad, for one, your dad's a great trader. And I like how he talks. And that's Danny's mentor, and his dad's been on the floor for a very, very long time, trading floor. Not anymore because the trading floor is closed. But
he's far retired now.
Had a very successful trading career. And heartbeat of the market, the heartbeat of the product you're trading. If you watch and trade 15 different markets, that's 15 different heartbeats. So you got to know the beat of it. Is it running fast? Is it running slow? It's just like your heartbeat would go faster or slower if you were running or sitting. And that's something we wanted that I mentioned earlier about getting married to a product, because you get to know the temperament of it. Anybody who wants to jump around, oh, this one's moving. It's setting up over here. It's setting up over there. If you're purely technical, I get it. But
I think
I don't know.
I think you got to be conscious. I mean, we can sit here and you can understand all the fundamentals of the S&P and go, you know what? I understand the fundamentals of the indice market. I'm going to go look at the NQ. That NQ, I mean, I don't know how else to describe it, but wild, out of control. I mean, that's a heartbeat. That rhythm of that heartbeat concerns me, and I would say go see a doctor.
I trade it and I drink coffee, Danny. I mean, I got doctor on speed. I got doctor on speed dial though, so I got
some heart meds in the bathroom if you need to borrow.
Yeah, I know, right? That's
it's the real kicker is when you're talking to a trader and they're like, "Yeah, I'm trading the Nasdaq on a 1 minute."
Ooh,
nice.
Teach their own, right?
Indy 500.
What about the tick chart guys? For every tick, I mean,
no.
It shows you a bunch of like patterns, but are those patterns? I call them noise.
So, John, I like what you're pulling up here. You know, you can see we've rejected 88 quite a bit all last week.
Yep.
So, again, it was once resistant, right? Does it mean that's going to be the case this week? Does that mean the case next time it approaches that level? I don't. You can't determine that, but there's room to the upside.
I told you guys I'd let you know 70% of folks are now long S&P. 70% of folks are now long S&P. They're you can call them getting paid right now in this move to the upside. Now, here's the thing. They may be getting paid if you're taking stuff off the table, but it's still 70%. If that number goes down, then I'm like, good job, traders. Good job, traders. Good job, longs. You're taking profits. So I'll keep you up to date if that number moves. It's at 70% right now.
So, Dan.
Yeah.
If we were to break out above this level, I'm using this measurement as a potential target for that move.
I love measured moves, Hoagland.
This isn't even the right one.
Hey, John, I go back really quick.
Yeah.
You're still talking crude oil. Danny, can we jump over to S&P real quick? We're just making we're making a move.
You know, I only get 10 minutes a day to talk about crude oil.
All right, yeah.
And I got to come in here. I had to wear a cutoff shirt today with a tie.
You're right.
Thanks to everyone having to hit that stinking like button.
You're right.
Hoag's talking crude. Let's pay attention to crude.
So I'm looking at a measured move up to 66. 96.
96 there,
I'm sorry,
Hoagland.
yeah. 96.
I don't see that being unattainable with the information that's coming into the marketplace with this. Frightens me.
Yeah, I know, right?
Good thing I got my new apartment and
where?
In Chicago.
Schwager.
I'm moving back and it's an energy efficient building, so my gas bill will be cheaper than it is in this old loft I have.
Is it a loft? Did you get a loft?
It's not necessary. No, it's just one of those like
Wicker Park,
West Loop.
Ooh, look at you, fancy.
Well, uppity, nice pool.
Nice.
Look at you.
Not the K2 building, is it?
Yeah.
Is that the building Sarah was living in? Yeah, that K2 building.
No. It's I don't really want to tell people where I'm going to live, so I'm not going to say the name of it. But it's not the K2.
You don't want to. You probably don't want to tell me.
Hoag, I will tell you offline. But first off, all these people hitting the like button and making me wear this shirt, I don't need them to know where I'm living.
Yeah.
Living in a van down by the river.
There you
go.
Well, here you go, guys. Really quickly, Danny, stay on crude real quick.
Yeah.
You got a sell-off happening right now, however many time frame you want to call it. We had all those longs in there, 70%, 60% long still. So maybe you got these longs holding on. Be careful. And I don't know where all these longs got in, but it's a little bit heavier now. It's 56, 57% long. So just something to think about. This is in the S&P. We were just four handles higher ish.
Is that the daily there, Hoag?
Yeah. This is the,
there's the big 1D in the center of your chart.
Yep. Here's the 30.
Yeah, Danny, but I don't want to take away from your time and our crude oil traders' times that are tuning in. So what else you got for us on crude, and what are you thinking for the week?
Obviously today's bias is one thing. Tomorrow it can change. I will say 88's a pivotal key level. For me, that's it's a industry term, BFRN, a big fat round number.
Mm-hmm.
That is a very important industry term. What I need to look for, and this is my rule, right? When I'm looking for acceptance above key levels like this, I'm going to be focused more on my 4-hour chart. I trade a lot off the 4-hour. I look for a lot of confirmation on the 4-hour chart. So I'm going to look for a 4-hour candlestick to transfer over and hold above that 88 level for me to look for extension to the upside. That's going to be
for a pullback towards it.
I'm going to look for that pullback towards it, and that's my entry point, and that's when I'm going to try and get in. But I got to see acceptance above 88. If we see acceptance above 88, I think we get back on the train to the upside. We are seeing the rejection that's happened all last week. I think based off the information and the understanding of the commodity marketplace here with the oil, it tells me it should keep going. But we'll pay attention. We got to be cautious here this week. So I am looking for acceptance above 88, and if so, we're going to look for a directional move. If not, we're going to rotate back inside, and we may get this sideways market that goes for quite some time.
Dan, can I ask you that 4-hour chart?
Yep.
That is the chart that you will use to determine if the if price is being accepted above that level. Is it the fact that it's a 4-hour chart and that it has to spend a pretty decent amount of time above there to mark acceptance? Is it based in time acceptance?
Yeah, I mean, so for me, it all goes back. It's like I was not a trained day trader. I was trained to position trade and think, where am I going to be in a long time? And the small charts that we looked at were 4-hour charts. So this is the first chart I was ever shown was a 4-hour, and there's a comfortability to me, and everything I've studied shows me I have to look at a 4-hour chart. So it creates a comfort zone. So yes, I'm looking for time and acceptance, and I'm looking during regular trading hour, right? An overnight session on a 4-hour of something. Let's just say crude oil between 9 p.m. and 1 a.m. I'm not going to trust that 4-hour like I would from an 8 a.m. to a noon.
So the regular trading hours.
I need regular trading hours. Yes.
You get to get better, more clear, fuller information from.
Yes, but granted, oil brings in good volume in the London session usually.
Yes, it does.
So that's a volume I can pay attention to. But yes, it's definitely time based. I monitor volume.
Whoa, we talk a lot about volume here, folks. Just something.
It's the only fact you get in futures trade. That's the difference between futures and forex.
Time and volume.
You get time and volume here. You know how many traded at that price, at that time. That's pretty cool.
Mm-hmm.
Somebody pointing out we have 420 likes. 420.
Boom.
Well, what do you got to wear?
Living in a van.
Oh yeah, why don't we do a Hoag wear? Huh?
I'll wear a sequined jacket.
No, you can't call out what you wear. That's not how it works.
I didn't want to wear a cutoff button down.
Well, Danny, how about this? This is how we'll do it. Because I really leaned into Eddie started the game, and we're gonna come. Trust me, Eddie. You're gonna,
all right.
You're gonna be in there. But I think this is a Hoagland one. You're allowed to, Danny, tell him, because I told you what I think you should wear if 600 got hit. If we get another 600, no, it's too easy. No, it's Monday.
No, it's not. It's supposed to be easy. I gotta wear this. Hope doesn't.
We were around 400 at the same time. So, all right, 600 likes. Danny,
gotta be 700.
No,
you're not
600 for me. 600 for you.
You can't go under 600. You have to raise it up, Danny, by 25.
All right, 625. Come on, people, start smashing that like button. Hoag, if we hit 625 today, tomorrow.
Shave his beard. Or shave. He has to give you a Fu Manchu. Come on.
Hoag's done that so many times. He would be so excited.
I've never done a Fu Manchu, but I'd try it.
Okay. All right. I can go with Fu Manchu.
Don't let me take it, Danny. We're riffing right now.
But Fu Manchu and Hoag, I want that hair spiked up. I want like 1970s, like heavy metal Hoagland rocker, Fu Manchu, spiked hair.
Rick and Morty.
I mean, and I want your hair dyed black. Or the color your hair was.
Wait a minute. You just swing it, Larry. You're just wearing a shirt with cut off sleeves.
Yeah, I know. Why do you tell me to get the plastic surgery?
Tattoo on your forehead.
No. Spiked hair, Fu Manchu.
Spiked hair, Fu Manchu. Right. All right.
In honor of Smash Mouth.
Yes.
Smash Mouth. Is that a band?
Yeah, Michael, what planet are you from? Yes, it was a band.
All-Star?
I didn't listen to
Hey, now, you're an
lives out
all-star.
in the
Get your
sticks.
game on.
The singer passed away last week.
Yes.
I turned off those notifications on my phone.
All right.
Walking on the sun.
Smash that like button. Take a vote right now. We are in the YouTube channel. What should Hoag wear when we hit 625 likes? Either it's the Fu Manchu, the 70s hair spike, or shirtless. Because right now I think we're all bottomless, but you can't tell. But that's
shirtless.
one of the three options.
No, let's keep the shirt on, Hoag. We'll keep shirts on. Fu Manchu.
Yeah, that's probably a good idea.
All right, guys.
I don't want to embarrass you guys with my ripped abs.
John, I think you should go Eddie next time. I think it's got to come full circle, and then we can start.
Yeah, Eddie will be next.
Tank top Eddie, maybe shirtless Eddie. I don't know. We'll go hit you hard since you started the game. But
I'll need a heat lamp.
Day. I actually have that picture. Me shirtless with a bow tie.
Well, that's when you were working at Chippendale, right?
Yes. Yeah. It was me and Chris Farley.
That was you and Chris Farley.
So Eddie, I'm watching our Topstep Discord. So everybody get in Topstep Discord at any point in the day, because there's always folks in there, in the Topstep TV channel. So I'm going to recommend all the Topstep TV Discord folks to jump over to YouTube. Actually, you already have it probably in front of you. Click the like button. Votes. Yeah, click the like button right there, just so we can get Hoagland to what was it, Danny? Spiked hair and Fu
Manchu or shirtless?
Hold on, or shirtless?
Shirtless is losing right now at 23%.
Yeah, nobody wants to see that.
A 70 hair spike is winning at 43. Fu Manchu at 34.
I'm lost. I thought we were trying to get 625.
All right. Jeez.
Man, if you're a 5-minute trader, you were getting chopped up.
Oh, God, yeah. Unless you're focusing on the extremes.
Unless you're focusing on extremes, yeah.
Check it out.
Did we sign off, Danny? Danny, goodbye. It was good talking to you.
All right.
See, here's the range.
Yes,
if we're buying down here and selling up here, we're just kind of rotating back and forth. We're in good shape.
It's getting tighter, though, that little range. I mean, well, I don't know. Depends on the way you look at it. I don't know. I'm not a 5-minute guy, so just don't distract me, John.
I am not either. I just put it on there just in case, people wanted to see. There's the 30.
Yeah, so there you go. There wasn't a total extension, but it came down to the daytime session low. Is that?
Mm-hmm. Yes, it did. And you gotta think about that overnight high. Okay, that's the overnight high. The market looked above it and failed. Look what happened. And that overnight high, especially when there's overnight inventory, can bring some decent opportunities for us.
Yeah. So playing the game today is a little difficult.
Well, days like today, I mean, you've got to put in the sense that, you know what, I'll take what the market gives me. If I can sort of cut out some small profits, I'll be happy with what I've got. Now, Michael, what are you on the day? What's your P&L on the day?
Michael's got a good day going so far.
Yeah, we should put my day, anybody's day, in the corner of our little window that you see. Maybe, Jack, I don't know if that's something possible.
That's not something I can do right now.
Not right now.
But it's something we can look for in the future. Yeah. Johnny, what's your day looking like?
I'm basically even. I took a loss on the opening range trade and made it back, and when it broke down below the opening range.
Okay, yeah, I got the second best trade day going on, Eddie, so far.
Good. Okay. That's a good thing.
I got 930 sitting in the hopper.
Now, let me ask you, Michael, are you happy with that?
I'm definitely happy with it. On a Monday morning, an hour and 13 minutes into the open. I mean, that's $100 an hour times blah, blah, blah. I remember the young trader, Michael, used to be like, okay, if I made the 100,000 in an hour, and I did that every hour, and then it was 8 hours a day, I'd be up. And then they're like, losses are ordinary, necessary part of trading.
Yeah, you got to put those in.
You got to take losses.
All right.
But to your point, yeah, I'm happy with it. It's a good cushion. I mean, having that today, for one, I do want to find some opportunities that, I want to wait and see if the opportunities present themselves. But right now, we told you guys earlier in the day, in the very beginning, it's going to get chop and slop and throw.
And when it's choppy, you're better off waiting for the market to come to you than going searching for trades.
Oh my God! Right? It's choppy markets. If there's not something that agitates a trader more than anything, it's probably missing moves, but you got to dilute the power of FOMO. That's fear of missing out. It's an opportunity to making machine. So if you miss a move, whatever, it's choppy, and then you get busted out, and you get back in, and you bust out, and then you flip it and then you bust out, and then now you're going on tilt. The reason why we call it tilt too is because some traders you tilt one way, but also you get tilt emotionally, and then you're down thousands of dollars on the trading day. And it's a shitty week.
John, Angry Chair's got a question. Any thoughts about price compression? Is it useful or should I stay away?
Well, I think it's definitely useful, but the difficulty is recognizing when it's actually true. If we were to look like, price compression is when you've got a lot of participants either too long or too short. That's one of the things that we talk about possibly on the tilt. We've got a lot of traders, and if they're all long, there may be some price compression. It depends on where it is. But let's look at gold. I mean, I look at this in a little bit longer time frame. So here's the daily in gold. So. Okay. We're seeing price compression over a long period of time. We're seeing higher lows. We're seeing lower highs. This market is coiling. It is compressing. And that's why I'm saying when there is a move that is accepted outside of this, aside from just through attrition, it might provide a pretty decent opportunity. So, the question is, how are you identifying the price compression? Sometimes you may have a delta divergence that indicates compression. When you get too many longs, too many shorts, that's where the real compression is to me. So it's all in how you identify it and in what time frame, and ultimately whether you're able to take advantage of it, right?
Okay. All right, John, thank you. Appreciate that. Hey, it is 9:46 Chicago time, and it is time for Shoulder Tap. Time to share some success, time to avoid some failure, and we've got Brett on the on-deck circle, so we're going to take just a couple seconds here, break, and we'll be right back.
Hello, Brett.
Hello, Brett.
Hey, good morning, gentlemen. How are we?
There you are. We're very good.
Right.
All right, welcome. Haven't seen you in a while, and glad to have you here. And real quick, I know we've got a lot of new people here, and they're wondering, shoulder tap. What's shoulder tap about, and what exactly is your job here at Topstep?
I'm glad you asked. Basically, I'm on the risk team, and the shoulder tap is when the risk team jumps in. We talk about our funded level traders, both in the express funded accounts and the live accounts, in the real markets, trading with the CME, and all of these traders are taking payouts as well.
Hey,
I'm
going to jump in with a no trading question. Is that a Masters polo? And did you go?
It indeed is a Masters polo.
Nice.
I like how you dress, Brett.
Thank you, sir.
All right, so tell us what you got.
We've got a few traders today. I wanted to start out with, and I didn't even realize when I was writing this card, it's Jed I from Clovis, California, or Jedi.
I get it.
He's been a member with Topstep since 2021. He's a NASDAQ trader. And one reason I really wanted to highlight Jed was he's got 28 days in the account, 75% winning days, which is fantastic.
Wow.
And he doesn't trade too much, only does about 7 trades in a given day, averages $363 per day. And a couple weeks ago, Jed, it looked like got into a rough cycle where he was drawn down $2,000-$3,000 a couple days. And then it looked like Jed kind of had a realization and reset and said, okay, I'm going to start small again, and small works for Jed, it seems like, and I would encourage him to keep going like that.
Let's be clear. Reset the mind correctly, not the account. Can't reset it.
Thank you, Michael. Yes, reset the mind, and just there were many times when I was trading professionally that I would go back and say, I'm working for $100 today. I need a day that I could say I did something instead of bled my account.
We call that going back to trading 101. You're on a good, you're trading well. Of course, you're probably going to increase your size when you're trading well, and you know, a relative, a bit. You don't like go all of a sudden you're a 50-lot trader. No. And then you get smoked, and then you get hit again, and you're on a cold streak. I looked at that as tomorrow I'm going trading 101. Base hits win ball games, so I'm just going to get the only thing in sports and baseball, Eddie, we've talked about this before. The only way to break a cold streak is to get on base, and you can bunt your way to get on base. You can watch a pitch count and get a walk. Getting on base is so damn important because it gets you confidence. And Bray, you just said it, having $100 day, even if it's something as simple as that, and you end the day.
Confidence. Right.
Second best winning day is a scratch day, and that's roughly where you need to be.
You know, Michael, I coached baseball for 25 years, and one team I did have, the kid didn't want to play. He had no confidence. His mom put him on the team, could never get on base. But all of a sudden, he started getting hit by pitches. That's a true story. His nickname became Target. He started to enjoy the game so much that he actually signed up the next year and really became a real decent baseball player. Something he didn't want, and it was just that little boost of confidence. And honest to God, we nicknamed him Target.
Was he also a catcher, and would he wear his gear up to the plate?
No, he was a left-handed hitter, didn't want to play, and you got to play everybody, you know. So when he'd get up there, he'd get hit by pitches all the time.
I mean, there you go, getting on base.
He got on base.
What a great nickname! Kind of, I wanted to talk about some other traders as well, and as well as Jed, but you don't go broke taking profits is really what it comes down to. Kind of similar to whether you get hit by a pitch, as long as you get on base.
Okay, who do you got next? Jedi was awesome. And really quickly, guys, there's a reason why I started Topstep, Eddie and Hoag, founding team of Topstep, because we can sit here. Hoag scratch for the day. I'm up a little bit on the day. Jed, 28 days in the funded account, 75% winning days. That's why we
really
wanted to
good.
back traders, because we could sit here and we knew our time here in trading was always very focused on trading. But if we could focus more on traders, that's the way we did it in the early days. The founding team, Eddie Horn, John Hoagland, when we founded the company back in 2010, 2012, around that, 2011. Our goal was to find traders that could trade. And then that was really what you were putting your backing on. And we saw it in the trading pit. We saw it all the time. So this is my point is, like, you see a trader right here. Jed's a better trader than I am right now. You give me no Topstep. You give me focusing 100% on trading. I'm in the game. I'm getting funded, and I'm a Jed style right now with putting up these type of days and that batting average. But that's why we do it, because we see traders like this, and they're trading very, very well. So it's kind of like Brett Steinberger, owners of a baseball team, where you bring players up to the baseball team, they start, and they're just crushing it. So good stuff. What do you got next?
Yeah, and similar to what you were saying, Michael, Matthew, Jed, one thing that he's done really well is he's been paying himself. He's taken a couple of payouts in the mid-$1,000 range. And kind of what you alluded to is the good in trading carries you through the bad. Yes, you can make a ton of money quickly. However, you shouldn't plan tomorrow on today. And you should squirrel some of that away, because the good is what carries you through the bad to get you to that next good time in trading for your style.
John, you probably saw a lot of traders squander a lot of that away.
Yes.
In the trading pit, I should say. Those
yeah, and I did it myself. There's days I'm up, $4 or $5 grand, and by the end of the day, you end up down money. It's debilitating. It's terrible. Yes. So you got to kind of come into a rhythm. If you become consistent and profitable, whether you're making $200 a day or $2,000 a day, you've got to take some out. You've got to make it real. One thing I always hated was having to bring a check to pad my account. But a lot of traders, they'll just take what they make over a 2-week period, and they'll just take it and keep kind of a baseline amount in their account. If that baseline is $5 grand, you made 10 grand in 2 weeks, you take the 10 grand out, you keep that $5,000 baseline in there. So this Matt, or the guy before this, who was just making $300-400 a day, consistent, profitable, taking a little bit of money. I mean, that's, to me, at this point in my life, I'm not real big in taking huge risks and making and losing big amounts of money anymore. I go for the consistency, and I go for whatever the market will give me. I'm happy, and I take it, and we get paid.
Yeah, we do. Cool.
Yeah.
Matt,
all right, what else we got here?
We've got Matthew H. from Toronto. He's been trading NASDAQ primarily. He's dabbled in the crude oil, but 78% winning days and an average P&L of $1,600. And the one thing about Matthew is he might want to consider getting out of his losers a little bit more quickly, as he doesn't take a lot of trades in a given day, and I'd love to see him dump those. He's great about letting them run when they're working, but you got to get out of your losers and liquidate that. Don't even reverse necessarily, but it's hard to do, especially when you had some money before. Even $500 is a ton of money, but it doesn't feel like it when you had 1,000 5 minutes ago.
Right. Yeah, but it's so important to, as a rule, personally, if I'm up $1,000 and I give 50% of that back, I walk away.
Yes. Yeah.
I've had enough days where I've been up big and given it all back. So now, it sucks, because I know I was up $1 grand an hour ago. Now I'm only up $500, but I'm up $500. If I walk away, I can do it again tomorrow, and the day after, and the day after. Well,
and you know what,
some
John?
Consistency, I hope.
And you know what, John? When you wake up the next morning and you go to prepare for the markets, and yesterday you actually made money, that feels really good for that trading day. And that emotion of feeling like you missed out has kind of like faded. because your next day is a totally new day. But knowing the fact that you made money yesterday, even though yesterday you were just hot and emotionally, and be like, damn it, I gave up half my day. 50% is a good rule of thumb.
Yeah,
on keeping your day. Also, that's why our payout policy is 50% up until you get 30 winning days, and then you can take out 100% because we always want you to have that cushion. The cushion's confidence, the cushion of keeping money in your pocket, even if it's during the trading day where you're up 1,000 and you keep half of it, is good confidence. We want to manage our confidence again, keep ourselves in that sweet spot of trading. Is very, very important.
Yeah, you can always trim a little bit less off those winnings the more you're up. You're up 1,000, keep 50%. You're up 2,000, keep 30%. You're up 3,000, keep 25% of it. But you're absolutely right, Michael. Coming in the next day and seeing that account balance better than it was the previous day, it's always a good thing. And mental capital is important as actual capital when it comes to trading. Happy traders make better traders.
Yep,
right,
that's my point. Is mental capital, managing your mind state, your psyche, your managing your emotions, controlling your behaviors. It's always nice to come in. All right, sorry, Brett.
All right, Brett, what else we got?
The toughest time to make money is when you have to make money in the markets.
100%.
The last trader we've got is Moulet, and he's in the live markets, primarily S&P trader, and relatively new in the account, and only been in it for 4 days, but is a live trader. Their account balance, they've taken $3,000 out of the market today, and what I like about them is they got off to a little bit of a rough start. Today is their 5th day in the account. They got back to level with their starting balance. It's time to not swing for $3,000 in a day. Pump the brakes, maybe even think about how Jed does it, working for the $363 a day. That is the way to start in the live markets, particularly because it is tough to take money out of the live funded level markets.
The one thing I like about you sharing this one is the fact that Moulet is taking profits out. He's taken a payout of $3,000. So that's great. Rule number 1, get paid. We're not here to trade. We're here to make money trading. This isn't, unless you're just here as a hobbyist and you just like to play the Sudoku game, go play Sudoku. But Moulet doing this is great. Sharing that traders aren't all just hot streakers and crushing it, guys. That's why don't get discouraged when you're trading. But thank you for bringing the Moulet and also the Vice. And I'm sure you would communicate with Moulet and not just on TopstepTV, because that's also what our risk managers do is connect with traders that are either struggling or doing awesome.
Yeah, it's fun to call out a trader at times, and a lot of times I told myself a certain thing, and then sometimes it took somebody else being like, Brett, what are you doing, man? And it's like it strikes differently somehow, even though I was telling myself the same thing. Suddenly when Hoagland is walking up being like, Brett, come on, think about this. It's
right.
Like, yeah, I guess you're right. And maybe it's humility, but love to see these guys all taking money out of the markets and as well as payouts from Topstep.
Right.
And want to see them keep that going.
Well, we're glad you're here with us, Brett.
Yeah, very glad you're here. Next time you get on, we're going to have you guys kind of explain what's behind you. I see some framed up stuff, and I haven't been to that office since you guys put the stuff on the a lot of this stuff on the wall. So great kudos to you guys. But we're gonna want to get an idea of what's going on behind you. But thanks for joining. This is great.
Thank you both very much. Thank you all very much.
All right,
you guys have a great day. Trade well.
You
Great
take care, partner. Thanks a lot, man. Take care. All right. Right, mate. Well, we've got Shop Talk coming up next. We're going to take just a short break. Get yourself a nice hot coffee, a hot tea, bourbon on the rocks, a juice box, whatever floats your boat, and we'll be right back.
Well, let's actually take maybe 30 more seconds here.
Okie doke. Oh, we've got 30 seconds. Okay. Well, what would you
Yeah, I want to get your coffee.
Yeah, you
run and get your coffee.
Yeah, 30 seconds. Joe, let's talk about the markets real quick. Let's get an update. John, if you're looking at the S&P right here, and
Right.
you're looking at your volume profile, can you zoom in on there? We're down here.
This is a more clear volume profile, so we'll take a look at this one.
Let's do that.
Here's today's session.
Follow along, everybody. It took me a while to understand volume profile, but what John is showing is volume in this histogram type thing. You can look at it from the right if you want to look at it a little bit easier, but you get the point of it. And the volume's at the price point. So right there is the price point of in the S&P. Just stop at one point, John. Right there. It is 45.24 half.
Right.
That's the volume that was playing at that price discovery, auction prices. That's what these markets are really about. Is us, liquidity, people coming in and out of the markets are putting a discovery on the price of the market. So for every buyer, there's a seller. So then there's two people that agree that price right there is what the market.
The agreeable price, right?
An agreeable price.
Yeah.
That does matter. And then it's just like a lot more volume that is trading at that price. So that's why this is important. Volume's pretty important. We're not saying this has to be your indicator, but we'll talk about this one. And,
we'll be talking about this from time to time from now till forever because it is so important to me and to Michael.
Yep. And then John's a great guru at it, of explaining it. So ask your questions. But again, to each his own on your own strategy. We are not here to push any strategy upon you. Actually, we're here to just talk about the markets, and then you can decide where you want to do your thing. So, John, really quickly, what do we have? It seems like it's in this volume no man's land. It's coming down in.
Well, yeah. See, now we're extending the range. So the first hour is the initial balance, and it's marked here in blue. So we had our kind of a volume bubble here. This was the volume shoulder that in the NASDAQ, you took that short. Now it was, there was a lot of risk in it. So you only took one contract, which is a good trade. Now we're seeing the market coming back into value from Friday and marking acceptance. So there's a pretty good probability that price is going to bring us down to the low of value down here. Let's call it 45.09, 45.08 area, and we're going to see if that actually happens because again, value area takes us down to 45.08. We're showing signs of acceptance. Probability states price can come back down to that level. That's going to take all of our overnight inventory out. If we're looking for opportunities to buy weakness in this market, this area down here around settlement, value area low, this is an interesting area, but I'm not really looking to kind of go reversion on this trade until we get to a much more comfortable level.
So you don't like
over and short time frame controlled. Yes.
Okay. You don't like go to the NASDAQ real quick. You don't like. I should say, do you like getting short? Because I'm looking at the next, even though this 30-minute would say. No, yeah, but the continuation, the validation to the lower side, I mean, it has me feeling like a short would be in here.
So
there's nothing on the tilt. It's 55.45.
There's a big difference now between the S&P and the NASDAQ. This is the NASDAQ profile, volume profile, TPO profile. NASDAQ has failed to extend below the initial balance.
Got it.
But it is showing signs of acceptance inside value, which could bring price lower. So the NASDAQ at this point is still a buy because it hasn't extended the initial balance. It's still a buy down here.
It is also the strongest by percentage. If you guys look at the percentage up or change, it is the stronger of the markets today. So that makes some sense. What John just said about the opening. Sorry, what was the opening range?
Opening range was up here.
Yeah. Oh, so the blue. Hold on. What's the blue again?
The blue is the initial balance.
Okay, initial balance.
First hour of trade, first hour of the range. So far, what we're putting together is a normal trading day. Normal trading days never trade outside of the initial balance.
Ooh, okay.
So that's what makes this a buy down here. And also, I mean, this is cheap down here. If we get priced back down to this level, we're only risking a few points to see if we're going to keep the initial balance as the low of the day.
Okay, so cheap is in the 50, 40. What are you liking as far as what's the low of that initial balance?
Well, I want to give it, 3 points, maybe 4 points beyond the low of the initial balance. So we're looking at 35.33 for the risk. So anything close to that is good trade location. You could, by all means, risk 10 points on a long down here.
Well, getting in.
Gentlemen, real quick here. The meter's running and he doesn't come cheap. We do have Andre waiting in the shadows. If we can move on, we could probably bring Andre into this conversation also.
That's not a bad.
Yeah, Michael, we'll just watch and see what happens down here. We'll see if we get an opportunity.
All right.
You guys got me. Test. All right, cool. I don't know. It was getting
There he is.
There you guys are.
Hello, Andre.
Your beautiful faces. Nice. What's up, guys?
Beautiful faces.
Yes, it is.
All
Looking
right.
good.
Yes,
These guys are talking. Coming in Monday here, we've got expiration. We got the quadruple witching Friday. CPI Wednesday. Put some on the table for us, Andre.
Yeah, well, you kind of nailed it. I kind of touched on what I'd like to talk about a little bit. I guess, so I went to the Bears game yesterday.
Oh,
that was a disaster. They didn't have a game plan, or if they did, it was executed very poorly. So kind of got me thinking about trading.
How surprising are you on that? Just really quickly, how surprising?
Not very. I don't know. I guess I was hopeful going into it, but then reality set in and we stink again. So anyways, yeah, game plan. There's a lot of parallels between sports and trading, I'd say. And game plan needs to be carried over into trading. So I kind of wanted to share what my game plan was going into this week, break it down day by day and see what your guys' thoughts are. Maybe you guys have something to add, something we can share with the audience. Mm-hmm. And we go from there.
You know what? Real quick, Andre, it was funny. You mentioned game plan.
Yeah.
Me and Michelle are watching the game, and she looks at me and she goes, "Do they even have a game plan today?"
I'm telling you, man. I'm telling you.
From the wife. I know. From the wife. But
that's how you know. That's how you know it's bad.
Yeah, it's bad when the wife is talking about a game plan.
They didn't look prepared at all. And then, if you bring that into our profession, trading, our sport that we do, you're flying around blind and it's not going to be good. So I guess kind of what my prep was yesterday evening going into this morning. Monday, we're taking it slow. Obviously, we've been range bound all day today. I guess it's not really surprising. It looked like we wanted to push lower, but right now we're still in the range. So kind of watching with the volume. If the volume spikes, maybe jump in there and participate a little bit. But for the time being, it's just kind of sit on your hands, make some trades early. It's roll week also. So you got tread lightly, I suppose. That's Monday, so you're not going to trade too much. And if you do, you take your quick hitters and get in and get out like you guys did earlier, which was really nice to see. So that's Monday. Then Tuesday, we got, got to ramp up the trading, watch the volume, watch for participation. If there's extremes, if we break out of the range, like Hoag's always defining going into these days, if we break out, maybe there's some opportunity there. Otherwise, you're going to fade these extremes. That's on Tuesday. Again, light trading. But that continues to be the theme of it going into it. Then Wednesday and Thursday, obviously we got the big meat and potato days with CPI and PPI. Mm-hmm. We're going to pay very close attention to those numbers, see how they come out. If they both come out above expectations, we're going to break the range then. And typically they do work hand in hand. So we'll keep an eye on that. And if we do, we're really going to ramp up trading. We're going to take advantage of the opportunities that come into the market and really capture those profits. That's how we, that's how these traders trade. We're kind of like snipers. You got to take your shot when you got it.
Yeah, there's not too many shots today.
No.
You're right. But it's Monday morning. It is Monday morning. And and we have a whole week of trading. And sure, we keep talking about slop and chop and all that kind of stuff, but the markets could do it, whatever, with the information that Andre says is coming out. But quiet day.
It is quiet day. And you know what? Quiet days like this is what's great about TopstepTV. Come hang out with us, you know?
Mm-hmm.
If something
you don't want to talk about Disney, charter research, carriage agreement.
Yeah, I see that.
CNBC right now. David
miss me with that. Boring. Boring. But yeah, come hang out with us. You know, got a bunch of cool people coming in here, super knowledgeable, help you stay disciplined, help you stay accountable, you know, help capture opportunity. Hoag's always busting out those levels. Patak's taking advantage of them, slinging size. So we got a lot of good stuff going on here. You know, we're talking shop. We got the stats guy going. I mean, we got good stuff popping in here. So, you know, this is the place to be. It's really cool.
Did you see Danny on crude oil? So crude?
Yeah, he looked like Charlie Sheen from Major League. Wild thing.
Yeah, Ricky Vaughn. Ricky Vaughn. Big gap from what Eddie said. He looked like Larry the Cable Guy. So
I like that too. That guy's a hell of a golfer, actually. Do you know that?
Vaughn's been playing in the California Penal League.
So good. For all you youngins out there, go watch Major League. It still holds today. It still holds. Pretty good movie.
So what else do you got for us? Because
you
like to talk shop on this segment.
So I talk shop. All right, so I got to ask you guys. You guys are a touch older than me. You guys were actually trading at the time. And, you know, today is 9/11. It's September 11th. And, you know, we should never forget, you know, what happened and, you know, what became of it. But with that being said, I also like to hear what it was like trading on the floor, what it was like trading the markets from 9/11, what the lessons were learned, how we can carry those lessons on to today if we get into another crisis trade, whether it be COVID or the financial crisis or 9/11. You know, I think I started trading with I basically got baptized by fire with the financial crisis. So that's kind of how I learned how to trade. You guys were still slinging size. You guys were slinging size back on 9/11, correct?
I
just want to hear, what was it like? Was it panic? I mean, the markets were closed. What the hell what were you guys thinking? How the hell did you guys trade it?
I want to hear John. Yeah, I want to hear Joe. You guys had the trading floor, and you guys, yes, there's crazy stories. So John,
I'm all ears on this. This is like gold to me.
You know what, Andre? We're gonna talk about. I'll talk about it on Squawk Radio, but I mean, it was a regular trade day. Once the first plane hit, they thought it was just an explosion inside the building, and we had it on the jumbotron on the trading floor. So everybody was pretty much watching that until that second plane hit.
Right. Yeah. So you guys, how'd you guys get word? You guys just watching the news like everybody else was?
Well, the rumor was going around the trading floor that it was like a Cessna. Some trader was pissed off and decided to get revenge and do his thing. I mean, that was the rumor. And then the rumor of a water tank or something blew up on one of the industrial floors. So, I mean, we really didn't have anything to go on. But once that second plane hit, then it was like, you know, everybody.
Holy shit.
Stay tuned for this afternoon.
Mm-hmm. All right, so that's a tease. I like that tease. All right, well, that's Eddie. Eddie's going to tease us with some Squawk Radio. Hoag and Patak, I'd love to hear how you guys experienced it.
Mine's really quick, and then I think Hoag's got better stories. And
for sure.
Squawk Radio is a segment we have on after Fast Markets' top quiz, and that's a really great time for everybody to stick around. But then also Squawk Radio starts, and Eddie's on there with a special guest. And it sounds like, Eddie, they're going to be talking about some of that 9/11 stuff. So you can catch some stories of what's happening in the trading pit during Eddie and Hoagland, both on here right now, saw that in its craziness.
In real time.
In real time.
In real time.
They lived it. I mean, they lived it. So, yeah, please share.
Mine was pretty simple. September 11th. On my way to Econ 501, 401, something like that, and I had a long position on in just stocks or something. I don't know what it was, but I remember it was my last $30,000 trading account. And I went through 3 of them, real money trading accounts. I put 30 grand in, lost that one first on a penny stock, pump and dump, and like $97,000. Yeah, and then I lost 30 again because I built it up. I had a vending company, so I took all that money. And the vending company netted like $1,000 a week for an 18-year-old kid. You know, you built up that. Then I went to the markets with it always and blew out of my last one. a week after September 11th. Remember, the markets were closed for a week. And then, got in the library of the Iowa State. I got a phone call, and if you don't answer the call, we're going to liquidate all your position. I didn't answer the call. So, so that was my last one. That pretty much was where I puked out of everything. I still wanted to be a trader, and I came to Chicago after that to be a trader. In 2002 is when I moved to Chicago and learned on a prop firm. That's by September 11th. One little story, but John, give me a couple.
Well, that morning I was actually on vacation with my family in Myrtle Beach. My in-laws were also there. They were staying in another condo, and my father-in-law came knocking on our door. He's like, a plane just hit one of the World Trade Center towers. I'm like, no, it didn't. Come on. And so we turned on the TV, and he's like, yeah, they were saying, there was probably an accident, this, that, the other thing. And then we watched the second one hit, and I said, oh, this is not an accident. This is not good. So I called down to the trading floor just to see if everybody was going to be leaving. So my partner was putting his deck together, and when they saw the second one hit, he just put the orders down on the pit and went as far west away from the loop as he can, because nobody knew what else was going to happen. Yep. So I felt, lucky that I was where I was. I mean, I don't think we were at risk, but there's some pretty wicked stories for when the markets reopened the following Monday, because they did close the markets for the rest of the week. That's the only time in history that the New York Stock Exchange and the futures markets have been closed for that long a period of time. They're basically kind of contractual, like you can't have the markets closed more than 3 straight days, because you have to allow people the opportunity to get out. But so it happened on September 11th. It was in the middle of rollover, and when we went back to the floor on Monday, it was eerie. It was very strange. I'll probably have some more stories recalled for Squawk Radio and later on in the day. We look forward to seeing you for that. But I was lucky, man. I wasn't even in town. I just called, and there's one person that answered the phone. He's like, yeah, this is not good. Everybody is leaving. There's going to be no markets today. We don't know when the markets are going to open back up. Oh, just stay where you are, because nobody knows what's going to happen. It was very just surreal even to this day. But it's one of those things that you remember where you were when you found out about it, and you always will remember it.
Now, you do know that a plane had actually hit the Empire State Building at one point. Did you know that?
Not that day. That was
no, not that day, right? But in the past.
Yeah.
So I mean, it was
a small plane, though, wasn't it?
I believe it was a passenger plane, or we can look that up. But years back, decades back,
decades back before September 11th, decades before that.
Hey, so I got a question. So when that market did reopen, how did it trade? Was it limit down? I mean, or for equities, were they limit down? How that?
No, they were a lot lower, but I don't recall it ever hitting the limits.
Yeah.
I could be wrong on that. All I know is, from 8 o'clock until 4 o'clock, I never moved. I was in the pit, just wringing sweat, just constant filling, trading. It was. I don't think anybody actually wanted to be there, but the opportunities were really big. I mean, the markets were whippy. That was during rollover, so a lot of arbitraging the back month versus the front month and getting out in the spread. It was crazy, but by the end of the day, things seem to have kind of normalized as far as the markets are concerned. The risk had been assumed, and things just seem to, over the next few days, kind of go back to normal. There were a lot of guys making big money, and feeling really bad about it.
Yep.
I mean, somebody was going to make it. They were there making it. A lot of folks made a lot of money, but it wasn't a good feeling to make that money. But if somebody's going to make it, may as well be you.
That's very interesting because full disclosure, I felt that guilt during the financial crisis. A lot of us traders were making a lot of money then, based on people losing their homes, getting foreclosed on. Mm-hmm. There is a guilt there. There's a dichotomy there. A lot of maybe the dirty little secret in trading is bad news is good news for the markets, and we should be transparent about that. Volatility. Bad news brings volatility. Volatility brings opportunity, and opportunity brings profits, and that's just
psychologically. You have to get your head wrapped around the fact that things happening in the world that may be bad for other people offer opportunity.
Sucks.
Sometimes. And if you can't accept that, that risk is there, and you could lose a lot of money as well. But if you make a lot of money, there's is it a good feeling to do that? Or, do you find like, you made a lot of money that day, but you feel bad about it, so you give a bunch of it back? I mean, taking advantage of situations that are, negative to the world. Yeah, you have to be able to accept it and say, I could have lost money there. I happen to make money, and you have to be glad you did.
It's very true. I guess, just as recent as the COVID trade. I mean, that's the craziest volatility I've ever seen. COVID, obviously, I think all of us can say that, but
every day
we're going through a global pandemic, and there's profits to be had. And you don't just stop working. You don't just stop working. So
it's information, and I mean, as crappy as that information is, people getting hurt, all that kind of stuff. It's information. As traders, it's new information. It's going to change the state of the business.
It's true.
That your career is sitting on, and that your income's sitting on, and your job again is to be a trader. Yeah. I mean, I see that because at that time during the financial crisis, it was like we'll talk about September 11th only, but it gets emotional because at the same time, what's happening on the bigger scale. But again, as traders, you look at the information and you make trading decisions off of that information, which defines you as being a trader that can, seize opportunity. And, I get.
Yeah, it's not, sorry for being so doom and gloom today, but let's, sometimes we have to have real talk about this stuff.
Well, think about how bad the markets would have been without the liquidity 100%. Being provided by the traders that were there, that were willing to take the other sides of all that risk. It would have been absolutely horrible. The fact that the speculators were there attempting to make money on it and keeping the liquidity high did a good job of removing a lot of the potential risk outside of the trading arena for all of those people and all of those stocks and all of those commodities that went crazy. It was the speculators that brought things back to normal, that brought things back to a degree of normalcy. Sure. Without the speculators, if all the speculators said I'm not playing, S&Ps would have gone to zero.
Oh my God! You would have had super wide markets, super thin. You would have had horrible fills. Mm-hmm. I mean, that's where speculators bring the volatility in, because if nobody's playing, then you're like, hey, 50 bid at 400. That's a huge spread. But as you guys looking at it right now, it's like a point. 27 bid at 28.
Yep.
And so. That's where we as liquidity providers, and we're small ones, guys. We're small, but there's
lots of us.
But there's lots of us that end up being bigger. So
there's a recurring dream I have, and I'm standing in the S&P pit alone, and I get an order to sell 1,000.
Oh damn!
And there's nobody in the pit to sell it to.
Oh shit! That's a nightmare.
So I just offer it down, offer it down, offer it down, offer it down, offer it down. There's nobody to absorb that. So I'm just stuck here offering the market lower, and there's not even anybody in the pit. I wake up like this.
I've had those dreams.
Oh my God.
Where you have a position on and then you wake up, you're like, oh my God, thank you. It's not real. All right, Andre, thanks for coming on.
Sorry.
No, if we don't talk about things that happen in the markets and how traders responded to those or experiences, we don't have a tradertainment show, and that's not what Topstep.
Yeah,
TV.
it's real talk. It's real talk. But that was awesome. I appreciate that, guys. I'm gonna take that into the rest of the trade. Looks like the markets are upticking a little bit, so maybe we. All right, I'll call you guys later.
All right, thanks, Dre.
We'll see you, Dre. Thank you.
Yeah, Mike, your longs down there in the NASDAQ we just talked about that looks pretty good now.
Yeah, those that weren't paying attention or weren't on, we were talking about a low risk play in the NASDAQ.
Right.
And if you're long, which not very many people here trading at Topstep, 62% of people are long right now at NASDAQ. I missed it. Yeah,
we got that failed range extension in the S&Ps to the downside. Now that's already turned around and headed back higher. Rotational day. Yep.
How's the trades coming, guys? Let's talk about some trades here before we got Stat Guy coming on next.
I haven't traded since I put 2 trades on today. I'm up $930.
And I'm even, and I'm happy.
Even and happy. Jack, if you want to jump over to my screen, we can do that.
Now let's watch the NASDAQ here. NASDAQ's got some momentum.
Yeah, it does. So nothing happening. But John, going back to the long that we were talking about, the cheap long.
Right.
Yeah, the cheap long. So you can see the P&L down here. Highlighted down here, yellow, whatever. I don't know. I'm glad I'm up. I haven't seen much. We talked about it being choppy and sloppy and crappy, and it is.
Mm-hmm. It's rollover, baby. Rollover,
baby. I'd be on some type of vacation or staycation in Chicago during this time when I was trading on the floors.
So many directional traders in the pits took that 2 weeks of rollover off.
Yeah. So what are you seeing? I mean, you got volume profile right here on the 30-minute. Poked its head above here. You have low volume in these.
Low volume above. We're at the kind of the upper shoulder of the distribution that we're currently in. I mean, this is a short here somewhere, but we gotta remember risk.
Yeah. You wouldn't be buying pullbacks right now, would you? Right in the middle of this range.
No, not. I mean, there's still the looming gloom of the value area special situation play that could take us back down to settlement in the NASDAQ. So I'm looking at the volume. Do you see that low volume node on your chart there, the bottom left one?
What, down here?
No, you're on the right chart, but the low volume node just above where price currently is.
Oh, yes. Right here.
There.
Yeah.
There. That's where the current distribution of volume and time, and you're at the upper end of it. So that offers opportunity. The question is, again, where's the risk? Now, 92 is where you got your short the last time up there?
Yeah. It did just go to 02, right? Let me go high of this bar. High of this bar is 02, 602. Right. So that would have been, of course, a good area right away. But let's look at the S&P up here on the 30-minute. It's still, I mean, you don't have a low volume node until you get 6 handles higher.
Yeah, S&Ps are right in the middle of the range. They're right at the point of control. The S&Ps are not offering an opportunity here. The NASDAQ up here is, I mean, it's basically trading point of control, but it's the upper end of the area of volume. So that allows us to limit risk. What the risk is might be a little bit thick, right? Because let's see if we can see this here. Okay. I'm going to make this really big because here's the area of volume. Here's the acceptance area from today's profile. We're at value high.
Let's jump over to John then.
Oh yeah, I'm sorry. I forgot.
You're fine. And then I want to jump back because John, I'm not trying to seek out a position by any means, but we are coming up to this low volume node area that you're talking about.
Right.
And to show people, kind of what we're talking about, putting on a position wouldn't be half bad for educational purposes. But technically, I would like my day at 9:30 to stay at my day at 9:30 or above. So tell us about what you're seeing.
So on this platform, you can see this is the low volume node that we would be leaning against to look for a short up here. So as long as we don't get back up into this higher volume area up here above like 14, that's where your risk is. That's where your risk is up to about 615, 614. So if you're going to be looking for an opportunity, you want to try and get as close to that risk as possible to limit it.
Yeah. Okay, so that's what I'm looking at. When we jump into Stat Guy here, I'm looking for the 615 area. I'm watching it. 610 when it starts cruising up there. 620. I'm going to actually run to the restroom here while you're talking to Stat Guy.
Cool.
Forever. But John, these charts, so everybody can see, maybe we need to get the volume profile a little bit easier to see in your charts. I think they're a little easier on T4 right here on this chart.
They are.
But,
especially if you have the profiles and the TPO, because this is the volume profile right here.
I do have TPOs.
Very visible.
TPO.
Very detailed.
Yeah, volume profile. So, tell us how you're doing, everybody. If you're in Discord, that's what I'm watching. If you're in YouTube chat, we got other folks watching that too. But let us know how you're doing today. Are you getting chopped up? I know Jimmy V, thank you for sharing all your stuff in the TopstepTV Discord channel. And then also I love how Shaw came in there and said, hey, if everything fits your strategy and risk profile, stick with the trade. That right there is traders helping other traders. And all Shaw did to Jimmy when he shared his I'm long 3 from 45.28. This is earlier, about an hour earlier. I'm just kind of sharing how traders helping traders in this channel is really what Topstep Discord is all about. So go to Topstep Discord, Topstep TV channel in Discord, and you can. I know that's the one I'm watching. So got traders helping traders. Even if Jimmy V didn't make any money today, and he said that. So Jimmy, I love your transparency. We learn from other traders. But anybody else, share how your day's going. We'll talk.
A lot of comments coming from the YouTube channel. Seems like comfortably up. Most of the traders here.
Ooh, nice.
One trader did mention that didn't follow the rules and got caught. So and earlier we talked about that game plan. If you're putting a game plan together, use it. It's there for a reason.
Very nice.
All right, I gotta go to the restroom for a reason right now. I'll be right back.
All right. Whatever reason it may be, we're going to take a short break here. And if you like numbers, we got more numbers coming up here. We've got Rob, the professor, the stat guy, going to be with us here in just a few moments. We'll be right back.
So this morning I got right back into my routine again, right into my.
Robert, I hate to interrupt, but we're getting signals that there's no sound.
There's no sound.
Now it's back. Got it. All right. Sorry, Robert. Go ahead.
Okay, where did I leave off?
Well, you were just getting through your weekend.
Welcome.
And then how we moved the stat session a little bit.
Okay,
Right,
yeah, it was good. Go ahead and I see. Michael's coming back. Looks like we were just trying to set up a couple shots there with the touch screen. And we have our friend Jack, who we lovingly call God, G-A-W-D or G-A-H-D, taking care of that. But I see Michael is back in the chair also. So the weekend, yeah, it was really good. And I was just saying that I like that we moved the stats, after last week. It was a little rough there in the morning because during fast markets, we want to get in there and make those trades. And trying to go back and look at all this, crazy stuff I got on the board here doesn't make much sense, right? So I'm glad we did this, and I was able to have my nice carnivore breakfast this morning, like I like to do around 10 a.m. 10 a.m. Eastern time, 9 a.m. Central time. Pound and a quarter ribeye with a half a dozen eggs, over easy. That's the way to go, right there.
My goodness, that is a
animal. What do you got?
All right, we got some stats coming up here. We like to start with just a couple community stats, how everybody's doing overall in our community. Last week we had Chloe S in the XFA with an 11-day winning streak. That streak still holds. It has not gone to 12 days simply because she did not trade on Friday. So that 11-day streak, when we set it on Friday, it's still the same today. It's still in the lead. So congratulations again, Chloe. Taking it easy. Probably someone who listened to the show and said, I'm going to take Friday and Monday off. I'm not going to deal with this contract rollover stuff.
There you go.
So yeah, TopstepTV making marks as it is right there. So congratulations on that. Hope you keep it going the rest of this week, and we will be keeping an eye on it. Traders, last week, we like to look at the trading duration, and there's two things that I'm going to highlight in this particular segment is how long we're holding on to our trades, winners and losers, and the ratio and the reasons why traders are looking at NQ over ES. And stand by, because it's going to be a little tough one at the end, right at the end of this segment. I got some good math for you.
Awesome.
But for right now, we have our average winning trade duration. This is for all accounts. This one is not. This is combine and funded accounts, so this is clear. This is a combination. The average winning trade duration is just over 20 minutes, and the average losing trade duration is about 8.5 minutes. So that's a good thing. We have our traders, combine and funded, holding on to those winners when they get them and they go in their way. They're holding on to them, letting them go a little bit longer, and then taking up. Yeah. So the rate on that is it's about 2.5 to 1. So if we're holding on to a trade, let's say 10 minutes, then 2.5 times would be 25 minutes on the other end, which is just about what we're seeing, and that's a good thing. I just had to share that because that's what we like to see.
Yes, and those muscles there's something that you have to develop just to be able to stay in those winning trades a little bit longer.
Yeah, exactly. Last week, holding true, NQ still had twice as many traders as the ES. And stay tuned for the last few minutes of this segment because I'm going to share something with you for the reason behind that. And maybe we'll get some more NQ traders. NQ, my favorite, pushing that sucker right up. On to some individuals. We just have a graphic we show up here so everybody can see it. And we have at the top there, Eric L. Eric L. has a previous day of 1592, previous day meaning Friday. Eric has an average winning trade of $480, an average losing trade of $534, as we can see right there. So the interesting part is the winning trade percentage is 63%. So he's winning more than he's losing. But those winners need to be a little bit higher than the losers in order to.
He has to. He has to be winning more than he's losing because
absolutely
of his reward over risk.
Absolutely. If you have a 1-to-1 reward risk or risk reward, whatever number you want to put it, and you're 500 one and 500 the other, you got to break even. So when you have a winning trade that's a little lower than your losing trade, and I'm fully disclosed, my losers are bigger than my winners, just so people know, but my winning percent needs to be higher in order for that to make sense. So I'm sure that makes sense. The good thing is he's holding his trades for quite a bit of time and cutting off the losers, so that's good. Trades in ES, trades NQ, took 16 trades. Pretty good. Just try to get them losers out a little bit sooner. And I'm guilty too, because that's just the way I do it. You either got to get those losers out sooner or win a little more of your trades. And it's easier to cut the losers than it is to win more. So keep keep that in mind.
Yeah, a lot of that has to do with time frame too. I mean, if you're a short time frame, you can get a higher winning trade percentage, but what are they worth?
Right, exactly. That's you're 100% right on that. And I love these stats. So 100%. Moving on to Bernard, and all these trader stats are all express funded accounts. I like to highlight the funded traders when we do these individual stats. Bernard A has an average winning trade of $161, a losing trade of $48. That is super, super good, right? We're talking almost 4 times the amount here. Right, that's quite a bit. 3.6, whatever it is.
Very
right?
good. Yeah, very
97% win rate. 97%. But here's the kicker on Bernard. See that average daily profit on the right-hand side? And if you're not looking and listening,
very active.
Yeah, $9,390. Now, why is that? Bernard is a true scalper. Bernard took 61 trades in ES last Friday. All right. The reason he has an average daily profit of $9,390 is because he's traded one day. It's his first day in the XFA. The guy's up almost 10 grand. And this is by taking winning trades of $161, folks. We don't have to shoot for the moon. $9,000 on a day, taking 60 trades, ES, and managing your risk. 3.5, almost 3.3 win to loss ratio.
Right.
Beautiful. Congratulations. Beautiful, beautiful, beautiful.
I don't know how he has that much energy. I don't have that much energy, but I'll take the $9,300.
Exactly. I'll do that in a day. That's great.
Fantastic.
Samuel G was on here last week, a couple of days, because he was really killing it. Had a little bit of a rough day on Friday. And here's the reason. Brett, risk manager, alluded to this earlier. Samuel is trading 14 different markets, so that can be a little tough right there. So you're looking at the Friday stats: winning trade of $251, losing trade of $1,200. Can't be doing that, and I am 99.9% sure it's because of all the bouncing around Samuel is doing. Now, Samuel, if you're listening to this, it's not what you did the first few days of your combine. So for some reason, we changed it up going into the funded group, started switching around contracts, started holding trades differently than you did to pass it, kind of coming back in a little bit. So hopefully...
Yeah, gotta dance with the one you brung.
We could only remember that clause back in the day, right?
Right.
So he's still up, though. He's over 10 trading days, averaging just over $1,000 on 10 trading days for the average daily profit. But we definitely need to, Samuel, to keep an eye on slowing down those markets. I think it's just a little bit. Maybe there's some movement going on with the contract roller. Well, this isn't looking right. There's more volume here. Let me look at this instrument. Let me look at this contract. Kind of bouncing around a little bit. He did trade several instruments before, but 14 different ones on Friday. Just be cautious of that unless you really, really know what you're doing. So I'd like to see him get back into the swing of things, what he was doing. I'm sure he'll wrap it up this week, though.
Well, yeah.
Super trader.
He got there doing one thing. He got to the XFA, and then he started doing something different.
Mm-hmm.
You know, that just you got to dance with the one you brung. What was succeeding to get you there? Start with that. You can always add things. You know, I know some people are kind of product agnostic. It's all in the setup or what's on the charts, what they're seeing. But that's a lot of jumping around. And if you weren't doing that in the trading combine, maybe wait until you pad that account before you start looking for other stuff.
Yeah, that's it. Right. The same sentiments I would say there. You know, if you were trading 10, 12, 14 markets through the combine, doing well, being successful, and you have your process down, like I said, you know, maybe some type of product agnostic, or just I'm going to do this. Right. That's okay. But when somebody goes from trading 4 or 5 products, you know, but they're similar, ES, NQ, RTY, down, and all of a sudden you start throwing in silver and platinum and, you know, and bonds and currencies, just to trade some more, that's when you can get into trouble. Don't want to beat that up too much, but Samuel, you're a good trader. Express funded account, been taking payout, still has over 11 grand there. I'm sure he's going to wrap it up and he'll get it together.
Yes. All right. Well, you hope he will, and he definitely has the opportunity to do so. So let's get it straight.
For sure. So while we're getting my little fun stat thing that I put together that our Jack guy is going to get ready for me, I'm going to share a live funded stat with you. Now, this is only live funded traders. I'm going to thank MP for this. He messaged me over the weekend and said, hey, this is what I want to show everybody. So this is what we're going to show them. Yeah.
Live trading.
Only live. This is not express funded. This is not combine. This is straight up live accounts. All of our live traders lumped into one. Here it is.
Drum roll, please.
Average winning trade, $505. This is for last week, by the way. This is the whole week last week.
The whole week. Okay.
Live traders all week last week. Average winning trade, $505. Average losing trade, $387, and that is a win-loss ratio of 1.3.
Okay.
So our live traders, their average trades are more than their average losers.
That's good.
Ta-da! That equals a positive P&L. That means our live traders are taking payouts. That means our live traders inside of TopStep are taking payouts and helping the company out as well.
Excellent.
That's what we love to see.
We definitely love to see that. We want to see good trading at the live level. We want to see consistent trading from your trading combine to your XFA. Similar strategy, because that's what you got. That's what got you there.
Right.
And that's good.
Yeah, absolutely. So we have everyone's favorite stat, and then we're going to close up with some stats I put together. You are going to have to put your thinking cap on just for a moment, because it's a little complex, but I think I broke it down pretty easy for you here. But everyone's favorite stat. Last week, 1,198 traders passed from the combine to funded accounts. That's the move we set up. It was a little less than the week before. However, we only had 4 trading days, and there was a little bit of a difference there due to contract rollover on Friday. We had a lot of traders not trading on Friday. So that is to be expected, but we want to put that out there. 1,198 passed the combine into funded last week.
Nice.
Very nice.
All right, we got one more for you. If we can get that up there. There it is. Now, it does say Coach T. I'm Coach Robert. We'll have to make that an R. But actually, what we're doing is we're putting a template together, going to make it look nice for you. So we're just using this Coach T sample template right here just for a moment. So bear with me on this one. But here it is. Try to follow me on this. I'm going to go a little bit slower. I tend to talk fast, but give me 1 second to go through this. It is important. The question I ask myself is, why do we have day over day, week over week, at least 2.5 times more traders trading the NQ versus the ES? I had to ask myself that question, and then I had to dig into the system and do a little bit of math on it. It wasn't hard, but here it is. The NQ is $20 a point, ES being $50 a point. That's 2.5 times, right? $20, $50, 2.5 times the amount. So I look at the average true range over the last 2 months. The ES is 50 points a day. The NQ is 250 points a day, roughly, average true range, how much they move up and down. But that's a 5 times difference. So the NQ is moving 5 times further than the ES, but the ES is only 2.5 times more value per point than the NQ. So what does that mean? Let's just take a 20% move. Let's just say we get in a trade in NQ, 1 contract, we get in a trade ES, 1 contract, and they both move 20%, and we win 20%. 20% move in the ES, right? It's only 10 points. It's moving 50 points a day, 10% move, 10 points, that's $500. 10 points, $50 a point, $500. The 20% move in NQ is 50 points, because that's 50 points. It's 10% of 250 points a day. Right. But at $20 a point, that's $1,000. So if I entered 1 contract on both, they both moved up 20 points, and I won both 20% and won both trades, I would have $1,000 in NQ and only $500 in ES. So that is one of the reasons I believe that we have a lot of NQ traders. We want the movement. We're after the money, right? That's what we're looking for. The disclosure here, the disclaimer here is that you can lose just as fast, and that is the point I want to make here. There is that ratio difference. You can win it, and you can lose it just as fast. Okay? 20% up, 20% down. You're going to win 500 or lose 5, or you're going to win 1,000 and lose 1,000. So I think that's the lure of the NQ. Go ahead, Michael.
One handle move, 45.22 to 45.23 is how many handle move in the NASDAQ, roughly?
Well, yep. So if you're looking at it, it's a 5 times difference. So that would be a one handle move. So you would go 5 handles in NQ. So if I just pick a number of 15,000, call it 600, that would be 15,605. Okay. So you're looking at a 1 point move, a one handle move in NQ. Excuse me, one handle move in NQ. The number you gave there, up by 1 point, one handle, round.
No. One handle in the S&P equals 5 handles in the NASDAQ.
Yes, for the most part, and this is the average range over 60 days.
For the most part, yes.
Exactly, for the most part. But the NQ is moving roughly 5 times further than the ES on any given day. Okay, so that would just be if the ES moved 100 points one day, 100 handles one day, you would expect the NQ to move around 500 that day. So if we're working on percentage and say, hey, I'm going to trade the market, and I'm going to go for a 20% move in the market. If you did that on ES with one handle, one contract, you get $500. That same trade on NQ is $1,000. Just something to think about. And I had to do the math on. I had to look back and see, why are so many traders attracted to the NQ? I'm one of them. Why do we always have at least 2.5 times more traders on NQ than ES? Why? We like the movement. We like the lure. We like the money. Point of that whole tangent is, and whole rant is that you can lose just as fast. So you got to manage that risk.
So in the end, it's managing risk.
There's I think a psychological thing with the NASDAQ too. I mean, everybody wants instant gratification.
Right.
When the NASDAQ starts flying, man, it looks great when you're right.
Exciting. It's tradertainment. It's exciting.
100%.
Robert, thank you for coming on here. This is helpful. Anybody needs to want to hear more stats, please share in the chat. Oh, also, Eddie, are people smashing that like button? Did we get Hoag to where we need to get them, the 625?
I think we have accomplished that. There is 680. Smash it. Yeah, we've surpassed that. So yes,
Johnny.
So, what is it that I have to do again? Which one? Yeah. Which one won?
I think it's the wig. Is it the wig?
It's Danny said it was Fu Manchu, right? I don't know. We'll follow up.
We'll figure it out. Let's put it this way, John. You got all week to do it. Okay.
Okay.
All right. Do it.
Oh goodness! I saw what y'all did for Danny. Congratulations on everybody doing that like button, getting Danny on that cutoff and the tie was a beautiful thing. We got Hoag coming up. We saw Michael have his stuff.
Right.
Don't put me on that list, guys.
You're on it.
Oh, you're on the
list. All right, guys. All right, have a good one. Trade well.
Thanks, Robert.
We'll see you, Robert. All right.
Thanks, Robert. Yeah,
all right.
Still rotating here in the S&Ps. Go ahead, Eddie. I apologize.
No, I just want to say coming up in 5 minutes, we got Top Quiz. And once again, we will be giving away 150K combines for the top 3 winners. And if you look into the YouTube, and I hope you put it in the Discord, there is the link. It's the Kahoot.it. And Jack will be up here with the code coming up. Oh, there it is right now. There's the code. If you want to join, we've got some people that have been playing here, knowing what the directions are. So,
all right, guys, I'm out. That was a sleepy market today. Good stuff. Top.
Yeah, you had a good day.
Yeah,
good day, Michael.
I'm up $940. You want to know why, John? Because I'll take a bow in my chair. While Robert was talking, I went to center my ladder, and I had it on the bid side of things, and it got filled right away. And then what I do when you get filled right away on an accident, you get out right away because
absolutely.
Yeah. So but it made me $10. All right, guys, I'm out of here. John, great trading. Eddie, great stuff.
Nice job.
Great day.
All right, boys. All right, stick around. We've got Top Quiz coming up, and then after that, we will start our Squawk Radio little in the afternoon here. Am I still here? I think so.
Yeah.
Okay. All right. coming up this afternoon, we've got Coach's Call. Robert's going to join me again. We've got a lot of things to discuss. Also this afternoon, the Triple H Hour with Hoag and Horn, and we're going to be talking about that 9/11. So join us for that.
So I'll take it over from here, Eddie.
Oh, real quick. Also, can I just? We're going to be having a Jack Schwager podcast. So
good to know.
Stuff. Okay.
All right. Well, there's a lot of new people here. So if you haven't played Top Quiz before, at about 11, we're going to come in. You can go to kahoot.it, type in that game pin. I dropped the direct link in the chat a few times. Top 3 winners will be taking home 3 combines. So excited for that. For the next few minutes, I'm just going to turn on some music here as people get signed up, and then we will be back. All right. So get ready to test your knowledge. Hello, everybody. Welcome to Top Quiz for this Monday. I am Jack. I'm joined today by Bonnie. Bonnie, how are you doing?
Good. How are you?
Excellent. Well, Bonnie, you're going to play along today because I think you're in a competition with Alyssa to see who wins here. All right. So it's your first time. There will be 8 multiple choice questions. You get points for answering them right, first and foremost. And then you also get points for speed. So you want to answer them quickly, but you want to get them right. As usual, I give this. We're on an 8-second delay. It takes 8 seconds from me clicking the thing in here to make it appear on YouTube. So keep an eye on your device because your device is where the question is going to show. And when it shows, answer it as quickly as possible. And don't listen to us reading the question. We'll just break it down a little. So Bonnie, how are you feeling? You ready?
Yes, I'm ready.
Okay. With that, we are about to start. If you don't get in today, we do this every day right now. Let's see how this goes. We're about to start. Okay. Oh, I always hate seeing people come in at the end, but I got to cut it off somewhere. So let's go ahead and do this. Bonnie, one last time. Are you ready?
Yes, I am.
Enthusiastic. Perfect. All right. Let's do this thing. We are starting Top Quiz Monday. Our first question, which is appearing on your screen now, or 8 seconds ago. Which world continent has the most countries? Is it North America, South America, Asia, or Africa? Any ideas, Bonnie?
I'm going to guess Africa.
Well, you are 100% correct. Everyone knew it there. I would have thought Asia would be up there as well, which it kind of was. All right. After one question, the scoreboard. Negbook is at the top, and Richie Trader and Out of Time are in the top 3. Let's go to question 2. When the futures price of a commodity is higher than its spot price, this is known as inversion, contango, slippage, or arbitrage. We were talking about this today earlier, unknowingly, with the roll. Any ideas?
I have no idea, but I'm going to guess slippage.
It is contango. That's a fun word to say. Bonnie is one of our accountants here. So futures terminology, obscure ones, maybe not her wheelhouse, but anything in the books, she knows it. Richie Trader knew it. All right, question 3. Once again, if this is your first time, I usually try and throw in 2 trading questions and then 6 random trivia questions, just because finding 8 trading trivia questions day in and day out would be very difficult. All right, let's go. Who was the tallest basketball player to ever play in the NBA? Was it Sean Bradley, Shaquille O'Neal, George Murasan, or Boban Marjanovic?
Oh, man.
Are you a basketball fan?
I am, but I do not know these players.
Well, the person's not playing now. It is George Murasan. George Murasan at 7'7". I remember seeing him play live once. It was quite something. He was also in some movies because if you need someone who's 7'7", not many options there. All right, let's see what we got on the scoreboard. All LK, Alk, and Bashy. I remember Bashy. Bashy has been at the top here before. I'm going to check the chat real quick, making sure that nothing's exploding here. We're good? Okay. Next question. The highest number of points you can get in one round of darts is 50, 100, 180, or 240.
I feel like I knew this. I just learned how to play darts.
This is your moment to shine. What do you say?
180 or 240? I think 180.
It is 180, or as they say when they show darts on ESPN, 180. They love saying that. So if you hit triple 20 3 times in a round, And seems like you guys are some dart players out there. Bashy moves into first. Evan and Nate Money. Get that money, Nate. Roga and Brandon with 2 N's for some reason. Bringing up the top 5. On we go. What automaker's name is a word that means modern in its home country? Is it Toyota, Mercedes, Hyundai, or Kia?
I'm going to guess Toyota.
Is it Toyota?
That sounds kind of Japanese.
It is Hyundai. And once again, I'm surprised that people, if we were playing Who Wants to Be a Millionaire, the Ask the Crowd would be pretty good here because you guys, 90 people picked Hyundai. Good for you. All right. Bashy didn't, though. We got Evan, Nate $, and Double and Brandon in the top 3. All right. A few more questions. What flying bird has the largest wingspan of any species? The wandering albatross, the great white pelican, the Andean condor, or the Himalayan vulture? Any ideas?
I'm gonna guess Himalayan vulture.
These are all big birds. I pretty much took the top 4 of it, but it is the wandering albatross. So just in case you wanted to know. And with that, Evan and Nate Money still on top. Okay, we got 2 questions left. All right, you've already hit the quota of 2. These are not the easiest questions. So Bonnie, you're doing great.
At least I got 2 right so far.
Yeah, exactly. It's not on top, but firmly in the middle. According to a Consumer Affairs report this past July, what city in the U.S. has the worst drivers? Is it Los Angeles, Memphis, Chicago, or Baton Rouge?
Since LA has the worst traffic, I'm gonna have to guess LA.
Well, I think they put into this how many accidents there were. So I guess there's a lot of traffic in LA, but they're sitting in traffic because they're not plowing into each other. It was Memphis that has the worst drivers. Baton Rouge was number 2. I didn't see in the top 10 or 15 Chicago or LA, but I can look back at it. All right. We got 1 question left. Nate Money has taken the lead, but it's all within reach. Let me check the YouTube one more time. Yeah, someone's asking representation of how fast people can Google. Don't Google, folks. I think the idea of the time limit and the points is that it shouldn't be able to help you that much, but, it's all between you. All right, last question. You ready? Following the burst of the dot-com bubble, how many years did it take the NASDAQ to break its March 2000 high? Is it 5 years, 10 years, 15 years, or 20 years?
I'm guessing it's either 10 or 15 years. But I'm going to go with 10.
Oh, so close. It was 15 years from March 2000. It took till 2015 for the NASDAQ to get back to that level. That's a long time, but it was very expensive in March 2000. So are you ready to see the winners here, Bonnie?
I'm so ready.
Okay. In third place, Evan. Just going with the first name. Love it. Second place, Business Beyond. And in first place, our winner is Nate Money. Nate Money, Business Beyond, Evan, congratulations. I'll email you later with how to claim the prizes. In the meantime, thank you everybody who played today. Thank you so much, Bonnie, for joining. What we're going to do right now is take a little bit of a coffee break. And then Eddie's going to come in with Squawk Radio for the afternoon. So if you want to hold tight, keep us open in another browser tab. We'll be back really soon. But I am also the person that has to do this because I'm producing this behind the scenes. So I have to set that up real quick. Bonnie, anything interesting happening to you over the weekend?
Nothing crazy. The weather in Chicago was very nice, so appreciate that. The last little bit of summer. So
awesome. Well, thanks so much. Thank you all who like this. I love doing trivia stuff, so hopefully you do too. All right, Bonnie, we're going to send to a coffee break right now, and then we'll be back soon with Eddie. Talk to you soon.
All right. We're back. So who won? Do we have some winners here? If you're just joining us right now, we did have Top Quiz. And we did give away 150, 100, and a 50K combine. So make sure you're here tomorrow. And I know that number keeps getting larger and larger and larger. So the competition keeps getting stiffer and stiffer and stiffer. So I don't know. Great questions that Jack's putting up there. Market-oriented questions and a few fun questions in there. So give it a shot. Now, just to let you know, now I'm not sure let's see, we've got, oh my goodness, 741 likes today. Smash that button, smash that like button. Don't forget to subscribe here to TopstepTV and, of course, the afternoon Squawk Radio. Smash that like button, subscribe. We want to see some more numbers, but I think we've got John doing something. I'm not sure. Jack, what do we got John doing? Do we know? John, I think John is going to wear a wig or something. I think the number was 6.25. We surpassed that heavily, and we got 600. The Fu Manchu, or I don't know. Maybe somebody can help us out there. I wasn't. Hoag is online shopping for a wig right now. Danny says it. So I think it is a wig. Right. So let's give him a little fair time to get that wig. He's most likely not going to have it tomorrow, but if he does, he does. So Danny says Dan Mean says Hoag is shopping for wigs right now. So I don't know. Here you go. We should have a poll. Blonde, brunette, or redhead? What's John going to have? So we'll find out. But anyway, coming up here in about 10 minutes, Rob's going to join me. But I wanted to get started early here on our coach's call. And last week we were talking about game plans and such. We did talk a lot about that. But today I think I want to talk about, and I want to make sure that you can participate. Situations, issues, speed bumps, walls, things that you're having problems with. Now, not to say that everybody is having all of those, maybe some of those, or maybe occasionally you have something that needs to be talked about. And that's why we're opening up this part of the TopstepTV, where we can talk to our traders, we can give traders advice, and usually we bring in one of our coaches, but we're not going to have a coach today, but we will have Rob coming on in about 10 minutes. One of the things I wanted to talk about was emotions. We have not talked about emotions, and some of the things that sort of sneak up on us. One of that is emotions. I mean, revenge trading is something where you're actually doing it. You know, you're physically doing something. As far as emotions go, they sneak up on us, and sometimes we cannot recognize them unless it's too late. And controlling your emotions while trading, it's very crucial for making rational decisions and managing risk effectively. Now, emotions like fear and greed can cloud your judgment and lead you to impulsive actions, being reckless, just trading just to trade, revenge, like I mentioned, revenge trading. And sometimes I'm going to say most of the time, they result in losses. Okay, now sometimes that revenge trade can turn an account around. I'm not saying that you should do that, but I just want to be honest with that. It can work, okay? And it does sometimes. But here are some strategies put together to help you control your emotions when you're trading. Now, one of the first ones is obviously education, okay? Education and preparation. Now, what you need to do is you need to understand the markets, okay? Are you familiar with the market? Are you trading a new market? Is this market you've been trading for years? Understand the markets. Now, before you start trading, thoroughly educate yourself about the financial markets, trading strategies, and risk management techniques, okay? having a trading plan. Now, we talked about that earlier. You got a game plan. All right. If you put together a game plan, follow through with this, unlike the Chicago Bears did, and of course the New York Giants, getting it handed to them. But it just makes things much easier knowing what you want to do, what you need to do, and if the market is complying. So have a trading plan, have a game plan, develop a clear trading plan that includes your entries and exits. Okay, the entries and exit strategies, your risk management rules, and of course your profit targets. Now, following a well-defined plan can reduce emotional decision making. Now, I mean, I'm guilty as charged. Every once in a while, I'll start to commit a reckless trading crime, and it's I like to call it the trading crime, because what you're doing is you're sabotaging yourself. You're hurting yourself and your account. But most important, this is about you. So you're sabotaging yourself with a bad emotion. Now, one of the cures that I have shared with traders is always ask yourself, all right, if you're going to put a trade on, why am I putting a 2-lot here? All right, have yourself a good answer. Okay, if you don't have a good answer, more or less emotions are sort of relaying, and they're bad emotions, possibly revenge trading. Ask yourself these questions. Why did I move my stop? Why did I buy 3 here? Where is my exit? Where is my entry? All right. And if you don't have a good answer, then most likely you're sort of winging it. You're improvising. All right. Now, some traders don't have a game plan. All right. If that works for you, fine. Then you can just sort of sit back and listen to what else we're going to be talking about. So do that. Have a well-defined plan. It can and will reduce emotional decision making. So another thing too that I'd like to talk about is risk management. Let's take a look here. Let me pop up the YouTube channel. Excuse me. Let's see here. If you got any questions, by all means. Eagles did also, huh, George? Eagles did that too. Let's see. Any questions? If you could post them in the YouTube chat regarding what we're talking about, I'd be happy to answer that. Okay. All right. So back to our second category. And second category, risk management. Management to me is one of the most important things in trading. Okay. If you can't manage your account, you can't manage yourself. If you can't manage yourself, you can't manage your account. And when I talk about management, it includes both. If you can't have both, I firmly believe, and I honestly believe, that you're going to be in trouble. All right. First off, if you can't manage yourself, you're not going to follow rules. All right. You're going to be reckless. And that's what happens. And if you find yourself being reckless, if you find yourself making trades that should not be made, I mean, this is something where you've got to take a time out, take a few steps back, and rethink the situation. I got to work on management and write these things down. Talk about a journal. Some of us journal, some of us don't. But write down the good things that happen during the day. Also write down the bad things that happen during the day and go over them. And don't just sort of harp on the bad things. Enjoy the good things. I mean, this sort of builds confidence. This sort of helps you get through. So in a journal, if you don't want to have a journal, I know some of us get really deep with the journal with prices and trades and what the market was doing and so forth. That's fine. That's fine. You're doing your homework. You're doing extra credit. But what I want to do is simplify the journal on good things you do. And of course, you got to have the bad things you do. Now, if you don't do any bad things, that's awesome. Your day must have went very good. If you didn't have any good things, then the question would be, have you shut the day down? Have you shut the day down? And, oh, look at who is joining us here right now. We got Robert. Hello, Robbie.
Surprise, surprise. Go ahead and finish your thought there.
Okay, now I was just talking about management and so forth. I believe it's very important. So that's something to work on first, because I think management controls everything. Greed, FOMO, revenge trading. Because what you're doing is you're always checking on yourself. That's like and I use this analogy being a pitcher. Major league pitcher. You're the ace on the mound, okay? And what I'm saying is that second voice, you always have a pitching coach or a manager, all right? That is going to be that second voice. That should he pitch another inning? Should he hit the showers? And you've got to be that voice that says, you know what? Hey, I'm doing pretty good today, okay? I'm gonna see if I have another opportunity for another trade. Or you've got to be that voice that says, you know what, you've had 3 losing trades, you're down $600, you're down $1,200, whatever. It's probably best that we accept the loss, which is another problem that we have, and call it a day. And that's what I'm talking about, hitting the showers, okay? Sometimes even your good days, where you're spinning your wheels, you've put in a lot of stressful trades, you're still up a little bit, but the thing is, maybe you should just say, you know what, let's go to the bullpen. I'm going to hit the showers. I'm up $250 today. I was working my ass off. I'm stressed. I'm not thinking right. I'm going to leave it at that. Good management. All right, that's good management. Think when you're talking about risk management, we talked about this last week, Rob, was, think of, is it good for the team? Is it good for the company? And as traders, consider your trading account your company, right? This is your company. And whatever is good for the company, no matter if you're like, you're a little pissed off and you're angry and revenge trade comes in, it's not good for the company. It's not good for the team. Okay. Because you want to fulfill, something that does not need to be fulfilled. Okay. As far as being revengeful. So consider that. But risk management, use stop loss orders. Okay. That's one thing. Set your stop loss to limit potential losses. All right. Limit those. Personal loss limit. That's one thing that has saved many traders. That's something that saved me, a personal loss limit. When there was trading, I had no bottom stop. I traded until I got sick. Okay. And that's not good for the account. So what you want to do is you want to have a personal loss limit. Give yourself a negative number. Okay. Or ticks, monetary number or ticks, whatever you feel better. And if you hit that number, all right, and this goes under management again, risk management. If you hit that negative number or those negative ticks, it's a shutoff. All right, it's not an option. It's not a choice. It's a direct shutoff, done for the day. So if you hit that negative number, you are done for the day, and consider that. All right, that's good management. Also, you don't want to turn anything into a disaster, and that's what a lot of trading accounts I've looked at have happened, where we sort of fall off the horse and we don't even look to get back on. So, position sizing, determine how much of your capital you're willing to risk. Risk management. All right. When you come into the trading day, don't ask yourself, how much money can I make today? Ask yourself, how much money can I afford to lose today? All right. The profits will come. They'll be there. Don't worry about that. But if you're not thinking of a limit to the downside, you might not be trading tomorrow. And that's what we say here at Topstep. Trade for tomorrow. And that's what that means. Know how much you can afford to lose. Because once you hit that number, that's it. Game over for the day. Okay. And you got to commit to that. So personal loss limit. But Robbie, risk management. I know that you're pretty good at risk management. You've been trading for a long time. What's your take on risk management?
Oh yeah, man. Priority number one, and I am a stickler. I am cheap. I am a bad loser. I'm a sore loser, put it that way. Yeah, it's a fine line because you want to manage your risk, but you don't want to make it too tight. You know, I'm an NQ guy for those that don't know that. And it moves quite a bit, so you have to give yourself enough room to not just get wicked out, which we call it, right? Drop down and it just goes your way, but not too much room where it's just going to like tank on you if you're long and just wipe out an account. So there's a fine line to trade there, and that is all based on the person, on the account size, on your own risk tolerance. I'm just a stickler on it where I just, I hate taking those big losses. I will take 3 or so small losses along the way because my wins are small also. I don't have these big things. We talked about during TopstepTV, if you haven't tuned in, I do the statistics for it, look at all the analysis behind the scenes for traders, funded and combined, and combined, funded, and combined. We put some good things together. We talk a lot about the win-loss ratio, right? Winning trades being around 2 times larger than your losing trades, so on. Winning percentages, winning around 50% of your trades. If you're 2 to 1, you're in a good spot. But that's going to depend on the trader. Give you 2 examples. I work with a trader for coaching where he will take 3, 4, 5, 6 tiny losses in a row. And then his winner, it's just like 4 hours. And it works for him. I have another trader that really likes to get into a trade and is just really stubborn about it. It'll go a long way against him before it turns around and goes his direction, but he trades very small size. So both of those scenarios are okay. So here you have one with a horrible win-loss ratio because you're losing 5 trades and winning 1, but the great P&L. And then you have another trader who's only taking 1 or 2 trades, 50-50, but is still on the positive side of the P&L. So it really depends. Risk management definitely is key. You need to, Hoag calls it on Friday, preservation capital Friday. That is it. But it's going to depend on your style, depends on your personality, depends on your tolerance for risk. And I don't mind losing because it's part of the game. I'm just a bad loser at it. I get that. I'm like, dang it, and then but then like a minute later I'm fine. I just take another trade. It's how it goes.
Well, you know what real quick here, I mean, there's something right there. Is it because you've experienced it a lot that you can sort of click that switch? And I mean, I'm the same way. I let those emotions hijack my account, but I can catch it when I sort of ask myself the question, why am I doing this? And if I don't have a good answer, then I know emotions are hijacking. It's a revenge trade. I'm trading just to trade. If I don't have a good answer, then I know. And 90% of the time, I'll stop what I'm doing, and check my game plan. Check my head, my mindset, and see if that is the right thing to do. Sometimes it's like, well, yeah, we can let it pass this time, and don't think that you can't, but the odds are very small when you're in a situation like that. But remember, check your game plan, check yourself, and see if the opportunity is right. If you're just pushing in to just get a trade in, it's the wrong thing to do.
Yeah, I don't know. That's not a good trade plan right there. So yeah, it's hey, the baseball team that wins the World Series lost some games, and the batter batting over 500 has struck out. It's just the nature of the business. It's the nature of the game. It's part of trading. I had one trader say, you know what? Every day I end up taking three. If I take 10 trades, and I'll take 3 or 4 losses. And then one day I was working with him. Actually, it was a female, and she had like 3 losses. I was like, what do I do? I'm like, well, you should be happy. You get those 3 losses out of the way right away. If you're taking 10 trades and you generally lose 3 or 4 and you lost your first 3, well, good. They're out of the way. You can focus on 6 or 7 winners. Right. It's just, if you can put that little positive spin on it, you don't have that reaction, psychology, that amygdala happen in the back of your brain and the emotions coming through, the adrenaline hitting you of like, no. Just give, trade to trade, take your profits, take your positions, follow your strategy. And if you're following your strategy and you're constantly losing, well, then it's time to look for another strategy. Go look for a different way, different instrument, different time frame, different exit. Who's that? Eddie, it might have been you that said this, but getting into the trades is easy. It's when do you get out of them, right? Because we all have a process, including me. I'm like, when this happens and that happens, and then this goes also, I'm going along. But how do I get out? What is my rule? Is the market going to be where I want it? Is the market going to go where I want it to go at the time I want it to go there? I don't know about that. All we can do is we know our entry, we know our stop, because we're going to limit ourselves. We don't really know what that target is, and that's kind of a little bit of a mystery right there.
Right.
So all we can do is manage risk.
Exactly. Striker's got a question here. Striker says, I think we talk a lot about losing days, but I keep thinking your mentality in check on winning days is also equally important. What's your take on that? And I sort of touch base on that. Dr. Brett Steenberger, Barger, we had a archived podcast last week. He brought that up. I brought it up today, that you have to consider both. And I was saying the good trades, the bad trades, for a journal. If you're starting up a quick journal, write down all the good things that happened to you today, as far as trading, and maybe you got that package that's been delayed for 4 weeks. You just got it in the mail. Maybe that sort of put a bright spot in your day. Maybe you caught the NASDAQ on a real nice run. That's a good thing that you got to write down today. And then on the other end of the spectrum, the bad things that happened. I made myself lunch and turned around, tripped over the dog, and it was all over the floor. So I ended up having a spoonful of peanut butter for lunch, and the dog had my nice roast beef sandwich. So, I mean, and then of course you want to put, obviously, your trading negatives. Moved the stop, which I shouldn't have, bought 2 on a revenge trade. And I mean, break down each one. I mean, if you got the time, and we talk about that too, do your homework. There's been a lot of traders I've talked to when coaching that do that homework, that actually take time out to do that, because we want to make ourselves better people, better traders. Okay. So we don't want to avoid anything that's going to hold us back. And we want to make sure that we amplify anything that's going to make us feel better. So if you can see what I'm saying there's both points. Okay. When you do something good, amplify it. Congratulate yourself. Go treat yourself to something. When you do something bad, dissect it. Find out why this happened. Okay. So maybe next time you're in the same situation going, hey, I remember what happened. This looks, you got the deja vu going. This looks like something that happened a couple weeks ago. What did I do? Go back in your journal and recognize it. I mean, that's half the battle, is recognizing it. So yes, good things, bad things. Rob, your take on Striker's question.
Yeah, focus on the positive also. If we tend to look at the negative or the losing trades all the time or the down P&L, we're gonna get sucked into that. And I'm no good. We start the negative self-talk. I'm a horrible trader. I'm losing again. So yeah, you need to focus on those as well. So we can keep our risk managed. We got that. So let's do that. Let's talk about the positive sides. You should congratulate yourself. Here's an interesting piece. We have risk manager here at Topstep. Risk manager Mick traded grains and stuff forever down in the pits along with Michael, along with you, Eddie. I don't know if he's on the same floor, same time as you, but Hoag. And he has a thing where if he has a losing day, he goes out to dinner and treats himself. It's like, okay, that's just the way that he thinks about it, and the way that he says, yeah, you know what, it's part of it. I didn't have a losing day. Yeah, the day was a down day, but you know what? That's part of trading. It's just, all right. I lost the baseball game. Yeah, kind of a little bad, but I'm going to come back tomorrow. I'm going to play again. That's just how it works. So if you focus on the positive side, Mark Douglas talks a lot about that too in his book. It's Mind Over Markets. It's the one Trading in the Zone. I've listened to it on audiobooks, I think at least 4 times now. He focuses on both.
There you go.
Audiobook, yeah. You just sit it down, even if you're just cooking dinner or I was gonna say watching Netflix at the same time, but rather than scrolling Facebook or something, get into the podcast and listen to it when you're driving. It's a great thing. Trading in the Zone. This is a little, to be completely honest, right around chapter 3 or 4 maybe. It gets a little drawn out because he kind of hammers on the same thing. So after the 4th time hearing, I kind of fast forward through that part because I know what he's going to say. But overall, look at both. If you just focus on your losers, it's just going to beat yourself up. If you just focus on winners, you may not be able to structure those losing trades and get the risk management. You're always like, yay, look, I'm a good trader. Yay, I'm a good trader. I made a really positive trade. I made a big P&L. But at the end of the week, it might be down, right? So you need to do both. Definitely celebrate the wins. We do talk a lot about keeping your losses small, but absolutely celebrate those wins. Not only look at what you did, not what you did wrong, but what went wrong on a losing trade, but look at what went right on a winning trade, because you never know. That losing trade, which is notorious for me, stopped out by a tick or two, made my target. So that's something that I need to work on. So if I just focus, man, I just lost another trade. It's like, no. That was a winning trade. The market got me by a tick or two. And then just wipe it off. It clears out the mind. Grab yourself a coffee, a glass of water, go for a walk, and take the next trade. But yes, focus on positive winning as well.
All right. Danny means here in the YouTube. You want to keep an eye on Discord? I'll keep an eye on YouTube.
Yeah, I get Discord going up. I put some links in there. So go ahead, YouTube. I don't have anything right here yet.
Danny says, I'm a sore loser too. Okay. I'm too focused on actually taking responsibility for my trades. I had no idea that if I was emotional for any reason, that it was not taking responsibility. And I take it that he read Mark Douglas's book also. That's what he did put on there. So yeah, I mean, it's good to share. If something has helped you, why not share it with somebody else?
Mm-hmm.
Be that person that forwards some information, some knowledge, some education. Brett talks about, let's see here, I just scroll this up. How do I get rid of this real quick? How to get rid of that? But anyway, Brett says best traders are those who can manage their losing days, not necessarily the trader that posts the huge days. Now, I mean, I make $300. I'm very happy because I've put that into perspective. All right. My number one priority is obviously this job. I've been here at Topstep since day one. That's been my priority. If I do, and when I do trade, the opportunity has to be really good opportunity. And that's the only time I will trade. So, that's what I mean. I'm smaller profits. I'm happy with that. It's just extra money. Okay. It's extra money. Rooster said he made 2 G's today in the express funded account. Done today. Rollover isn't usually my cup of grain. Well, there you go.
Celebrate. Yeah. Celebrate.
That would be a good celebration. And, enjoy your day. Go to your favorite sandwich restaurant or something. Or I don't know if you've got family or anything. Or, even little things like that. Dinner. Make yourself that homemade chocolate shake. Go out and, and get yourself something that you like. And it was job well done. Job well done.
Yeah, and remember that it is a sorry, Eddie. I thought you finished your thought there. My apologies.
Not at all.
I didn't want to walk on you, but yes, celebrate, take it, and then let it go, because it's one trade or one day. Congratulations, you did awesome. Take the win, take the celebration, pat on the back, and then be like, "Yep, good. Cut it, move on." Do that to your losses and to your wins. Losses, man, that was rough. Had a bad one. Feel it, cut it off, move on. Wins, that was awesome. Did a great one. Little celebration, cut it, move on. It's every trade, every day, every position, every week. It's one at a time. So, but again, congratulations. It's not easy to do. Way to go. $2,000 on a day. You live in it.
Mongoose is asking, how do I know that trading is not for me and quit? See, now that's a question we need to ask ourselves. I can't tell you anything to quit. Maybe you see these shows on TV, people with drug addiction, alcohol addiction. It's called Intervene. Okay. Now that's when families sort of come together and try to help an individual. But, in trading, unless you're taking trading as a gambling. Now, gambling's an addiction. Trading can be an addiction. Anything can be an addiction. But the best thing to do is if you're learning, educating yourself, and you're moving forward, you're not spinning your wheels, you don't have 3 credit cards maxed out, then you're doing okay. As long as you keep your head above water. But once you get reckless, once you turn this into a casino, once you turn this into a game, an Xbox, a PlayStation game, where you're just clicking, hoping the best outcome will happen, then you're in trouble. Then you're going to need to seek help. And that's probably the point where I would tell you, you know what, this is not for me. And I'll be totally honest here. With all the thousands of traders I've talked to and thousands of trade reports, there's probably a good handful of traders, maybe a couple handfuls that I have told, maybe this isn't for you. Right? Because session after session, they're not following through with my direction, my advice. And, and I got to say that, when somebody came up to me and told me, hey, you're not going to be here much longer, this is what you got to do. I too was taken aback and didn't want to listen, but eventually I did, because it came down to do or die. Do you want us to, and one of the questions that was asked to me is, do you want to still be on the trading floor? What you're doing now, your time is limited. All right. You've got to approach the market much differently. And I'm glad I had that talk, because it took a while before it sank into my thick skull. But once it did, it was like, oh shit, that makes a lot of sense. I've just been the fool here, giving away money. And the thing is, I think after that, sure, I still gave away money, but not like I did before. All right, I did have losing days. I did walk away from losing days. Before I couldn't walk away. Oh, I couldn't walk away.
I'm going to jump onto that, if you don't mind, Eddie, Mongoose question, because I want to hit that from a different angle. If Mongoose here, I just pulled up the YouTube chat to read the question specifically. How do I know that trading is not for me and quit? So this is directly to Mongoose. I'm going to hit this from a different angle, and I'm going to say, ask yourself this question: why am I trading to begin with? Okay. And then once you have that answer for yourself, you don't have to put it here. Once you have the answer for yourself, why am I trading to begin with? What is the reason? If trading is not fulfilling that goal or that need, then it's not for you.
Yeah.
It's that simple. Okay. If you're trading to gamble and you're gambling, you're a gambler and that's working for you, right? We're not going to promote that. But if that's what you do, because some traders are like that, they like to get in, like to gamble, it's a casino, right? If that's filling your need, what you're doing, fine. If you can suffice that, I'm not judgmental on this. We're not condoning that. Just if that's what your goal is and it's fulfilling it, great. If your goal is to say, hey, I need to make X dollars per week to support my family, and you're not doing that, now you have to revisit a few things and say, okay, well, what is it really doing? What am I really doing here? We always say, this is when I was trading the stocks days before futures, is the best the best symbol to trade while you're learning to trade it's the $JOB. Just get that account going. If you're in a position where you're struggling and you're just like, I have to trade to support myself or my family, I need to trade to make money to do this, that is not a good mindset to be in. Once you can get yourself in an environment, this is what TopStep is great for. You have the combine, right? You're going to spend a little bit of money to get in there, practice your trades. You have a practice account. You have a combine account when you think you're ready. And once you start building that account and you're able to make that and make 2-3 times your current salary or now take a look at making trading full-time for you. So I'll go back to that, say the question to ask yourself is, why am I trading in the first place? What is the reason I'm trading? If your answer, once you get it, if your trading is not fulfilling that, then you probably should stop. I hate saying that, but it's a tough game. One of the guys I was coaching was a neurosurgeon. He's like, man, I wish I could go back to med school because this stuff is hard. He's a neurosurgeon. So it's got nothing to do with brains or intelligence. It's just what's for you.
Right. All right. Robbie, what else you got? I'm trying to see if we can get Jack in here, talk about some of this, but give me a minute here. Okay.
Yeah, absolutely. I'll pull this up, and are you trying to get Coach Jack?
Yes. So,
okay.
Any other questions that you've got in your Discord?
Vincent says that, yeah, okay, Mongoose, he replied, I don't he or she, I'll just say trader Mongoose, my goal is to be a full-time trader within 5 years. Yeah, that is doable. That is doable. It took me over a year to do that. I was just in the wrong thing. So while you're pulling Jack in there and getting that ready to go, I started with a small cap, low float, like $3 to $5, $7 a share stocks, trying to catch a 1 minute candle at the open. I did terrible. Day after day, week after week, month after month, literally over 8 months, just lost and lost and lost. Could not do it. Somebody in the chat room noticed and said, hey, Rob, I think you understand this. You're getting trading. You're kind of a sharp guy. You're seeing these things. I just think you're trading the wrong thing. Have you ever heard of futures? That was my game changer. This gentleman, I don't even know his real name. That is this gentleman. He just came in and said, I just think you're trading the wrong stuff. Showed me futures. Took a couple months to learn the nuances with them, to figure out what I was doing. Took a couple months to make back everything I lost over the last 8 in stocks, and that was over 6 years ago. So it wasn't that you're bad trading. You just happen to be trading the wrong stuff. You didn't have a bad strategy. It just wasn't the right instrument. That's where it comes down to. Futures change it for you, 100%. I'm a guy that I don't trade the first 30 minutes of the U.S. market. I'm not one of those traders. I'm like, nope, I'm going to get a coffee. I have it marked out right on my chart. Use Quant Tower. I put a thing on there. It's a big red line. It marks off from 8:30 to 9 o'clock Central Time. It's a big red box, and I just don't trade in that time frame. I literally go grab a coffee, and this morning I had a nice ribeye with half a dozen eggs, and it was a beautiful thing. So we all find our niche. So that goes along with the trading before, as far as when you're going to quit, what is full-time trading, how long is it going to take. It's different for everybody.
All right.
We got Jack.
We got Jack here. There he is. Hello, Jack. How are you, buddy?
They can't hear you.
You got the headset on? Let's see here. Put the headset on, Jack. Okay. We'll bring him back on. And I will put on there. Put your headset on. Let's go. Okay.
Used to scalp spy options. Tiz says used to scalp spy options. Took too many big hits. You know what, Tiz? I looked into options also at the beginning when I was looking around for things. They were just completely difficult for me. There was just a lot of stuff going on. I am such a simple trader. If the market does this, I think it's going to do that. That's it. The more variables I add into these equations in my trading, the worse off I feel. The more variables you have, the more opportunities there are for failure. If you wait for too many things to line up, this RSI going here, this MACD going here, this report saying that, this moving this percent, are they in sync with it, blah, blah, blah. The more you add into that, in my opinion, it's just more complex, right? I'm not saying shouldn't be done, because you need to do what speaks to you, but options for me, I did look into that. True. That no way, not for me.
Okay, let's bring Jack on. I think he's ready. He's got a headset on.
All right.
Oh, hi guys.
Hey, Jack, how are you, buddy?
Oh, glad to see you. It's been a while.
Right. It's good to see you, man. How was your weekend?
Nice.
That's
nice.
good. That's
relaxing.
Good. You know, Jack, one of our coaches here, what I want to do is I want to make sure you can have the opportunity to share your education, share your experience. And I think I got a question for you. Let's see here real quick. This one I was saving for you. Where'd it go here? I got lots of participation here. Where'd it go? Here it is. Danny Mean says, I miss talking to Jack every day. He's freaking man. I love Jack. So Danny says hello.
Hello, Dan.
This is
Thank you.
Yeah. All right. Dr. T Reverse says, we can all sort of jump on this question. How do you cope with loosening trades? Keep missing some and don't want to lose money getting too aggressive. Let's start with that.
Well, you're going to miss them if you're careful on your entries. You're not going to get every trade you want. It's the market's job to come to the orders. So we got to be very careful we're not chasing the market. It's always been my opinion. If you turn your screen on and you say, well, I know I want to be long, so ding, you hit the button and you're long. It's a kiss of death. You have to plan that trade out. You have to give yourself a cushion. Then you got to determine where your stop's going to be. And all these things are relative to something else. You know, it's entering the market correctly is very difficult, but it's got to be part of the process. Otherwise, you're back into that. You bought a car. You bought a contract at the market. Market took your stop out in 30 seconds, and now you're mad. And you know you're right. You're going to go right back in. It's going to come and take your stop out in another 30 seconds. So it's hard. It's a hard thing to learn, but you have to. You can't put a trade on because you want to be in the market. You have to put a trade in because you've gone through the process and you say, this is the action I need to take now. And that action could be, and an action is really something. The process is just a series of steps. Steps are actions. They're not thoughts. They're actually things you have to do. So you get in the market, you want to be long. Where do I want to be long? Why do I want to be long there? Am I giving myself a cushion so I'm not with the herd? And is my stop reasonable? And you learn these things by trial and error, but that's going to help you to get into the market and join that 5% who are going to be successful in this business because they're careful and thoughtful about what they do. That's the process. I can't say it enough because it took me so long to learn it. And a process is a step. A step is an action. An action is something that basically has to do with change and our meeting the market on the market's terms. We follow the same process, but we approach we approach the beach every day a different way, because one day it's wavy and one day it's calm, but it's the same beach and the same body of water every day, and it's the same as the market. You got to approach it differently every day, but you got to stick with the plan. That makes sense?
Yes, it does, and I hope that helps. I
love you guys. I love you guys. You know that.
Douglas says, I keep thinking I wait too long. That would be a good idea to jump in the morning and keep risk management. Well, it really depends on, like I talked about earlier, the game plan. You got a game plan going on. Is the opportunity something that you can trade with? Okay. You've got to sort of put yourself in a position where it's best for you. Maybe you see the market better in the morning. Maybe pre-market, and what I mean by pre-market's before 8:30 Central Time. Maybe you trade the best at that time, 8:30 Central Time, when everybody and their brother is trying to catch the market. Or maybe it's time for when the dust settles and the noise sort of chills out a bit is your best time. Maybe it's the afternoon, maybe it's the overnight. And this is what you've got to find out. You've got to find out what works for you, not what works for Jack or what works for Rob or what works for Eddie, what works for me. Okay. Because that's what it's all about. It's all about you. It's all about you. It's not about us. Because the thing is, this is, like I mentioned earlier, your company, your decisions. All right. So it's up to you whether it's a pass or fail. So Eric says it's hard to handle risk management in the opening for me. Way too much movement in the morning. Well, Eric, just, like I said, let that dust settle. Maybe that's not your time.
Trade 23 hours a day. You don't have to trade the hardest
exactly,
time.
Rob.
Yeah.
You could trade 23 hours a day. Why jump on that one? Why get on the highway when it's bumper to bumper? Okay. All right. If that's like, I know, when we go on trips and stuff, we leave like 4 or 5 in the morning to get a jump on traffic. We wouldn't leave 9 o'clock, 8 o'clock. And there's even streets around here, intersections and so forth. When I look at the time, I'm like, oh, damn, it's 3 o'clock. Well, I'm not going to go there. Okay. I know that's backed up, and it's not backed up that bad. Maybe I'll go around this way. So find time that works for you. Less stress is I can't describe how much, in the trading pit, when we'd have like a number out or when the feds were going to speak, you'd be bobbing back and forth, your hands would be sweating, and you'd be watching. When you're in the pit, you're watching all your phone clerks. All right, I got you, I'm watching you, I got you. And when that shit hit the fan, that everybody and their brother and sister would be yelling and screaming at you to put an order in. And you knew that you had to watch 5-6 people at the same time and get things done. And it was very stressful. It's very stressful when somebody's saying sell 50, buy 75. Hey, where's my paper order? And this guy's over here. Where's my buy 18? Hey, where's, you got a partial fill over here. And things like that were, you learn to deal with that. And same thing with trading is do you want all that noise? Or are you a trader that can deal with, let's let the dust settle and then let's see how I can do. Rob, you trade overnight.
I do. I really don't like the U.S. market. Personal preference for me. I'm not saying yes or no. I just don't like it. I'm a stickler on risk. I hate taking those little things, and being an NQ trader, it just whips around so much. By the time you take your finger off the mouse, sometimes it's 10 points against you. It's $200 per contract. It's just, to me, I don't know. It doesn't work for me as well as some of the overnights. They're a little slower moving, but at the same time, I'm not a time-based trader, right? So if I'm waiting for the market to get out of an area, like let's say this is the area, let's just say it's 20 points. I'm not going to worry about how long it takes. I just want to say, I'm going to put a line right here. I'll put a line right here with an alert. That alert, let's say I'm East Coast, so let's say a Central Time, market opens at 5 p.m. Central. I may see the market moving for the first half hour or so, and then I'll put my lines on there. I want to get out of that consolidation area. It might be 6:30. It might be 11:30. I don't know when that's going to be, right? Look at the chart, right? If you're on YouTube, look at the chart you have in front of you right now, and look at the times. Look at the U.S. market, the volume today. Grab one. Top left-hand side is the S&P 500. Look at how that's going along. Bounce, all the volume that came in, the big candles that are going on. You get on the wrong side of that. By the time you figure out you're on the wrong side, you're done for the day. And then look left behind that, and let me know if you can trade that trend a little bit easier.
Right.
Okay.
Right.
That's just me. It's a personal preference. I'm not the whipsaw. I'm not a gambler. I am definitely strategic. I'm analytical. I'm logical. I'm methodical, and it's just going to happen or it's not. Every once in a while, if it's trade's getting close, I'll do the Hoag rule. It's getting close to my target, looking for 20 points. It's 8 to 18. Yeah, I'm going to close that. But a lot of times I'm like, if it's going to go here, it goes here. And if I see it just like really just flipping the other direction on me, I'll just close it to cut my loss off. That's just how it works.
Yeah.
But the overnights to me just mean, you can trade 23 hours a day. And it's just like clockwork. Rule number one for me is I do not trade the first 30 minutes. Works for me. Not saying it's going to work for you. Strong suggestion. It's just too volatile.
Right. Well, here in the YouTube channel, Alan, or should I say Nella, sorry. Let me guess, that's your name backwards? I don't know. Markets have a multi-personality disorder. Have to be able to identify that personality changes with the opportunities within. And Robert put on there that it depends on the market, time of day, personality, risk tolerance, account size, and it does. And you might have a wild rabid wolf when the market opens up for S&Ps, and then by the end of the day, it might be a nice little cute puppy where you can get close to that market. You can find a trade, something that works. But there are different times of the day. There are different markets, different personalities, different, so it all varies. And it's something you got to know. Now, Jack, let me bring you into this one. When you were on the trading floor, and then we can sort of split this into two questions. What were you one that on the opening bell would be right in there trying to get a trade?
Well, my last 20 years on the floor, I was filling orders. So
you were filling. So let me ask you. Was there a lot of paper? Oh, well, obviously there is. Yeah,
there was a lot of paper and
MOO, right? Market on open.
Yeah, and we were very glad to have the locals in the pit to take us off the orders. That's what had to happen. But now in this computer day and age, it's not the same situation.
Right.
You were talking about the first half hour. You have to let the hedge funds, and you have to let the when I talk about it from the old grain point of view, you got to let Pillsbury in, you got to let Archer Daniels Midland in, you got to let Cargill in, you got to let them do what they want. And it has nothing to do with supply and demand. They got to get these orders placed so that they can get on with the rest of their day, really, And thank God we had some big traders who are always in there to take us off the orders in the pit. But when you're not in the pit, nobody's got to take them off those orders. The algorithms come in,
right,
take the average side of every order they can. So it gets us off of the hook. And if you let them get set up and establish a range, just like in the old days, let them establish a range. Sometimes that's a range that'll hold for the whole day. It's really an amazing part of the day, but it's not a part of the day for Mr. Trader just to get in to make a trade, because you're, in my feeling, it's like getting in the market for a big report. Chances are over time, you're going to get beat up pretty bad.
Right.
So I agree with you 100%. I don't like to trade the first half hour. I don't like to trade in the last hour. But that's just me. I think I have plenty of time during those hours to do everything that I want to do for the day.
Right. Well, you've got to be very cautious too. I mean, there's when anytime somebody says there's money involved, I mean, then it's like, okay, let me sit up straight. What did you say? There's money where? Yes, there's money involved, and you've got to be selective. What works for me? It's like if we asked Robert what his favorite music was, and we asked Jack what his favorite music was, and asked me what my favorite. We're all going to have a different. Music is music, okay, but it sort of breaks up into different types of music. And no answer is wrong, no answer is right. It only depends on what you like. So, I mean, the same thing with trading. It's like, what works for me? It may not work for you. It may not work for him. It may not work for her, but it works for me. So keep that in. Keep that in mind. Like Robert said, the markets trade 23 hours. You got 23 hours to trade, so don't put yourself through the ringer if you don't need to. Let's see here. Any other questions here? Nella is saying, yeah, to me, overnight trading's the best. Robert Cooney, you and Mongoose. I guess you're good friends with Mongoose. Robert.
No, while you were talking,
copy.
I was just asking. Yeah, while you guys were talking, I was answering a couple questions in YouTube there, so you can focus on the conversation. Yeah, they were talking about ranging markets and what the difference is, and I just say, if it's ranging or what some people call as a slow market, yeah, you're going to trade it a little bit differently, but patience, right?
Right.
That's where it comes in. If you set it and you want to know where it's going to go, you put your trade on. And that's just why I just don't trade time, right? We're trading price. So I don't have time charts. It just takes it out of the picture for me, because it's whether the market is, if it's moving, in a range of 20 points or something, I'm just throwing numbers out. If it's moving in 20 points and it's bouncing back and forth like this, it doesn't matter to me if it's 15 seconds like that, 30 minutes like that, or an hour like that. I'm just going to wait until it gets out of that area. So we're going to trade price, up and down, price action, volatility, movement, right? That's how you make or lose on that sense. It doesn't, if you're looking for a 10-point trade and it took 3 seconds or 30 minutes, it's still 10 points. So
right.
Slow markets don't really matter too much.
One thing, talk about here and is, can I be a trader that's going to follow along? Can I be a trader that can commit to my rules? Not only, if you're in the program, to the Topstep rules, but my rules. Can I maintain discipline? Can I hold myself from trading at this time? Can I keep myself from over trading? And we talk about discipline. Obviously, discipline's one of the ones we talked. We talked about that Friday, didn't we? We talked about management, discipline, and patience. And if you're disciplined and you found your niche, if I want to call it that, or your groove in the market, man, you know what? I just started trying to trade here at the new session open at 5 p.m. Central Time, and there's some volume there, and I've been making some decent trades. So, before we have dinner, I jump on that 5 o'clock session, and, I made $250. And then, we had the family as a dinner, and then we watch TV or play games. What is it? Game night today, honey? All right. We're playing games with the kids, or whatever, if you're single, if you don't have kids, whatever. But when you find your groove, the thing is, don't be too in a hurry to change it. Because I tell you, once you find your groove in trading, you're going to like it a lot. And not necessarily it's going to be with you your whole career, because markets change. Okay. Ideas change, perspectives change, market characteristics change. So whatever is working at that time, utilize it. And I'm telling you out of experience, because, when you start hitting that wall hard, you're going to be saying, okay, I get it now. The market has changed. My approach, my strategy, it's not working like it did before. Don't throw it away. File it and pull out of there what you think might help you now. Dig down in that toy box and pull out those toys you haven't seen in a while. All right. And give them a try. And, once again, I'm going to say, hey, if you're in the program, you got that practice account. I've seen so many trade reports where it's just a trading combine is used. What's on the practice account? Nothing. Didn't even touch it. I know that we want to, hey, just in case we got a good trade, I don't want it to be on the practice account. But set aside times and set aside direction of what you're going to do on that practice account, so you don't get all pissed off in case you do put a 5 lot on and it runs 20 points. Oh, that was a practice account. One thing we get a lot of is in support is, hey, I had a real good day today, and all right, congratulations, but I had it in my practice account. Can I move it over to my regular account? No, you can't. I mean, sure, it'd be great if you could, but I mean, honestly, think about it. You're doing the practice account. If it goes negative, can we add that to your trading combine? Heck no. That wouldn't work. So there's two sides of the toast. So keep that in mind. But Jack, it's always nice to have you here with us.
Thank you.
Because what are you trading? What are you trading here now? You trading anything? You got time to trade?
Corn. I don't know if I'm in. I mean, I have an order in. I don't know if I got filled or not yet.
Okay.
But I love trading corn. I don't understand why more people don't trade it, because it's such a universal thing. Everybody understands it. It's something.
Here's something coming over the wire. Brazil's corn exports exceed U.S. corn exports for the first time in 2023.
Well,
there you go. Maybe that's why your trade wasn't filled. But you know what? You filled corn, right?
No, I filled in lumber mostly.
Okay, lumber.
Which was a great pit. In lumber, we would call a perfect day a day that opened steady, went limit down, then limit up, and then close steady. We call it complete performance.
Come to think of it, I think our ships have passed each other on the trading floor. And now that I'm thinking of it, we used to have a customer that wanted to trade lumber, and I think you're the one that I used to go to. It'd be like, "Where's the lumber pit?" It's that guy right there. Am I right?
Yeah.
Okay. All right. So I had given you some orders at some point, many years ago, but that's what it was. I mean, the lumber pit was not a big pit. Like you said, you'd open up, you'd go limit up, limit down, you'd open back, and then you close, and that would be your day. But so trading corn, I know that Mick's got the edge on that one also. So trading corn there, but let's take a look.
Oh, I love corn. I used to work with the biggest corn traders in the world, and back in my days as a clerk for Heinold. You see my pictures here? These are 1969 pictures of my wife and I at Heino's Christmas party.
Oh my gosh! Wow.
I was born in 1969, Jack.
But the lumber was, I got to tell you, when you want to talk about fun, the lumber was so great. And I used to love it. I had a brother-in-law. I got him involved in the business, and he worked in the back options of lumber. And I told him, you got to be very careful. This market's really going to move today. Stay out of the damn thing. And of course, we went limit bid, and there's, I remember distinctly, but limit on 2,200. That in the lumber business at $1,600 a tick. If you got caught the wrong way, you were in deep doo-doo. But my brother-in-law had an ego about as big as the pit. And we were bid, and he says, I was lucky. I got in early. I'm long 30 cards. I said, you got to be crazy. You don't know where this thing's going to open tomorrow. He said, Jack, you bid on over 1,000 cars. I said, yeah, but that's tonight. So I said, you're making a big mistake. And next day, well, in the meantime, him and my sister had gone out shopping for new cabinets for the kitchen. He was so proud of himself. He couldn't wait to spend the money. And next morning, market, everything's getting ready, and I'm getting buy 50, buy 300, and as we're getting closer and closer, I'm getting sell 500, sell 800, all of a sudden, we're not limit bid anymore. And, they come out, what's the call? I said, well, we'll be maybe 900 higher, 800 higher. What's the, or are we going to open 700 higher? Or are we going to open steady? Where are we going to open? 300 lower.
Oh, my goodness.
Lower.
Yeah.
And my brother-in-law comes up and goes, what am I going to do? And I said, you better cancel the goddamn cabinets. And he runs over to the phone and just cancels the whole pit went up for grabs.
And that's how it was, too. When markets were unstable.
The famous saying in the lumber pit when you were in deep shit was, cancel the cabinets.
There'd be days like that, following a traumatic day prior. That would be one of the first things you'd do when you'd go into the trading pit is, what's the call? And, that's what you would get. Oh, we're 16 higher. We're 22 lower. We're 100 and quarter better. We're 80 lower. But the thing is, you're seeing it on the charts. You're seeing it right here on the charts. There's a big difference there. But, it's something that you have to adjust to. And the thing here in trading is I've heard it many, many times, and especially to me at one point in my career, adapt or die. You got to follow through. If things are changing, they're not going to wait for you by any means. All right. They'll step right over you, and then you'll wish that you had time to at least get comfortable with what's going on now. So keep that in mind. But, let's see, what do we've got here? We've got coming up next. You guys ever hear of Jack Schwager?
Yeah.
Okay.
Yeah.
All right.
You interviewed him.
I did, podcast. We're going to have that up here. No one better to connect the dots on what successful traders do than author and trader Jack Schwager. In this interview, I and Jack, we're going to go over what he's learned from studying the performance and demeanor of the world's best traders. He also shares the best piece of advice he's learned over the years. So that's going to come up here. I think we'll start that at 12:30. We'll run that. And then after that, please join us for the Hoag and Horn Hour, the Triple H. And we're going to be talking about our experiences with 9/11. What were you doing on that day? Brett's going to join us, and he's got a story he wants to share with us also. Jack, let me ask you, what were you doing on 9/11 when the tragedy hit?
Oh, I remember distinctly. I was my office was in Rosenthal Collins' office.
Rosenthal, yeah.
Yeah, that's where a lot of the big ag guys were at the time. And that's where Heinold kind of evolved to. But anyway, I had my own business at the time because the lumber had kind of died. But I was looking at TV and I saw the first plane go in, and I went, wow.
Was this on the trading floor or were you at home?
No, I was in my office in downtown at the Merc.
Okay.
First plane went in, second plane went in. I grabbed my coat. I said, I got to get my kids out of school. I ran to the train, me and about 1 million others, and got to my house and got my car and pulled my kids out of school and brought them home. And like everybody else said, it turned out that day you couldn't get on a train to get home. There was no way home. Guys were stuck.
Actually, I mean, I caught a train home. What they were doing at Union Station, they were just filling up every train. Once it got filled, it'd send it, and it would hit every stop. Hit every stop. But yeah, you did the right thing. You did the right thing there as far as making sure your kids are safe, and you had family. I had a dog, and this was before I was.
Well, I really thought, I thought, what's coming next? This ain't the end of this.
Right.
Mm-hmm.
Yeah, I got to that point.
There's everybody has a story on that day. That's not just you. It's like globally. There's always a story. You could ask 1 million people, have 1 million different stories, but everybody knew the world stopped that day.
Right. I think about 2 weeks later, when the airlines opened back up, I was working for First Chicago, and I'm just going to put a teaser in here. I actually was at Ground Zero. The second day they opened up airlines, and the wreckage was still smoldering.
Really?
And I wish I had the pictures. I took pictures. I mean, that facade they show, that's sort of crooked and smoking, and it looks like a cross.
Yeah.
I mean, I walked right past that. But I'm going to put that in detail when I join Hoag. We're going to be talking about that, and let's not forget about family and friends in Hawaii still having problems. The terrible 6.8 magnitude earthquake that hit Morocco. I mean, it's tragedy one after another. Be glad that you're blessed with what you have, the safety that you are, the family that you have, because there's a lot of other people that wish they were in your shoes. So
that is so true. That is so true. We don't know how lucky we are here. Well, maybe we do, but I thank God every day.
We should, all of us.
Yeah,
all of us.
There's a song that's there, and I know we're going to move on to this, but there's a song out there, whether you like the style of music or not. It's from Alan Jackson. It's an older country song. It's called, I went to the exact title, "Where Were You When the World Stopped Turning?" If anyone wants to hear that. If you don't like the music or the style, whatever, just read the words. It's a super, super thing. That's what it's called. "Where Were You When the World Stopped Turning?" Alan Jackson. It just hits home to me every time I see it, hear it, read it. Yeah. It's a good thing. Yeah.
Gosh, I hope that never happens. Can you imagine if the world stopped turning? How fast?
Well, I
are
did
we
the math on
traveling,
that
Rob?
one time, and it's 23,000 miles an hour around this thing. So if the world stopped turning right now and stopped right now, and nobody would be here in an eighth of a second. We'd all be going flat.
We'd be like a bunch of mashed potatoes on like a ball.
Yeah,
Everything
it
would
always
just
was me. You know, I being the
together.
analytics here. It's like
You're
the
talking
world.
to two Irish guys here. Mashed potatoes.
Yeah.
Irish potatoes. All right. All right. So we're gonna call it from here. Jack, I appreciate you being with us.
Thank you guys so much, and always remember I love you too. And see you soon. I hope. Okay.
Right. We'll get you back again next Monday, hopefully. Okay.
Oh, great. Sure.
If we can do this time, I think we're going to be going off the. We're just trying. I mean, this is new, just for everybody that's listening and watching. This is new. We had our first full week last week, coming into our second week here, and we're still feeling things out. What segments work? What happens? What needs to be in place? So
we need to keep doing what Robert said. When we come to the fork in the road. When we come to the fork in the road.
Okay. Take it. Yeah.
When you come to the fork in the road, take it. Hey, NQ just made a new high of day for those listening. Well,
oh boy.
Oh, NQ, yeah, jumping over the. Okay, what do we got here?
Well, I'm not going long.
Last 47 even. 47 even. I think that's about the only thing that's really moving. We do see the ES last trade 38 quarter. And I mean, it has been progressing. It has been giving us a good move. Mm-hmm. So,
well, guys, I'm going to excuse myself if it's okay. Thank you.
Mm-hmm. All right, thanks, Jack.
And we're off.
We'll
talk to you later.
All right, bye-bye. All right, so we're going to put this on. Hopefully, we will be just sort of, and we're done with this one with Jack Schwager. We'll get Hogan here. And Robert, I appreciate your time by all means. And good stats today from the stat guy, huh?
Yeah, I'm going to put some interesting ones like that. We have the steady ones. We have community stats, a couple of them there. We highlight 3 traders. We go through some individual stats, 5 or 6 different stats on all 3 traders that are doing different things. And then we have one that I kind of come up with. It's called the like a silly stat or a fun fact. And that's what we did today. It was the ratio of the ES and NQ, the number of traders and why and how that all works. So that's a pretty good one today. I'm sure I'll circle that back around about a month or so.
Cool. All right, my brother. You have a very good day. And once again, thanks for being with us here.
You have a great show. I'll see you at 8 a.m.
8 a.m. 8 a.m., folks. Mongoose, I haven't stopped watching all day today. Kept it in the background while working. Cool, man. Well, that's what we're hoping that we can sort of do for you as a trader. Is we'll get to the hardcore trading, looking at charts first thing in the morning, and then sort of easing off. And we'll have time when Johnny Hoags comes back. We'll take a look at these markets again. But we tried to set the afternoon as our Squawk Radio that we used to have. So DC's asking, Eddie, how did the trades go today? You know what? I did not risk anything today because I was way too busy sort of pulling strings and pushing buttons and trying to get the morning straight. But that 88 even played a good part. We were talking about that 88 that John had. John had a good level at 88. Danny was aware of the 88s in Crude. And ever since then, I know right now we're sort of like bird on the wire, looking at settlement, 87.51. Bird on the wire. Candlestick is just sitting there like you see birds on a telephone wire. So nothing going on right now. But anyway, let's get this going. Arson has a question. I have a question about live accounts. Does Topstep give live accounts only for U.S. citizens? No, Arson. Check on our website. Go to eligibility. You'll find out if your country is eligible to join us. I mean, we've got people, let's say, for those that are listening, for those that are in the program, let us know where you're from. What country are you from? If you could post that here in our YouTube chat, I would appreciate that. Let us know where you're from, and that'll give you a good idea of what we've got. But we're worldwide. Okay. But unfortunately, if you're, look at Poland, Hubert, Tiz from England, Dr. T, England, 90-bit Canada, Macau. Oh, Zurich from Morocco. Hey, how is everybody over there, my brother? Hope everybody's okay in Morocco. You guys took a big hit there, and thoughts and prayers for you guys. Arson's from Kazakhstan. Yori, hey, New York. How you doing, New York? Your Giants. What happened to the Giants? What happened to the Bears? Estonia. I've got a good friend that's Estonian. Love the guy. And Jenner's from the U.S. Esteban from Argentina. Beautiful country of Argentina. Okay. Mongoose, you're from, what's a good, that's a new one. Mauritania. Hope I said that right. I mean, this is crazy, man. Abraham, Las Vegas. Travis Chingo is from Michigan. I tell you, Travis Chingo. That's a cool name. I really like that name, Travis Chingo. Travis Chingo. Todd is from Wisconsin. Yeah, but you're a Packers fan. We got Poland, Paraguay, Utah, Poland. A lot of people from Poland here, huh? That's a good thing. It's a very good thing. Washington State. Umer's from Queens. Raymond, East Texas. Husan from Taiwan. It sort of rhymed. No-Code Dad from Alaska. Tell me how nice Alaska is. I'm trying to convince my wife to buy a little place up in Alaska, a nice little log cabin somewhere away from everybody. Yo Jimbo, Norway. Okay. Uriah Heep. That's you, or Uriah Heep. Okay. Travis Jingo. DC's from Georgia. Todd Scholes is from Packers, baby. See, there you go, Arson. The whole world's here. Marshall Matters, Ireland. Top of the morning tea. I love Ireland. A beautiful country. Beautiful country. And shepherd's pie is one of my favorites. Oh, my goodness. If you haven't had shepherd's pie, find a good Irish person and make friends with them and say, please make me some shepherd's pie. The Irish way. From Ukraine, I'm not sure. Apin. BB Keller, Buffalo, New York, right? Buffalo, New York, or just you're from a Buffalo? Not sure. Born and raised from a Buffalo. My daddy's a Buffalo. Okay. All right. Long Island, New York. It's a defeat. That's a great drink. Long Island iced tea. All the white booze, a little triple sec, and a splash of what? Coke? Do that? Long Island? Alistair Parker from Vermont. Okay, BB Buffalo, New York. All right. New York. Ian John from Seattle. Seattle won. The Seahawks won yesterday, right? See, I'm geared to football. I'm sort of envious that all these other teams won, unlike the Bears. But one thing here in Chicago, let me just put it on the table right now. We are very quick to love something, okay, as far as sports-wise. And we are very quick to hate something as far as sports go. So all within a day, we were stoked, excited, and within hours, we were disappointed and very hateful. So, but James is from L.A., Los Angeles. Dodgers are kicking butt. Man. Greg McRae from Scotland. Wow, this is pretty cool. See, and Top Step Trader, we're from Chicago, and what we're going to do here is we're going to put on Jack Schwager. All right. No one better to connect the dots on what successful traders do other than author and trader Jack Schwager. In this interview with me, I had the opportunity to interview Jack. He's going to go over what he's learned from studying performance and demeanor of the world's best traders. Oh, this guy's got connections. He's going to mention some of those connections too. This is going to be a really cool podcast. He also shares the best piece of advice he's learned over the years. So we're going to get into that right now. Kosovo, wow, Indiana, Shelbyville, nice, Jimmy G. All right, so we're going to do that right now. Real quick, Arnson says, "Hey, Coach, I have a question about trading. How do Americans really feel about the war in Ukraine?" The thing is that, you know what? We really don't want to be political or religious, okay? That's one thing. You know what, though? But I do have to say that I got to sort of agree with the term that, you know what, let's stop the killing. Bottom line. Let's just stop that. We don't need that. Easy to say, hard to do. I mean, there's so many bullheads on this planet, and it's sad. It's very sad. You got to give pity to those people that their houses are being destroyed and so forth. So, you know, I'm cheering for the human. So we'll go from there. But let's keep it not political. I mean, there's a lot of different angles and different thoughts of what's going on in this country from a lot of people in a lot of places. So we'll keep it at that. But anyway, let's get on with this interview with Jack Schwager.
This is Limit Up, the place where we explore markets, strategies, and trading psychology to take your trading to the next level.
Hey traders, this is Eddie Horn from Topstep, and this is Limit Up. This is where we talk with traders, market participants, and trading psychologists to help you improve your trading. We've had a lot of new listeners join over the past few months, so we're taking a couple weeks to replay some of our favorite episodes. This week, we're replaying our conversation with Jack Schwager, the market wizard whisperer himself. I hope you enjoy this interview with Jack Schwager. It's a complete honor and an envy for many to introduce my guest, Jack Schwager, author, trader, and I guess you could say hero to many. Now, Jack is recognized in the industry as an expert in futures and hedge funds. He is the author of a number of widely acclaimed financial books. Mr. Schwager is one of the founders of FundSeeder, fundseeder.com, a platform designed to find undiscovered trading talent worldwide and connect unknown successful traders with sources of investment capital. And I like to say, Jack, welcome to our Limit Up podcast.
Oh, thank you, Eddie. Glad to be here.
Now, Jack, let's start out. Let's go back a bit. The very beginning of your career, now you're filled with knowledge. You're an icon of knowledge. And what I want to know, and what probably a lot of listeners want to know, is how you got there. What was it a passion? Was it a hobby? Where did it begin, Jack?
Well, it happened. It happened by chance, really. So I was out of graduate school for a degree in economics and just really looking for an analytical job. And it to not go into the long story, but just bottom line, put an ad in the paper. I got tired of dealing with employment agencies. After about 2 weeks, I had a short patience span, like I always have had.
Right.
Anyway, so I tried to take things in my hand. Back in those days, you could put the New York Times had a position wanted section. And I put in a short ad, just saying, graduate degree, Brown, minor, major economics, minor math. Looking for an analytical job, period. Whatever the minimum was, how many words there was allowed, which was less than the original tweet limit. That led to a number of calls. Only one legitimate call, and that legitimate call ended up to my getting a job as a commodity research analyst. And that position actually, the position I took was a position being vacated by Michael Marcus, who ended up years later being chapter 1 in the first Market Wizards book. That's how we met. I was taking the job he was leaving to, in quotes, become a trader. He was very successful in becoming a trader, obviously. But so that's how I fell into it, really knowing absolutely nothing. I knew nothing about futures. I knew nothing about trading. I had never thought about a career in the markets. It was just the job sounded good, interesting, not financially remunerative, but it sounded interesting. It was analytical. And I was in a job for, a couple of weeks and realized, hey, the research we were putting out, at least in futures, was not terribly good. And I said, boy, it shouldn't be easy to excel here. This has nothing to do with trading. This is just a matter of, just the analysis. And that's how I got in. So once I was doing market analysis, that got me interested in trading. And that's basically how it began.
Now, Jack, you've developed into a serious student of the markets, and I think we all try to follow that guideline. In addition to Market Wizards book, you wrote Complete Guide to Futures Markets, Getting Started in Technical Analysis, and many other books. Now, as you've learned the trials, tribulations, the positives, the negatives, what goes into good trading, and what's a safe, simple, and successful formula for trading?
Well, there is no formula. In fact, the concept that there is a formula is actually, I think, very misguided. So what I always tell people, and this is, I've seen this, through all these decades of interviewing traders repeatedly, good traders don't have, didn't find a formula like reading a book or something like that, or my book or any other book. They basically they get information from different sources, they may learn from different people, but ultimately they develop their own methodology. And there are two kind of core elements to any successful trader. One, they've developed their own methodology, which has some edge. It doesn't have to be a large edge, but it has to have some edge. If there's no edge, then there's no way you can win over the long term. And secondly, they learn risk management. So I'd say those are the two essential ingredients. And so you have to develop your own methodology that has some sort of edge. And I don't care if it's purely fundamental, purely technical, some combination of the two, short-term, long-term, futures trading, stock trading, give me a million different variations. I don't care. Any of them could work as long as it's kind of what is right for you, what you gravitate towards and find works. And you've combined with money management. And the approaches are totally, totally different. I mean, some of the fundamental guys I've interviewed have complete disdain for chart analysis, never used it, think it's just a bunch of nonsense. Right. And some of the pure technical guys I've interviewed, talk about how they just lost money on fundamentals and finally made a lot of money trading technicals. And there's people who combine the two. It's like somebody like a Kovner who's heavily fundamental and could talk to you. When I talk, could have discussed the intricacies of the economies of any developed nation and probably some undeveloped ones. And also, but he would also look at charts, whether he talked about it. Well, he did talk about it to some extent, but he basically used both. So it doesn't really make a difference as long as it's right for you. You could take somebody, we took somebody like Rogers, who's just pure long-term fundamentals, give him charts, and it's only, first of all, he's not going to pay attention to it, but if you ever tried using it, it would be negative. So you have to find your own approach. And again, the money management I come back to, because most, especially novice traders, don't really understand this, that it's not so much the trading methodology that's absolutely critical to trading survival, but it's the money management.
Yeah, I have to agree 100% with you. And with the management. Management is so important. You need to not only manage your account, but you have to manage yourself. You have to be the boss, and you have to make the right decisions. And sometimes it's really tough, and sometimes you've got to ask yourself questions and have answers and proceed forward. Now, you mentioned the edge, and I had an interview, did a podcast with Blair Hull, and that was something that he put out in front as this is very important. He had the advantage, the edge, something that would only give him a green light. And it wasn't very seldom. It was very rare. So it wasn't a situation where, just one after another, they talk about the one trade, the sniper trade, one trade, wait all day for it, take advantage of that. Now, having the edge, you talk to a lot of people, you talk to a lot of successful traders. Has this edge evolved over years, or are we going back and taking that edge and just bringing it through trading history, saying that, you know what, it's plain and simple. If you don't understand this, you're in the wrong business?
Well, it's not so much evolved as it depends. Well, it has in some sense. I mean, certainly, you take somebody like Ed Thorpe, who was probably the longest interview, at least the longest written interview I had in any of the books. And he went through many phases, but he kind of discovered so his edge was, he was the first guy, he mathematically, he came up with an equivalent of the Black-Scholes option pricing model many years, quite a few years before that article ever came out. So for a period, and he didn't publish it, even though he had a math degree. He just, PhD. He wasn't interested in publishing. He was interested in using it. So for many years there, he was kind of just printing money because he was probably one of the only people in the world who actually knew how to price options. So that was a great advantage, But anyway, as option markets became more efficient, then he ultimately gravitated. He did statistical arbitrage in the air and involved that, convertible arbitrage. He basically kept on finding different financial approaches where the market was mispriced or had some. See, he kind of figured out that the market was not pricing things correctly, and he found multiple ways in his career how to do it. So that's kind of an example of somebody personally evolving it. And of course, it also is the market's evolving because as these techniques are discovered, some of them, they get arbitraged away. That's in that case. But in other cases, if it's somebody who's just inherently a good trader, that's a personal thing. That's not something that gets arbitraged away.
Right. So that goes back to patience and discipline, which is something that
those are elements. There are many elements of it, but certainly patience. This patience and discipline are certainly two critical ones. Patience to, as like you use a term, sniper trade. The idea is to wait for the right trade, and not to be tempted to trade just for the sake of trading, but to wait until things are really set up exactly right, so the probabilities are in your favor. And it's also patience to stay with a trade, which is difficult to do. People, when they're right, are tempted to take a profit, and to really make a lot of money on a trade, you've got to stay with it for a length of time. And some of the traders who really made a lot of money have been able to do that.
Now, Jack, what would be recognized as one of the biggest market evolutions, taking a look at the big picture?
Well, I mean, it's hard to ignore the computer, right? I started in the business when there were no even laptops, right? So we go from no computers at all. I mean, there were IBM mainframes which took up a whole sized room, and you had to do punch cards. I mean, but go back to the early days. I mean, literally, that was the state of of computers at that stage. And you go from that where just anybody can have tremendous computing power at their fingertips for a couple of $1,000, and so it's and of course then you have the quant shops who have massive computing power. So that, I guess, is the biggest change. And what that does is that opens up lots of strategies which would have been impossible to execute because they just required massive computing power, which didn't exist. So the very emergence of computing power itself leads to strategies which were impossible. Let's say if you go back to my starting days, that also the fact that kind of leads to certain things becoming obsolete more quickly if they're purely quant based, and so it does change the nature of the markets. But some of the some of the underlying things don't change because markets, bottom line, are still driven by human emotions.
Right.
And so you still get bubbles and you still get, busts, and you get prices, markets overshooting in both directions, and you still get all of these things because they're part of human nature. And as long as it's humans trading markets, that part is still there, and that leads to certain opportunities. And also, human nature has certain weaknesses, which mean that most people will lose money. But people who learn the weaknesses of human nature and deal with it have an advantage.
When I was on the trading floor, I think beginning of my career, the only computers we had there were the computers for time and sales. And then, it started to evolve where we had electronic trading circled around the S&P pit. And, the open outcry was like, how are these guys going to be able to trade? Now, the shoe's on the other foot. And, with all the information we have in front of us now, it's, we are trading. We are trying to sell the high, buy the low, but there's just so much information out there right now. Now, Jack, you're one of the founders of FundSeeder, FundSeeder.com. Well, now we share a belief that a good trader can be found anywhere.
So first of all, I don't ever take credit for what isn't mine. So it wasn't my idea. The company was founded by three partners, myself, Emmanuel Villari, who's the CEO, and James Bibbings, who's the chief operating officer. Anyway, but it was Emmanuel Villari's, he was the one who had the original idea. And when he told me about it, I met him because I was advising a fund, a multi-manager fund for ADM Financial Services. And he was with them and had a subsidiary of them, and that's how we knew each other. And my advisory firm, which I was with then, which is a London-based firm, got bought out, got acquired by a merchant bank in the UK. I decided to leave at that point. I was the only U.S. employee anyway, and this multi-manager thing that we were doing. And on the future side was my baby anyway. And so I maintained a relationship with Emmanuel and then ADM. And sort of that's how we knew each other. And the one conference we were at, he pitched this idea. And the idea was, what do you think about it? I've got this idea. And the idea was, why not create a web-based center where, traders from across the globe could, have their trader accounts linked to and verified, and then that could be a source of finding trading talent, and then one could connect that trading talent with investors looking for emerging trading talent. The idea is that really we have evolved. The financial industry has evolved to a point where almost all the money, or a vast majority of money, goes to a very small number of very large hedge funds. And if you're a trader, especially if you're not from the US or UK, or a couple of other countries, and no matter how good you are, you're not going to have a chance in the world to get any allocations. So I'll give you, we've had signups from 120 countries. I wouldn't have guessed that there are traders in 120 countries, but we've had people register in 120 countries. And I'll give you an example. And I've been looking at and kind of interviewing some of the ones which have been really standing out. So this is one track record, and just phenomenal. And I look, by the way, we can get into this. I don't want to go into this tangent now. We can pick it up a little bit later. But I look at return risk, not return. And so there's a lot of guys there with really, really good, return risk numbers. I don't particularly use the Sharpe ratio, but most people are familiar with what a Sharpe ratio is. So let's say we're talking Sharpe ratios of 2 or 3, even though 4 even. So, but I'm looking at it through different metrics. Anyway, so like one of these traders I'm talking to, just a 5-year record, not only just good returns, but just so smooth. And the reason we know it's real is because these accounts were getting the numbers not from the trader, we're getting it from the broker. So we got a verified track record, just like one of those mountain charts. The number of actually traders have things like that, but this one's like a great example. And speaking to the fellow was basically managing a hotel desk, not managing, a hotel clerk basically. Up to the had a passion for the market. Started trading 7-8 years ago with a small amount of money. He's built it up to a couple $100,000.
Nice.
Guy's located in the Czech Republic. No real education. I mean, didn't finish the equivalent of college here. But yet he's developed this trading methodology, which is, I won't say more than based on trading on earnings, and he's figured out patterns in earnings that are predictive. And that's all he trades. And so he doesn't trade that many times, for each trade, he trades large cap stock. But he's got this magnificent record. And some guy in Czech Republic trading $200,000, which he started with 30 or something, and no real education. A guy like that wouldn't have a chance, of ever getting any allocation. So that's a perfect illustration. So the premise is there are lots of good traders. When I say lots, I mean a number, not a percentage. The percentage of good traders out of all traders is tiny. But if you've got hundreds of thousands or even millions of traders, you don't need a large percentage to have a lot of good traders. And most of those traders won't ever have a chance of ever getting an allocation, no matter how good they are. They won't get anybody to pay attention to them, look at them, or whatever. And the idea of Fund Seeder is, hey, they can go on, they can link their account, they become visible, and they have a chance of getting actually allocations. And so, which is done through, I should say, for legal reasons, that we have a separate company, Fund Seeder Investments, which is the company that has the registrations and does which is the one which does the investments. Fund Seeder itself, Fund Seeder Technologies, is basically a trader side, has all the analytics. It's what we use as our databases where we can find traders, but the actual allocations occur in a completely separate company for compliance and legal reasons, which is Fund Seeder Investments.
All right, now transitioning. I coming from the trading floor, I was lucky enough to transition into electronic. There's a lot of traders in the open outcry that just couldn't do it electronically, and had a very hard time and are not in the business anymore. Now, for fund seekers, what type of traders is Fund Seekers looking for? Is it performance or risk-adjusted returns? Sure. So, let me just for people looking for the site, it's Fund Seeder, like seeding a crop. So, FUNDSEEDER.com. So what we're looking, we're pretty, as long as it's liquid. We're not looking for, people doing, illiquid type of, credit transactions or stuff like that. But anybody trading, futures, FX, liquid stocks, any of that. Now, as far as what's going to push them to the top, we have our own proprietary score called the FS score. That I can't even explain it in shorthand because it's a complex score. There's a lot of stuff going on. It's a return risk measure. It will take into consideration the shape of the return distribution curve. It will try to identify accounts which are vulnerable to tail risk. It will take into account the length of trades. So it's a fairly complex number, but that is the key number that determines the rankings and the leaderboard. And we have something called the FS index, which is the top 5% of traders based on that FS score. Now, as far as we have all the return risk metrics like Sortino, Sharp. I've got in my own measure, which I like a lot, which is the gain to pain ratio. And I should add that all our data is based on daily data, so it's a lot more meaningful than typical track records, which are monthly data. So we apply these statistics to daily data. So if you're looking at 5 years of daily data or whatever it might be based on return risk measures, well, that's no guarantee of future performance, but it does give you a really good insight to that trader's return to risk. And we also have things like underwater charts that you can see all the traders drawdowns in graphic form. But a lot of emphasis on return to risk. We also have, of course, cumulative return, or an average annual return. I personally
never look at those independently. I always look at the return risk numbers because that's all that really matters. I can always, my attitude from now putting on my allocation hat is, let's say if I'm an allocator for a multi-manager fund, I would basically be sizing the allocations based upon the risk anyway. So to me, there's no difference. Somebody makes 40% and has, let's say, whatever risk metrics say has a risk of 2x, and somebody making 20% having a risk of 1x, and somebody making 10% having a risk of half x. Those are all equivalent to me because, I'm going to size the allocations accordingly, and they'll all have the same return and the same risk. So in that simplified example, so I'm only looking at return to risk. If somebody has low, very low risk and low return, moderate returns, I don't care. I can leverage that trader, or not leverage, allocate more to them and get a higher return. And if somebody has a high risk and high return, I'm going to allocate less, and so it'll all end up being the same. So the only thing that matters, the only thing that matters is return to risk. And the thing, if anybody doubts that, I always kind of tell people this. If I give talks, I say, if do you want to double your returns? I can give you a foolproof way to double your returns. And all you got to do is just double the position size of every trade you do. Now, is that going to make you twice as good of a trader? No, it hasn't changed you at all. It just means that you're going to lose twice as much when you're losing. And if you can do that, then, that's fine. But bottom line, it's exactly the same track record. So all that matters is return to risk. I think just looking at pure return is kind of irrelevant.
I've been mentored by many successful traders, and I treasured many of the tips, many of the directions, much of the education from these traders. And, with what you have done, you've written books, and you've had a lot of interviews with a lot of traders. The list: Richard Dennis, Paul Tudor Jones, Ed Sakota, Marty Schwartz, who my sister was his S&P phone clerk for many years.
Boy, that have to be a tough job.
What I want to ask you about the interviews that you had, the opportunities to talk to a lot of these traders, to pick their brains. What interview impacted you the most, and why?
Well, basically, as far as favorites, insofar as I have any favorites, I would say you can usually tell by what the first chapter is, because, and that's favorite. That's a favorite in that I think that the interview has a lot of interesting stuff in it. It doesn't mean it's necessarily the most meaningful, but it's the one that has the best combination of both advice and good stories, and it just makes a good read. There's one exception to that, I think, in Hedge Fund Market Wizards, which is the last normal format, the question answer, and then summary, introductory and summary, the standard format I've used for my Market Wizard books. So that's how I would answer what the favorites were. As far as most influential, it's hard to say. It's kind of cumulative. I mean, just so many traders harping on risk management and different ways of doing risk management. All of those basically had an influence. If I think of the line that I like to quote as maybe the most meaningful to me in terms of risk management, because it's literally one sentence and really did affect the way I trade, is, and I regret it when I don't do that, is know where you're going to get out before you get in. And that was a piece of advice by Bruce Kovner. So I guess, if any single sentence in all the Market Wizard books impacted me most, that's probably that line, because I think it is just such a terrific piece of advice. And it would save a lot of people a lot of heartache and money if they followed it.
Right. A lot of traders come into the trade day and, the mentality is, how much money can I make? The thing is, they're looking at it all wrong. You got to ask yourself the question, how much money can I afford to lose?
Yeah. And that's why you figure out, and it's not only how much money, and this is a point that one of the hedge fund managers I interviewed in Hedge Fund Market Wizards, Colin Moshe, made, and he said it's not, people actually get this wrong. They decide that how much money can you lose is an important question, but it's in the wrong sequence. So he said a lot of people will decide how much they can lose. They've got a normal trading size, and so then they will determine their stop by, how many, contracts or how many shares, depending on what they're trading, can, no, sorry, not how many contracts, how many shares, how much, what stop point, given the order size, what stop point will hit that amount. And his point was that's all wrong. You know how much money you want to lose. Well, you shouldn't know what your trading size is. What you want to determine is separately, where should the market not go if you're right, which is also a point that Kovner and others made. And once you pick that point, then you determine your trading size, because you know how much you can lose, where you want to have your stop to be meaningful, and that will determine what your trading size is. That should be the last thing that you figure out. So that's an important point, as is, of course, the whole idea of picking that point before you put on the trade, as Kovner advises, because then you have complete objectivity.
It's like driving a car. Be safe, be a defensive driver.
Yeah, I guess. Yeah, I mean, it's really, and it's also, it takes a lot of emotional strain out of things, right? So, but I mean, normally, if I put on a trade, at the same time I put on a trade, I will have a stop to that trade, because I've decided, well, okay, I'm buying or selling here, and then the stop's here, and that's it. And then I don't have to worry about it. I don't have to worry, is the market going against me or not? Because there's a stop there, and it's a stop that I pick before I put on the trade. And if that stop gets hit, one thing for sure, whether the trade works out long run or not, my timing sucked. Right. I was wrong. Bottom line. So either the trade was completely wrong, or it's just my timing was off. But either way, I was wrong, right? So, so I don't have to agonize about it or worry about it, because, well, if it's going to go against me, I won't be around too long to have it do too much damage, and it's predetermined. So it does take a lot of the strain out of it, and yeah. So I think that's good. That's good advice for anybody.
Right. I'm allergic to financial pain, so same thing. You know what? I'm not going to stick around. Now, some of the performances in the books of the traders, what makes these traders special?
Well, I mean, there's no question. I mean, they're, first of all, these traders, for the most part, I always try to get people who have longer term records and sometimes very long records, but also their performances are so far from normal that it's not, you just don't get that by pure luck, right? So, and what makes them special is, well, it's different in every case. If it's somebody like Thorpe, he had the combination of strong mathematical ability combined with creative insight into markets, and was able to combine those. If it's somebody like a Marcus, he's just somebody who has great intuitive trading sense. Somebody who could look at a market and there's 100 fundamentals and kind of can pick out the fundamental that is going to drive the market. So it really depends on the person. Each person has a different talent, and then that's why that goes to the methodology they end up using.
Okay, now coming up in 2019, right? Market Wizards is going to have its 30th anniversary. Is there anything special planned for this?
No, there isn't. There'll be a new audio version of it.
Tell us about it. Tell us about this audio version.
Well, first, the Market Wizard books, they all have audio versions, and I didn't have control of any of them except one. Actually, the hedge fund Market Wizards one is good. But the one I had control over was the new Market Wizards one, and that my agent got me the audio rights back, so I was able to use ACX, which is part of Audible, and it's kind of neat. You kind of put out a file, some text for people to apply and to audition for it. And so I posted it, and like within 2-3 days, I had like 40 auditions for narrating, of the sample I provided. And they were like almost all good. I would say 90% of them were at least good or better, so it made it hard. But so then I started listening to some ones which were really exceptional. I got it down to like 10. And by the way, I pulled the thing off the site because I didn't want to get any more. I was like being, I just couldn't stand to have to go through any more of them. So I had more than enough good ones. So I got it down to 10, and I sent it to about 10 people that I knew who would, these were people like who did their own podcasts, like Mike Covell and or Trey, people that I, that had some reason. I had a cousin who's in public relations, et cetera, et cetera. So I got 8 out of 10 picked this one guy as number 1 or 2 out of the 4. I sent through a sample of the 4 best ones that I thought. And so I took this guy, and he did a phenomenal job. So the original Market Wizards narration is okay, but it's really, I think, way inferior to what this guy did with New Market Wizards. And so I've been trying. Publishers are so difficult to deal with. My agent's been like going, I said, look, I'll pay for the narrator. Just give me the rights, give me the rights to do. So just 6-7 months trying to get them to give me, give an amendment. Right. And we're like one line away, and I'm still waiting for weeks for that. I got the narrator ready. So this, but they've agreed in the principle. I just got to get the final paper to sign off, and then I've got it all, and this fellow is he's so diligent that he actually will listen to and find, look at whether traders who have something on some YouTube, there it's captured in some YouTube thing, or they listen to the audio that I can provide. So he tries to get. He's not trying to copy the voice so much as try to get the nature, the characteristic of the person. He's an actor. So the thing that's so great about it is that, the different people sound different, and it's so way superior than what was done with the original. Now, the interesting thing was that Market Wizards has always been the best selling of the Market Wizard books. First one, I guess, and New Market Wizards does fine, but still not as good. Still Market Wizards is always outselling. Interestingly, once I had this audio of New Market Wizards, it was dramatically outselling Market Wizards in audio. So it was in Kindle and hardcover, softcover, every other version, Market Wizards was selling better. But in the audio that I produced with DJ Holt, who's the narrator, that audio was outselling substantially the Market Wizards audio. So I've been trying to get getting the agreement, which I'm very close to getting. And once I get that, he's all set to narrate it. And so he'll do the narration of Market Wizards, and it will be a treat because he's just phenomenal. And actually, I would look forward. I don't read my own books again, but I've kind of heard them through the audio, and I actually myself would look forward to hearing what he does with my own book.
Awesome. So you passed on Morgan Freeman.
He didn't audition. I do like Morgan Freeman. I would have considered him, but he didn't audition.
All right. A couple more questions here now. Jack, I want to ask you about your take on the newest and hottest investments going forward. There's a lot going on. We went through the .com, and now we've seen Bitcoin run the scale, pull back. It seems like it's a little ever since the exchange got involved. It's a little regulated a little bit. What do you think might be some of the newest and hottest investments going forward here?
I don't know newest and hottest. I think the standard investments will remain the key ones. As far as all the cryptocurrencies, I think probably a lot of them will go to zero. I'm almost sure. My initial inclination was to think it's all. When I see a market go from 1,000 to 20,000 in 1 year, from all these years in the markets, my initial impression is it's a bubble. And given nature, I guess it's still that. And I was tempted with. I honestly, seriously thought about going short the first night when it started trading on futures, but I said, but I really don't know anything. I said, no, I'm not going to sell it. I mean, if I was going to do anything, I was tempted because I thought that and of course it's going down a lot since then. But the only qualm I have about it being a complete bubble is that it has a function in the black market, both for stuff like illicit drug trading and also for ways for people from corrupt countries to get their money out.
Right.
So it serves that function, and that's what it's about. It's not about I'm no expert. I know nothing about cryptocurrencies, but this little blockchain. I mean, I think that's all a bunch of malarkey. That's the reason why it's going up, because banks can do their own blockchain. They don't need Bitcoin. They don't need the other crypto currencies. I think it's all about that. Well, part of it, of course, is mania. People, goes up a lot. People buy stuff like that. Mm-hmm. But insofar as there's a legitimate fundamental reason, it's simply because it's a way, as I said, for black money to get out or move. And so because of that, it's hard to estimate what that market is. And so there could be a substantial market that uses that type of currency. And so if it succeeds, or some of them succeed over the longer term, it's going to be, I'm convinced it's that, not blockchain technology, which may be the future, but it doesn't, but that doesn't mean that these companies, that the cryptocurrencies would be the ones that benefit from that, because it could be copied, So it's like the internet was a giant development, but a lot of the early internet companies went bust. So they may have been totally right, but it doesn't mean that they're going to be the ones that make the money.
It was like leaving a class of second graders alone for an hour and coming back an hour later and just seeing what had happened. I mean, it was, it was. Well,
I remember, right around also the time the futures were starting. I had my cousin, I'm close with, as a nephew, and he had, this is a kid who's, right. He works as works for a hotel or something like that. I mean, he's not got a lot of money or anything, and so he had bought Bitcoin. She asked me what I thought. And I said, Frank, look, I gave it a spiel. I said, bottom line, I said, if you ask me, and I think at that time it was like 17 or 18,000. I said, if you ask me, if I was going to go one way or the other, I'd be short. I mean, that's all I can tell you. So yeah, I don't know. It could go to 100, sure, but it could go to 0 or 2. So I said, if you ask me so to me, what struck me was, here's a kid who knows nothing about finance and he's buying Bitcoin. I mean, that can't be good.
Yeah, my son did the same thing with Ethereum. Like, why don't you ask me before you went and bought it? But anyway, Jack, I want to ask you, if you could go back into time, we had a time machine, you go back into time, and you tell yourself one thing when you started out, what would that be?
It would, we hit that line before. If I could just tell myself one thing, it would be that know where you're getting out of every trade before you get in. Make that decision before you get in, and trade, only do those type of trades. And that would be, if I could only give myself one bit of advice, that would be the advice.
All right. And I hope that those that are listening takes that bit of advice.
And I didn't know that, right? I mean, it took me many years, decades even, to fully appreciate that.
Trial and error, once bitten, twice.
Well, I got it. Well, I guess I had the advice from Kovner back in '89, and I don't remember when I started using it or whatever, but still, even then, was well into. I'd been in the industry for a while before that point.
Jack, last question. What's your favorite book? Who's your favorite author?
Well, favorite authors is different than my favorite book. Well, favorite authors, I mean, a number of them, and it's nothing, and I'm not going to be financial books per se. Well, Michael Lewis, who has written both financial and non-financial, but Michael Lewis is definitely one of my favorite authors because he's just a terrific writer. And in fact, some book like The Big Short, which is amazing because he takes the most esoteric financial topic possible and makes it compelling. So he's a wonderful writer. Anything Michael Lewis writes is great. One of my favorite authors is Bill Bryson, who's a humor writer. They made a horrible movie out of it. They completely killed it. He has a phenomenally, entertaining book called A Walk in the Woods about his doing the Appalachian Trail, where he's out of shape and his companion is is his old college friend, who's even more out of shape than he is. But that's just a terrific book. But in the number, he's written a lot of. He has a book called The History of Everything, which he goes through the history of science, but in an entertaining way. And so, as a non-scientist, and it both is filled with a lot of information and lots of humor. So Bill Bryson is one of my favorite authors. As far as my favorite book, I have a single favorite book, and and again, nothing to do with finance. Although I shouldn't say it has nothing to do. Actually, it has something to do with finance. It has something to do with life. It's a book called Endurance, written by fellow Alfred Lansing in 1956, I believe, and it is the narrative of the famous Shackelford expedition, where he and his crew got trapped in the ice,
right?
And how they, and what happened in the subsequent years. And it is a phenomenal story, and that book does a great job of it. And it is, just testimony also to human strength and confidence in nature and so forth. But that is probably that's one book I probably have read a few times, and it's just of a book, that's my single favorite book.
Fantastic. Jack, I really want to say thank you very much for being with us. I really appreciate it. And all the best. Keep us posted when the release for the audiobooks are going to be. We'd like to share that with the audience.
Yeah, so I think if I can get the publisher to get the final contract, the amendment done, the narrator should probably be able to wind it up in a few months. So I would expect it'll probably, and I have I will tweet announcements to the effect of when it's coming. Fantastic. And what I would expect, though, that it'll be available, say, by the fourth quarter, sometime in the fourth quarter would be my guess, which would be kind of right in time for the 30th anniversary, although I didn't make that connection until you asked the question.
There you go. We're doing our homework here. Jack. All right. Well, Jack, all the best to you. And I hope down the road I can give you another call and do another podcast with you. Loved it.
Yeah, sure. It was fun.
All right.
Okay. Good speaking with you. Take care.
Thank you, sir. Take care, Jack. All right.
All right, we'll be right back. And coming up here, just a couple minutes, Triple H. Hogan Horn will be talking about our 9/11 stories. And we are back. Hello, Johnny.
Hello, Eddie. You sound like you're down in the sewer.
Hey, Norton. You down there? Hey, Ralphie boy, I'm down here. Come on down, Ralph. Hey, Norton. Oh, the sewers. But, well, it is time to discuss, actually just talk about kickback a little bit, as promised. And if there's any questions, by all means, post those in the YouTube chat or the Discord chat. I'll be flipping back and forth for that. But today, 9/11, and a lot of us were children. A lot of us were adults. A lot of us had different experiences on that day. And that's one day that I know for a fact. I mean, it changed everything. At least, if we can go back before that, peaches were sweet and apples were plenty. But things have changed, and it's been a long time ago. But I wanted to share my story, and John sharing his story, and we've got Brett going to be coming in here also, sharing his story, and maybe even Jack might share his story. Different perspectives for 9/11, but John, you said that you were on vacation, and you were in Florida.
I was in Myrtle Beach, South Carolina.
Oh, North Carolina. Okay.
Yeah, it's South Carolina. Yeah,
South Carolina. Right. One of those.
Right.
I apologize. Let me ask you. Was trying to get back home after the initial fact, was that a problem?
We thought that it might, because as you remember, that like all flights were every plane was grounded, and for a number of days after that. So then we flew to Myrtle Beach on Saturday. We were going back on Saturday. So, as the week went on, we started, wondering if we were going to be able to get back. So we had, we were called around to try and find like an RV for all of us to fit into so we could drive back home. And there was nothing available. Some folks came up with the idea apparently long before we did. So we just kind of waited it out, and we ended up taking our scheduled flight home. There was almost nobody on the plane. It was basically us and the flight crew, and that was it. The flight went off, no problems. It was kind of unnerving, I guess, but yeah, we were able to get home, no problem. I think the timing, was in our favor, because it happened on a Tuesday, and by, I think, Friday, flights were back flying again. So we were able to fly home.
That's good. I mean, a lot of people, had a hard time finding a ride. Not to make a joke about it, but it was like plane, trains, and automobiles for many people. Just trying to get home. Dave commented here. Dave is saying, I suppose I was supposed to fly back to Boston from KC on that day. It took a week, but finally got a rent-a-car to drive back, picked up and dropped off people along the way. And I think that's what a lot of people tried to do. Like you said, you're trying to get a mobile home where if anybody's going my way, we're coming together on this, Yeah,
I mean, we had 7 people with us, so we needed something that was going to, I would have taken a cargo van, whatever it took, but we couldn't get anything.
Right. I would imagine, just everybody scrambling. Jimmy Decker 9/11, when the U.S. started to lose sight of what it was founded on, to say nothing of forever wars, had friends deploying, looking back, not great feelings. Yes, it had many friends that deployed after the fact, but that's part of it. So you did get home safe and sound, and what was the overall feeling after that?
Well, I think everybody, I think the country had a collective feeling like, what was that first, and what are we going to do about it?
Right. That's one thing too, is exactly what are we going to do about it? But I tell you, after the fact, after it did happen, well, let me just take a few steps back. Now that day, when I got on the trading floor, I was working for First Chicago, and we were located at the Board of Trade, and it was just a normal day. It wasn't too busy. Everybody's sort of talking and going through the motions, and fills here and there. And then when the first incident happened, on the Board of Trade floor, there was a jumbotron. I mean, it was a huge screen in the corner of the trading floor. And not right away, but my customers were Deutsche Bank and Royal Bank of Canada. And my buddy Reno from Deutsche Bank, he's like, did you hear what happened? He calls up, he goes, you hear what happened? And I'm like, no, what's going on? And he goes, yes, something blew up in one of the towers. And they didn't really know what was going on. And this is how the story started to develop. That a rogue trader had taken his Cessna and flew it into one of the towers. But then this sort of came a little bit clearer as time went on. Excuse me. So what they did is they had put the tower, the smoking tower, on the jumbotron, and everybody was sort of going on the hint that it was a rogue pilot that wanted a little revenge, and actually it turned out to be bigger than that, looking for revenge. And as we were watching, everybody's sort of, there's like 5,000 people on the trading floor, and like I said, the day wasn't too busy. It wasn't busy at all, because everybody was sort of wondering what's going on over there. This thing's really starting to smoke. And as we're watching this jumbotron, we see the second plane hit in real time. And if you can imagine 5,000 people all at once going, and then it was like, what the hell was that? And then the thing is, one of my traders that was at Deutsche Bank, their office was like a half a block away. And as soon as that plane hit, I get another call, and he tells me we're going to the bunker. Okay. They had another offsite trading facility in case something happened. They were prepared at Deutsche Bank, right? And they were prepared for years. If anything was to happen, if maybe electricity went out in New York, they would all transfer to another location. So that was the case for those at Deutsche Bank. And the thing is, too, I mean, it was really hard to get communication with anybody, because everybody at that point was on their phones, calling out, calling in, checking out, checking in, what's going on. I mean, the phone systems overloaded. So I didn't talk to him until later in that day. One of my customers at RBC, before this ever happened, he would do a 10 lot, buy or sell, and we would either buy it or sell 10 lot in the Dow, and he would get out at the end of the day. All right, there was a limit to it. He had a stop limit on there, but he would get out at the end of the day. So I'll get back to that story later. But when that second plane hit, this is when everybody sort of said, "Okay, what's going on?"
Mm-hmm.
And it was to a point where there was you can feel panic in the air. People wanted answers. We're watching this, and there was no audio. We're making phone calls trying to find out, hey, what's going on here? After the fact, then that second tower hit, we started hearing announcements on the trading floor regarding that, situation in New York has happened. Not too sure what the situation is, but we will let you know as soon as possible. So what was happening is the floor finally realized that it was a terrorist attack. And this is what happened. Got some information over the lines, just word of mouth, other desks. We were asking other companies, what's going on? Did you hear anything? Did you hear anything? And once the terrorist attack, was known, this is when the floor was in question of if we're going to close the trading floor. Okay. There's a lot of people that had left at that point. There was a lot of people that were still on the floor. And, what they did is they did say that, we are going to clear the trading floor off and, make your way home and the safest way possible. And, we still had orders in the pit. We still had this and that. And the thing was that there was like a different wave of exits, the mass exit on the trading floor. The first one was people actually ran out the door because they figured that the trading floor was the next target or one of the targets or could be one of the targets. So a lot of people actually ran off the floor, either get in their cars or catch a train or so forth. But others walked, then we had the people that walked. But the thing is, if my guys at First Chicago were like, well, if it's going to hit, it's going to hit, I'm not going to run out the doors in a panic. We were some of the last people to leave because what we did is what happened was they had shut down trading. All right. They shut down trading and I still had this 10 lot. I'm trying to contact this guy and I couldn't get through, still had a 10 lot. And so I'm like, a few of us got to stay back here. One of us got to stay back here. So I sent a couple of the guys home. I stood back there. And what they did is, I can't remember how it went, but it did open up again. It did open up, and it opened up and then it closed the market. Then it opened up again and closed. And there was one guy in there that was just taking advantage of the whole situation. And he was one of the bigger traders. I can't remember his badge. But there were still people in some of the pits, very thin floor. But eventually they closed everything down and said, okay, we're everybody out now. We're not going to open the markets up anymore today. So, leaving the trading floor, was, there were some people still sticking around, people looking up in the sky, people wondering what's going to happen next. Because now we heard the Pentagon got hit, and then it's like, okay, what's the next tower? So we're all thinking Sears Tower, Willis Tower. This is going to get hit. And walking to the train station on that day, walking to this train station. I never walked as fast as I ever could in my life. Okay. Long steps. I'm not going to run. I'm going to take long steps. But the thing was, I was always looking up at the Sears Tower to see if, if anything happens, I got to find somewhere to hide from falling debris. So made it to the train station, and what they were doing on the train, which I thought was a great protocol, they were just putting everybody on the train. They had the trains lined up. Metra had their shit together. They had trains on every track. They would fill one train up. Okay, filled up, and I mean filled up where the seats are taken, aisles are taken, and upstairs aisles and seats are taken. So I mean,
load and go.
Load and go. Right, exactly. And at this point, somebody had a radio on the train, and we're all very quiet. I mean, there's 80 people on a car that seats 30. So somebody had a radio, and they turn it up, what's going on? And then I hear like, oh my God. And we're like, well, what? And the lady says one of the towers just collapsed. And I'm like, what? We're all like that. Like, what are you talking about? It collapsed. That's crazy. Dustin Hoban here says, I was right next to the Jumbotron on the floor when the second plane hit, exited stage right, watched the news from a bar. Trains were packed. Yeah, exactly. That's what it was about. But they did a very good job getting us home. Got off the train, and I mean, you're sort of wondering, okay, what is going on? So got home, and right away put on the TV. And Peter Jennings was my buddy for the next, I forget how long we were closed, 2 days, 3 days. But it was just constant watching the news. And then they came out talking about Osama bin Laden, which, they knew that like within a day, like he could be behind it. And it was like, wow, this is, completely something you didn't want to hear. And you knew at that point, okay, things that they got through, terrorists got through to the U.S. Now, if you remember, there was a bombing at the towers years before.
The parking lot downstairs. Terrorist attack.
So, this is all into play. And I know when we got back, and we got back to the trading floor, opened the trading floor back up, everybody's little, we were all nervous. We were all nervous about the whole thing. Is there going to be another attack somewhere? There could be. But thank God there wasn't. And that 10 lot guy. Now, phones came back. Obviously, we came back on. My video is off. Why is my video off? What happened? My video been off the whole time? I don't know. Must have turned off itself. All right, I'm back. I blame the terrorist turning it off. But anyway, we got back on the trading floor, and my 10 lot guy, I talked to him. He goes, wherever the market is, get out. He was at RBC, Royal Bank of Canada, and on a 10 lot, getting out of his trade, he had made $70,000 on the trade, and he didn't want to take it. And I go, we can't take it. You got to take it. He goes, I want nothing to do with that trade. I go, it was in your account. We got to put it in your account. If you want to do something with it, donate it to something, whatever. But it was a $70,000 winner on a 10 lot. And then a couple weeks later, what we were doing every year with First Chicago is we'd fly to New York, and we'd do our fantasy baseball picks. And, everybody had it was 2-member team. And, it was very raw there. There was a lot of National Guards everywhere. Guns, uniforms, the gear, everything. And I mean, New York was. I mean, it didn't. One thing you gotta give props to people in New York is they didn't shut down. You know, they knew what had happened. They kept the heartbeat of the city moving. They kept, morale up. But one of the things is when I went out there, one of the guys from Deutsche Bank let me stay at his townhome. They went to the Hamptons. This guy was a big guy on the desk, and I had his condo that was probably 80 floors up somewhere. I forget where. But my first day there, got there, and early in the morning. I tell you, this is like maybe less than 2 weeks. Whenever they opened up the airlines again for everybody, I hear the Star Spangled Banner playing throughout the city. And I mean, throughout the city, I'm like, where is that coming from? And they had big speakers somewhere that was emanating throughout the whole city. Probably, I think it was maybe about 8 o'clock in the morning. They'd play that. And, that was, I mean, it was a very, very humble, time. And it was a proud time too. It's like everybody got together, everybody was on the same platform. No matter who you were, we're Americans, and this shouldn't have happened. So, that was my 9/11 story. I know that there was probably a lot more that I could detail, but I hit the bigger aspects of what was done. But the big thing was just being on that trading floor when 5,000 people at once. It's sort of like the Star Wars, when Ben Kenobi says, I heard, a million screams at once. But that's what happened. It second plane hit, and people are like, WTF? What was that now? But I can imagine, when Pearl Harbor, well, obviously Pearl Harbor, they didn't have jumbotrons, but when news hit, the attack of Pearl Harbor, I was going to say the attack of Pearl Bailey, attack of Pearl Harbor. But that's something too that brought a country together, and it's sad that it has to be something as drastic as that. That's just too bad. Let's see here, Hebrews. I can't imagine watching that thing with 5,000 people. There was a big confusion. Like, what the hell was that? And Patricia says, I wish the U.S. could come back together like that, but do not want it to happen with a disaster such like that. I know. And, one of the things I think Reagan said is if we want this world to be one, we need an alien invasion. So maybe that's in the cards coming up here soon, John.
You mentioned, Pearl Harbor. Was it 1942?
December 7th, 1941, a day that will live in infamy.
Okay. So you think about that. I was born in 1964. You were too, right? 65. You beat me by one. So right now there are adults that weren't around, that weren't alive yet when 9/11 happened. So it's almost similar to where you and I were with World War II. Okay, World War II ended in 1945. I was born in 1964. You were born in 1965.
Right.
Doesn't it seem, growing up, looking back at World War II, like that was ancient history, like it was forever ago, right?
Yeah. Oh, yeah. Probably because a lot of it's in black and white.
Well,
and then think about it. You made a very good point there. We're 20 years off that.
Right.
And what are we now with 9/11? We're 20 years
We were
off.
22 years off it, right? So now all these people that weren't around, I think that there's probably actually adults that don't even really know about it or understand it. And I think it's of ultimate importance, just like, keeping World War II in knowledge and understanding what happened there. We have to keep 9/11 in people's minds and remind them of the things that happened, and do every day what we can do to make sure that it doesn't
happen again. Yeah. And I tell you, it's one thing where I think one of our traders asked about the Ukraine war, and I said, we're not going to be political here. We're not going to be religious here. The main thing is that people are losing their lives, and that's a hard thing to fathom. With that, and you never want to see that, no matter who. And one thing too, I mean, our friends and family in Hawaii, our friends in Morocco right now, are taking big hits. And then, a thing like the tsunami that hit Japan, my God, what does it take to have peace and to bring us together as human beings? Trauma, disaster.
I can tell you.
Tell me, John, please.
It's when the power of love overtakes the love of power.
Oh, I like that one. Is that your own line?
No.
That's a good one, though. That's a good one.
Actually, I think that was Jimi Hendrix.
There you go.
Honestly. I think that's a quote from Jimi Hendrix.
Yeah, wow. Well, he knew it was kicking, man. He knew it was kicking. Jenner B said, I read the list of tenants at the World Trade Center. I would have thought there would be more financial services than what I read. So there was just a lot of people living in the World Trade Center. That's terrible.
Well, Cantor Fitzgerald was on the 99th floor. Cantor Fitzgerald was a big financial company, and I didn't know anybody personally there, but I knew a lot of guys on the trading floor that knew a lot of people in that office that day.
Yeah.
And they're all gone. They're lost.
Yeah, same here. I mean, it's traumatic. No Code Dad from Alaska said, I took the kids to combat that were born after 9/11. It was nuts. Yeah, it was nuts. Scoot Trader says, I remember being in 5th grade and not knowing what the trade centers were, and then watching everybody cry and not knowing what was going on.
Mm-hmm.
Yeah. I mean, it's really hard to explain to a 5th grader that what is being done and what has happened. And I don't know how soft can you explain to a child that your country is attacked. Jimmy Decker says, I was in 8th grade.
This is my daughter was born in 97. Her birthday is the same as mine, September 9th. So she was 4 years old when it happened. And within the next year or so, she brought home a picture she had drawn in school, and it looked like this. And it was towers.
Uh-huh. So they
4 years old.
Wow.
That's how it reached everybody. I mean, even 4 years old, those were towers to her.
Yeah. Well, I mean, it's an education. It's an experience. I mean, that's something that I'll never forget, because I mean, I was, me and Peter Jennings, I mean, he was, I sort of locked myself in my room and just sat there, and news after news after news after news, because I wanted to know what really happened. I want to know. It's tough. Jenner says there would be a lot of financial services. I just thought there would be more because the name World Trade. Yeah, me too. I thought so too. I didn't know that. Robert Harrison, I was at a customer's residence and they told me that the towers were bombed. I literally thought they were lying to me. I couldn't believe it. And you couldn't.
It was unbelievable.
That's,
right?
That's we thought, some guy in a Cessna, flew his plane in there because he was pissed off. Hope I got the right floors. But it was much bigger than that, Jason says, I'm Canadian. My wife and I went on a trip to visit the memorial site this past July. Heartbreaking to walk in there and what they've got going on there, with the water and so forth. And
very solemn area.
Very solemn. Yeah, very solemn. Paul Revere was very young when it happened. It's probably best, let's just hope it doesn't happen again anywhere. But, excuse me, as we know it, it's probably the farthest thing that we can keep from anybody coming on. We were going to have Brett coming on, but he got a little busy and had to cancel. So I apologize for that. Jack, are you available?
Am I available?
Are you available? You're married with John. Are you available? I got two tickets to Paradise. You were in high school, right?
I was a freshman in high school, so it would have been like the first couple weeks of school.
Okay. All right. I mean, how did they sort of present that to high school students? Do you remember?
I mean, pretty much the same way. They just wheeled in TVs at a certain point. There wasn't much else going on. I remember there was still, which was odd, they still had a football practice that day, which was kind of weird.
Yeah.
But those are sort of the big takeaways.
Okay. But being in high school, you can explain the situation. You can explain what actually happened, and who we're pointing the finger at. But, it was all hell bent after that, all after that. But a lot of people got, back to being very patriotic. And, like I said, it's just sad that it takes something like that to do that. So, but anyway, I appreciate those that participated. Some guy here said a coworker said someone flew a plane into the World Trade Center. I replied, don't think that's funny. I thought he was joking. We did too. We were like,
my father-in-law knocked on the door of our condo we were staying in, and he's like, you got to get up. You got to see this. A plane just flew into the World Trade Center. And I was like, yeah, right. And he says, no, honestly. So we turned on the TV and we saw it. And then we're like, oh my God. I mean, I think everybody thought the first one was an accident.
Yeah.
Just somebody messed up and hit one. And then you saw the second one hit. And I was like, oh my God, we're under attack. Try not to upset the kids too much, like, what do you do with them?
Right. Oh, yeah. Oh, yeah. Like we mentioned earlier, about a plane hitting the Empire State Building. Now, that was in 1945, and I thought it was a commercial plane. It was a B-25 Mitchell bomber. United States Air Force crashed into the north side of the Empire State Building in New York City. And the reason because of this was they were flying close to the city, and there was a very bad fog, a very thick fog that sort of penetrated the tops of the buildings. They couldn't see anything, so that accident killed 14 people. An estimated 24 were injured in 1945. So it happened years prior, but not a terrorist attack. That was the accident. Now, I know when we got back on the trading floor, there was a lot of suspicion about selling airline stock. Now I've checked this prior and I've checked it back today. But there was a single U.S.-based institutional investor with no conceivable ties to Al-Qaeda purchased 95% of UAL puts September 6th as part of the trading strategy that also included buying 115 shares of American on September 10th. Similarly, there was much of the seeming suspicious trading on September 10th when traced to a specific U.S.-based option trading newsletter faxed to its subscribers on Sunday, September 9th, which recommended these traders, the SEC and FBI, aided by other agencies and other security industry, devoted a lot of resources to investigating this issue. So there was a lot of people knew about it. Did they know about it? That's one of the things that we were going back to Pearl Harbor. It was said that Roosevelt knew this was going to happen, and now, truth or lies, this would bring America into war. They needed something. They needed a reason. They needed a reason to be involved in the war. And, what is said and what was done are two different things. But we may never know. We may never know. So, but anyway, yeah, remember those that are in dire need, trauma, and so forth. And whenever you can, help those. Because, we're talking earlier today about being very thankful for where we are and what we do have, because there are just so many people on this planet that would be happy of 1/10 of what we had. So be thankful.
Mm-hmm.
All right.
Trying to think of anything else.
No, I think that's going to be it. Bad tuna salad could be similar situation to cracking the Enigma machine. Found that on a submarine, right? Actually, you bring that up. Me and my dad would go to military conventions, and just cool stuff. Nothing, no gun hoarding or anything like that. And the guy in that submarine that went to pull the plug before they can get that machine out, I had actually met him, a German U-boat private, and it just out of history. Figured I'd add that in, but yeah, he was still alive. He's probably not alive now, but he'd tell the story. At that point in the war, he said, the Germans were basically out of steam. He goes, everybody on the sub was like, what are we going to do? If Americans come, just raise the white flag, and hopefully they don't kill us. They take us prisoner, and so forth. But there is a option on a submarine to sink it in case anything did happen. And he was the one that had that job. He said he didn't want to pull the plug because he'd be going down with the sub. So that's how we got that machine. Germans were out of gas. So figured I'd share that story. But anyway, Johnny, let's see here. You guys are going to be coming up here very shortly with Turn the Machines Back On, correct?
Mm-hmm. Yeah, we won't even have turned them off yet, but we'll turn them back on.
We'll fire them back up no matter what. So, yeah. A lot's going on here. So I really hope that you enjoyed being with us today. Still a little more to come. We're not done yet. And we're going to be back here tomorrow, 8 o'clock. And John and myself, each and every day this week. And John, I think, what was your number for likes? Wasn't it like 6 and a quarter?
Yeah, I think so.
Yeah, 809.
We killed it.
They killed it.
Yep.
They did. What was it? You got to wear a wig, right?
No, I'm supposed to spike my hair like
that's right.
70s. I don't know if it's like punk 70s or punk 80s or I don't know. There isn't all that much of it, so it shouldn't be too much of a lift.
I think maybe just like out, straight out.
Yeah.
It'd be fine. Yeah, but how you going to put the headset on? Yeah, you don't have a headset.
Yeah, I don't wear a headset.
You don't wear a headset. Yeah.
Yeah, Rod Stewart. There you go. Ron Wood. There you go.
Rod Stewart. He's still around. Yeah, Rod Stewart. Ron Wood's still around.
Mm-hmm.
See, the thing is, though, Rod Stewart's a vampire. Because he still looks like he's about maybe 50, 60 years old. I don't think he's changed.
I mean, we'll look at Willie Nelson.
A pot smoking vampire.
Yeah. Must be good for you.
I was reading an interview with Snoop Dogg. I don't know what he was doing with Willie Nelson, but they were together at some sort of benefit or something. And he said that Willie nearly smoked him under the table. He goes, no way. No way does this old guy want to smoke more. But can you imagine being in a room with the Snoop and Willie Nelson?
There's songs written about never smoking weed with Willie again.
That's probably good.
Toby Keith wrote it. Never smoking weed with Willie again.
Yeah. Oh, I tell you. Oh, something.
And what about Keith Richards? Keith Richards is pretty much embalmed by now, isn't he?
I think embalmed. I mean, but he looks like 200 years old.
Yeah, he does.
I mean, he must have like a deal with the devil somewhere.
He's quite the life.
But it's God bless. Live as you can. I had my great grandmother lived to be 93. My grandmother lived to be 92. And at that age, I know my grandmother was like, I don't want to live anymore. This is terrible. This is terrible. And I was in high school and she's telling me to get her the black pill.
Oh.
And he give me the black, what's the black pill? I don't know. It's something. It's something. I go, Grandma, get you the black pill. I'll get in trouble. Whatever it is. I had no idea what it was, but she was at a point where she just, she wanted to throw the towel in. And, but I think you get to that point, things could get tough.
Ready to go meet Jesus.
Yeah. Go meet somebody. That's right. Bad Tuna Salad says, working at a stagehand in St. Louis, I got to smoke with Rob Zombie.
Huh.
Ooh, Rob Zombie.
That's cool.
I dig Rob. I dig White Zombie. That was a good band. Yeah, I jam that stuff. Turn it up loud. Super Abound says Keith Richards on his 350th full body blood transfusion. Maybe that's the kicker.
I believe that's probably pretty close to right.
Yeah, like my wife says, when the good Lord wants you, he'll take you. Patricia says my grandpa just passed a couple months ago at 98. He still walked a mile a day? Really?
God bless him.
Wow.
That's a long, healthy life.
Yeah. God, 98. He's resting in peace now. That God bless.
Mm-hmm.
Yeah. Oh boy. Okay. Let's see. What's this? More Human Than Human. That's a good tune. Zombie. All right. Well, we've got about 10 minutes, and we're going to turn the machines back on, even though they're still on. And we'll have Jack and the Hoag finalizing the day. So today, you basically scratched today, right?
Yeah, I just took 2 little trades. That was it.
Yeah, second best trade. Second best trade. So,
yep.
I didn't get a chance to trade at all. I was just a little too busy. I loved your 88 level. That was a really good level to watch.
That's that level, that weekly kickoff level was set 3 weeks ago.
Yeah, and it was a really good level. And it's not just today. It's been holding pretty nicely. But it was a good target to watch. I think we traded it, ran through it a little bit, and the seller said, nuh-uh, we're going back to settlement. And that's exactly what they did.
Yeah.
But, that's
I need a few minutes just to get ready for the the reflection.
All right, we're going to do that. And Jackie, you with us?
I'm always not far away.
He's not far away, like a nosy neighbor.
He's always watching.
All right.
So we'll take a 10-minute break or something?
We're going to do 10? Yeah, take a 10, put some music on. Remember, I'd like to thank everybody for sticking around here for this. Stay around for Jack and Hoag, and have yourself a great day. It was an honor to be on the radio for you guys. So take care. Have a great evening. Be safe. Stay healthy. And I will talk to you tomorrow.
Thank you, Eddie.
All right.
Let's go do this.
All right. Welcome, everybody, to the end of the day reflection. We like to call it turn out those machines back on, if I could say that correctly.
It is clever.
Good afternoon, Jack. How are you?
I'm doing fine, Hoag. How are you doing?
Yeah, I'm good. I'm good. It's a pleasure to see your smiling face for a change.
Always got to be smiling. I also realized I just went to change a shirt, and the pattern's probably a little too intense for this background, but I apologize for your eyes in advance.
Well, it doesn't look too bad. I mean, it does not freaking mine out, so
good.
And that's good. There's one. You got that going for you.
Got a question already. Anyone know what time the equities futures options trading closes?
Yeah, same as the E-mini S&Ps.
Excellent. Also, apparently Tesla's going cray-cray today, says Super Abound.
Let's take a quick look at that. Stock screener. Pre-market market change. No, we're going not extended hours. We're going regular hours, performance. Overview. Let's just bring it up. TSLA. There it is. 10% higher.
Yeah, a lot of those high multiple stocks are having big days.
Wow. And here we are hanging around.
Yeah, not buying Tesla. You know what we say is like the worst thing you can do is to make money on your first trade. It wasn't my first trade, but my foray into I made money the first time I shorted Tesla.
Nice.
Don't ask about the second time.
Yeah, probably didn't go as well, huh?
It didn't go as well.
Yikes. All right. Well, just kind of thinking about what we were looking at this morning and what we're looking at in these markets. As far as the equity is concerned, I mean, our real goal this morning was to let the market set some sort of structure along the lows to look for an opportunity to buy it. We did actually end up doing so. I want to start here with the daily, Jack.
Okay.
So, we're kind of in the middle of last week's range. We're in the middle of the weekly kickoff levels. Looking at the 30-minute chart this morning, we said, we've got some overnight inventory that's holding a little bit long. I like the long side in it, actually, even though it's rollover, right? We all know it's rollover. We're in the December contract today. That's where the volume is. We have quadruple witching on Friday, and the markets are always a little bit wonky during rollover. We talked a little bit about that earlier as well. So we had the opening range at the high of the day, which initially left the market at the low, left the opening range at the low of the day. But as soon as that fell, we made our money back on the long above that. And then that's pretty much all I did today. We've been so busy doing stuff that haven't had a lot of opportunity to continue to trade in this account or my personal account. So what we were looking for, and even during the fast markets segment, we were looking for acceptance inside Friday's value for a push down to value low. We never did really find acceptance in the S&Ps. Not one 30-minute bar closed below that level, though 1, 2, 3, 4 30-minute periods traded down into it and rejected. So when we start to look at, the short time frame level that would have been probably closest to the opportunity to look for a long was this value area high from Friday, because it never did re-accept in that down at that level. So we ended up returning to the opening range, and that's pretty much where the market is likely to close here. We've got maybe 20 minutes left of the day. We'll see how the day finishes here, but we do have some negative delta. So that negative delta up near the highs here indicates potentially some buyers in this market, and not just shorter time frame, maybe a little longer time frame markets. But tomorrow morning, as usual, during rollover, we're not going to be able to put much weight into what the open interest did today as far as any new positioning in the front month here. So again, another reason I'm very cautious to trade during rollover.
Also, tomorrow is the day before the CPI report. The August CPI will be coming out on Wednesday. That's sort of your big number for the week. And once we pass that, Hoag mentioned the quad witching. We're getting to quarter's end. There's a lot of interesting things that happen around quarter's end as institutions, companies kind of balance their sheets, close out things, and the options expire, the quarterly options. I mentioned the Max Payne site on Friday. As we get into Friday this week, pay attention to those big round numbers that might signal or might represent the most pain inflicted on people with options expiring.
And that is what markets do, is they inflict as much pain on as many as possible.
It's a beautiful thing.
Yeah. unless you're in pain, right?
Yeah. Then it's not so great.
Then it's not so fun. Now, look at the difference in the NASDAQ today. Remember, we got to go to the D's contract. So we had a much deeper potential acceptance inside value from Friday. We had 1, 2, almost 3 bars, 30-minute bars closed below it. But where we found our support level in the NASDAQ was the volume point of control from Friday is where the market really ran out of sellers. We've got some excess in these bars down here. We actually took out the high of the regular trading hour session range in the NASDAQ, which we have not done yet in the S&Ps, and we're seeing the market continue this move to the upside.
Something to remember with the NASDAQ, especially, is the concentration. We mentioned earlier that Tesla was up 10% today. Well, unlike the S&P 500, the NASDAQ 100 is just highly, I know they've made some changes to that, but the weight of Tesla is still 3.7%. Basically, so of the move today, 0.3% of the move was due to Tesla.
Tesla.
Yeah,
well, you gotta love it, right? So the potential for the downside move was greater with the acceptance of value inside Friday's value, but it certainly got dug out of the hole here, and probably a lot of that because of Tesla. So our kind of main hypothesis this morning was to let the overnight inventory adjust itself, which it didn't get back down to settlement, but there was an inventory adjustment. Consolidation also does a good job of reconciling overnight inventory. The longer we sit here, the fewer overnight longs are going to sit into those positions, and then the market ended up resolving to the upside, which was kind of our main expectation. There was the potential for value area special situation play, but it never really came to fruition in the S&Ps, which is the broadest of the indices. Take a look at crude now. CL. Another look at weekly kickoff high. Overnight inventory was a little bit short, but probably largely reconciled due to the consolidation down here. We got another look at weekly kickoff high. Sellers took over again up here and pushed price back lower. So now we've got I think we've got a lower settlement now than Friday. Last week's high, weekly kickoff high. Boy, oh boy. If I was trading crude, I should be just knocking it out of the park here. Maybe I should be trading crude.
That would be the logical follow-up question there.
Yeah, right. Well, if that's that good, until I trade it, and then it'll probably go through it.
Did you take crude trades on Make Hoag Money back in the day?
No, we pretty much just stuck to the S&Ps. Yeah,
that's a good market.
Just the S&Ps. We had a lot of suggestions. Hey, let's trade gold. Let's trade CL. I'm like, let's just start with this. See how it goes, right?
Yeah.
GC. Speaking of gold. So really just continuing to compress, to coil. Another look at last week's low / last week's weekly kickoff low. Range bound activity. 4 days now. 3 really inside the range from last Wednesday. Just kind of holding on down here. There's going to be some opportunity coming down the pipe here in gold. I gotta remember to keep at least one chart up there so I can watch this and see if we have an opportunity at or near these trend lines. Take a look at the 30 here briefly, Jack.
Yes.
And so it is just it's continuing to follow suit. There is such a pattern. Look, it opened, rallied, broke, sat. Opened, rallied, broke, sat. Opened, attempted to rally, broke, sat. Opened, rallied, broke, sat. Opened, rallied, broke, sat.
Absent something
rallied, broke, sat. It's just every day. It seems like that's what it's doing.
I was going to say, absent something crazy happening tomorrow, it's kind of chopping around, waiting for CPI.
100%. Yeah, you got to keep an eye on the dollar, of course, but I don't think the dollar did much today either. Still 104.5. What was it this morning? 104.6. So I mean, we're not really moving the dollar that much. It's a little lower today, but yeah. All right. Well, we got tomorrow too.
That we do. We'll be back tomorrow, 8 a.m., bright and early, Hoag. You'll be up doing your research?
Oh, yes. Yep, I will be kind of looking at things this evening for a little while, and then 6 o'clock in the morning, I'll be sitting right here going, pork bellies.
That's going in deep, Hoag.
Yeah, right. Somebody remembers.
Yeah. So somebody asked, hey guys, what's the gold ticker for Topstep? I don't trade gold. What's the
GC?
Months? Yeah, GC, but I don't know if they're asking what the month is. I would have to go look at the volume.
Yeah, you should be trading December CZ, GCZ3. I hope that's the right answer to that question.
I hope it is too. Is gold the one? Some of the products have kind of wacky months, and I thought it was
Contract
maybe the metals. Yeah.
Gold has a couple of. I mean, it's not a nice term, but they call them bastard months that don't get traded much.
Sure.
Yes, it's COMEX gold. Yeah, so we've been in December for probably a month, and we will be in December for a couple of more months. It's one of the things I like about gold is there's not a lot of rollovers, and so you can kind of count on some of your open interest studies and volume and delta studies a little bit more than you would with, like, let's say crude oil, which rolls every month, and there's contract months for 10 years.
Mm-hmm.
So it's very difficult to kind of use open interest to kind of determine positioning in longer time frames.
Yeah. Well, anything else you want to discuss, Hoag? Tapered off with any questions here.
No, just say a prayer for everybody affected by 9/11, and that's all of us. So say a prayer for all of us, and we'll see you in the morning. Jack, always a pleasure.
Always a pleasure, everyone. Well, we won't bring out the director's clipboard today for you, Hoag, but hope you stop by tomorrow. 8 a.m. we'll be starting. Live trading starting at 8:30. We'll take that to 10:30 or 11, and then we'll do Squawk Radio in the afternoon. So thank you, everyone, so much. Dr. VJ, No Code Dad, Dan Trader, Brody, Douglas, Yurak. Thanks so much for joining us. Hoag, you want to give our breath, and we'll
end
the stream for the day?
It's the end of the day. We start the day with a deep breath. Let's end it with one. Humble, grateful, creative, and what was the other one? Humble, grateful, creative. I don't know. I'm tired.
Yeah, I feel like we've just run out of steam today. I think that
it's a long day.
Yeah. So thanks again. We'll see you tomorrow.